Gang, gang, gang. The folks come and get you, you gon' tell on the.
Oh my god, why was that playing? What's up, guys? Good morning. How's everybody doing today? Yo, desktop audio should have been. Oh, that's because of the pods. That's because of the pods. What's up, man? How's everybody doing today? Alright, I gotta get right into it for two reasons. Number one, because I don't have much other than the overall markets. I was running around trying to do a couple things. We have here some earnings from Verizon. Let's cover the news real quick, and I'm gonna go get my levels. If you guys, if we, for some way, somehow, if we can get up to like 10, like 5 to 10 likes, depending on how many people are on here, we're throwing out the plays. If you don't know, we trade live every day. Friday morning, my biggest play. My top idea, we got short. I got short Nvidia. I also got long. So I mentioned Friday that with SMCI, the implied volatility on Nvidia and the way that it was moving, you know, these type of things only happen, or you only know these things if you have enough time in the markets, and if you're an options trader for a while, then you'll be able to recognize when the perfect storm happens, because what you have is the market not expecting Nvidia to do much of a move at all. And I mentioned that the past couple Fridays, Tesla and Nvidia, they've just been parking it sideways. So be careful. But we got news with, what we get news with? Y'all know. We got news with SMCI. All right. So 50-day moving average, Nvidia, and stated you could probably, I said the way that these are priced, you could buy both ways, very cheap, very small, and still have both positions paid for, or let it give you the direction, and then let it give you the direction, and then take the other one off if you so choose to. Small position size, great opportunity. I'm not sure if anybody on here had seen somebody turned 1,000 into 100K on Friday, and I'm kind of curious if they were. I doubt it. But I am kind of curious if they were watching this stream, because you really had to know what it was that you're doing and understand that the catalyst for SMCI being also one of the leaders with NVIDIA, one of the leaders, that enabled NVIDIA to go down as much as it did. And the market did not price that in. And even here, I almost went on at YouTube on the bottom left of the screen. You can see right here a perfect bear flag, VWAP, trade line cross, right on down. I almost called that out again for you guys. I stopped the stream a little early. I was frustrated because I messed this trade up kind of early. I didn't mess it up because I took profit, but I was a little impatient. There, you know, there was nobody in chat. So it's like, I don't have anybody to ask, hey, you know, how should I manage this? You know, me, obviously my stop would have been up past that, up past 850, if you guys can see that. 850, why 850? Because there's that gap fill there from Friday into Thursday. 849.75, so I would have probably said 850 or so, and that was pre-market highs. You know, maybe giving it a little bit of room, but it was a perfect play. And if you were here Friday morning, you could have gotten short Nvidia right with us. All right, so do us a big one. Hit the like button. Subscribe if you haven't already done so. If you can, throw a donation. It goes to the stream. It does not go to me. It goes to the stream. I don't need your money. All right, what I need is for some people to appreciate or want to learn how to do this and ask questions and all that stuff. Let's get right into it though, because I need to make some money this week. I was a little upset with myself on the way that I managed last week. I did play Meta, which we do have some news with Meta. And it's weird that it's oddly enough not on here. So let's go look at Meta. But Tesla, let me make sure that this is all up to date and everything. So last week, I was really, I was forcing a trade, I guess, as you could say. And also on top of that, secondly, I made some really, like the past 2 weeks, the analysis has been spot on to a T. And I did really good for myself 2 weeks in a row. And I put a lot of pressure on myself, especially last Friday. with Nvidia that you know, I traded when I didn't need to. You know, I was green and then red. I had overall a red week last week, and I gave Mech more than I should have with last week because I you know, I say you earn the right to take the risk, but it has to be to an exception. It has to be to an exception because you need to be able to still, no matter what, make money. You have a number, your job is to make that number bigger, and you have to get your equity curve up. All right, that is our job here. So, sorry about that. But anyway, let's get right into it. All right, so this is from 422. All right, so you have Tesla down 3.5%. The manufacturer announced fresh price cuts in several key markets, including China, Germany, blah, blah, blah. Okay. Risking the fresh electric vehicle price war. Li Auto fell 7.5% after the EV maker also cut prices. Apple rose 0.5%. Morgan Stanley urged investors to buy post-earnings weakness, and iPhone makers saying they expect guidance for June's quarter revenue and an implied EPS that will be 4 to 7% below Wall Street's expectations. Verizon stock rose 1.4% after telecom giant on Monday said it's lost fewer than expected wireless subscribers. Come on. In the first quarter, thanks to its flexible plans and streaming bundles offering discounted pricing. All right, CRM. They, I guess, took back that buyout of Informatica. They rose on that news 3.3% after they backed away to acquire the data management software company. Or maybe they should have just came back and said, we would like to buy you, but not at the price that we were going to. That might have also, you know, it's hard to say. Because a good deal's got to be a good deal, right? And I think that I feel like they would have gotten, you know, they would have gotten, I don't know. Either way, they're up 3%. Cardinal Health fell 2% after the healthcare company said the contracts with pharmacy benefits manager Optum Rx will not be renewed when they expire at the end of June, and will not be renewed, even though it restated that twice. C&H fell 4.5% after architectural machinery manufacturer announced the departure of CEO Scott Wine, appointing Garrett Marks to run the company. So if the stock is down off of that news, that means that, excuse me, I'm sorry, Garrett Marks has not yet proven himself to the street with a former company. Because if he has, or he has bad experience, right? It's one of the two. Either they don't really know him, or, you know, they can't forecast what he will do and not do, or he may have had some mishaps with some other companies in the past. Hard to say. Also, could just be taking profit from the person that retired and some others and just taking some profits. Hard to say. All right, earnings. Zion Bank this morning, Verizon. Let's go with that really quickly. Again, guys, hit that like button if you could. I know you can. I know you can. What are you watching today? What charts do you guys want to cover? Throw it in the chat. If you noticed last week, we will start with this. And I'll give you guys the indexes that I'm looking for. IWM closed green Monday. Or Friday. Okay? IWM closed green. Alright? The Dow closed green. Really nice support level there. Looking like a little bear flag, kind of. We shall see. You have the 100-day moving average that looks like you're putting in a double top right there. Right? Looks like you have the 100-day moving average. Trying to put in a top there. A double top there at 381. And you're still up there right now. Actually, you're above it. You're at like 381.75 right now. So, the Dow and the IWM were green. Obviously, clear weakness in technology with semiconductors getting blasted off of the news with SMCI. And I would not be surprised if, you know, you had a lot of other semiconductors come out and not do so hot. All right, we thought ASML would do okay because Taiwan Semiconductors had said that they expect to have better than expected earnings. So ASML should have benefited from that, but I guess ASML is subjected to other companies that don't, that aren't maybe used so hot. Maybe like Texas Instruments or something. I don't know, but I do know TSM. ASML allows TSM to make the processors that they make. All right, so markets QQQ. All right, I wrote this down. Will 416 hold? That's the first look. Why is this not saving? Already. Why is this not saving? All right, let me do this one more time. Keep price zoom in. All right, so 416. That's the first level I'm going to watch for. And then I will watch for Friday's low. All right, I'm going to watch, see what the Dow is doing, which we can do right now. Is it making new highs pre-market? It is. So that tells us what? We want to look for Dow names today to be long. Or, yes, to be long. Or, what's the IWM doing? Okay. IWM, kind of taking it back. See if the Dow follows that. Right? See if the Dow starts to roll itself over here. You'll get, again, what I'm saying is the IWM might be, they're in the same time right now at 9 o'clock. Yes, but let's just say one of them is ahead by 15 minutes in price action. So we will look to see if the Dow does try to roll itself over back to the 100-day. Look for the 100-day, which also you can look for that pivot high to be support. And look for a pullback long off a 381 area. Yeah, 380, 370, yeah, 380 to 381. I would look for a long on the Dow. All right, 381 to 380. Yes, this whole area. So I'll put a box there just so I know this whole area right there. It's okay. I'll see it. I have the lines there. All right, 381. I'll actually put a dotted line for, I'll write it down. How about that? Make it a lot easier on myself. DIA. So we'll look for 381, 380 hold. Okay, but we would also want to look for the IWM to see if the IWM does in fact hold. All right, so the Dow put in a nice base here. You did reject it. Now you're above the 100-day moving average. So what are some names we could look at? What are some names we could look at? You could look at Home Depot. You could look at, we've been watching Goldman Sachs. Here, we've been watching Goldman Sachs. I've actually been trying to wait for a pullback to like 390, like 400. We have not yet gotten it. You are putting in some nice price action there at 402. Some support there. Right now you're at 405, 406.29. Damn, that's a big spread there. Dude, why is none of this saving? That's what I want to know. So, top end of the range is going to be 415 if we do have some upside. I will say that. All right, I will say that. Goldman Sachs, maybe you could look for a swing trade on that. 415, 414. All right, if you have upside, don't front run the move and think that, you know, the Dow is going to be the play. Let me make sure everything is good. Can you guys hear me and everything? Let's see here. Let me make sure everything is Gucci. All right, sound. Bada bing, bada boom. Cool, cool, cool. All right. All right, sorry about that. I just wanted to make sure everything was good. I got my charger before this market opens up. So, last Friday, let's get right into it. Last Friday, Mara, Riot, they were all green during the day and then ended up going green. You know, this pretty much would be the analysis, would be watching the Dow for you know, Goldman Sachs playing the Dow, you know, playing Goldman Sachs off of the Dow. So you have your 20-day moving average there. All right, you have the 20-day moving average here. All right, and what I would watch for is this nice support level that could start to be put in here. All right, up at 407. So if we can get above 407 and hold, we could look for that test up to, and this looks like a really nice setup, in my opinion. I would look for that pullback into the 20-day at 407 and look for that 407 to hold. You know, there's not much pre-market action on Goldman Sachs, so obviously you're going to want to watch the Dow, but you also want to watch capital markets. Okay, not just banks. That you can watch that. Not like Visa, JP Morgan, Citi, Wells Fargo. You want to watch names like you want to look at capital markets, okay, and see how that sector's doing. Naturally, so you could get an outperformance from like banks or regional banks over like insurance and capital markets, or you could get an overperformance, as in goes up higher and faster than banks and regionals with, speaking to insurance and capital markets. So just watch the bottom left of FinViz on the heat map. All right, that's what I'm going to be watching for. It's an idea to make some money. All right, Dow holds and the IWM holds. Hey, we have a really nice daily setup here on the 20-day moving average. Boom, boom, boom. Resistance. We're now above it. Look for the pullback into that level. Look for like Thursday's close, and Friday's open. That 20-day at 406, 407. What is that? 405.50 as a matter of fact. Hold on. Yeah, I'm going to look for 407, guys, on the 20-day moving average. What I would say to you is, I'm going to give you the exact trade and where the stop would be and the target. All right, the target's obviously 414. If we get a pullback, I would look for a pullback and get long at that 20-day moving average, this high here. All right, this high right here at 407.50, 407. And where would my stop loss be? It's kind of tough because you could pull back down in here and still get support at 402.50. So, the risk to reward has to be worth it. So we're looking for $7 worth of upside. I would let it pull back and see if it holds and how it reacts. And then I would look for anything below 404.45 would be your stop. Like anything below Friday's close or Friday's low, then you got to think about getting out, all right? This would be your stop, in my opinion. It would be down here at like, it would be just below like 402, what is that, 402.95, 402.95 is where I would put that stop. That would be my stop on the long. Because you could pull back and test this level here, Friday's close, and still have a nice bullish trend on your hand. It's just, is the risk to reward worth it? And in this case, I think it is. Because you have room, nothing stopping you to get up to 414. We're at 407. That's $7 worth of upside. Versus what? 654 if you got in at the 20-day. See, the 20-day is at 406. So let it pull back. See if the Dow pulls back. If it doesn't, we're going to have to wait. I'm going to be patient. This brings me to my point. I'm going to be patient this week because of what I did to myself last week. And that was just making really good money for a few weeks in a row, being spot on and confident zooming and just throwing on risk just to trade. And that's not what we do here. All right, that's not what I'm here to do. I would actually wait for a pullback to 404.50. I would. See if you can get that pullback into 404.50. Slash the 20-day. See if we can't get long here at 406 at the 20-day. All right, that's Goldman Sachs. So let me see here. Let me go here. Damn, this might actually be not no good. No bueno. I will be honest. Because we're above this. If you get a pop right off the bell, I might actually end up shorting this thing. I might. I don't know yet. I just think it's funny. Yeah, I don't see why we can't take Goldman Sachs to. I have way too many lines here. What is that? 413, 414? Yeah, 413. Right here to this area. This is what I'm gonna do. Nice cup handle. Let's see, what is that? 414, and then we'll take it right to. That's 412.50.
They're hideous, and they need to show that they think their stocks are cheap. Now, GM's done a better job because it's got that monster buyback. But
what are your guys' thoughts on this? Let me know down below. What are your guys' thoughts on this?
That it's doing poorly. Remember, they have ICE.
You have a nice trend line there.
Hybrid. They have the F-150.
Let's see.
Like
Boop,
F-150.
boop,
The Lightning.
boop, boop.
And their core legacy business is 90%
There's your trend.
Well, I mean, it's a pretty good business. As long as you can get people to buy.
Right.
Look, I happen to think that Ford is the cheap. My chat was also knows it is. Has it been a disappointment? I don't know. Is nothing a disappointment these days? Have you seen, Carl, the percentage increases of a lot of the Texas here? They're like one. I mean, you could be doing better in the 2-year. And the 2-year, Dave, the 2-year's got a high multiple.
Yeah, guys. So, like I said, it's going to take me a minute to do it. I didn't get much done today, so I'm going to be working on my analysis today. And it's already 9:10. So that's an idea. I may actually just take this. I may take this a pop up to 410. A pop up to 410. I may look for that downside. We'll have to see. I might just stay where there's news. The rejection level isn't really up until 412.75, like 413, 414.
once again on auctions the way we were not that long ago, but
Like 1996? Well,
there is this concern.
I'm gonna
overall
do
that
this.
We'll know that at some point we may hit some sort of an air pocket given the overall concerns about 34 trillion or more in
Informatica also
overall
providing some
debt,
guidance.
this cost for the budget.
See if we can't get a rejection up there. We'll see. This thing has some good volume, decent earnings. It was the only earnings that came in with a gap up, and it just simply pulled back, tested the 50-day, and then it's been on a rally. So I will look for that 407.50 to see if we can't take a long up to 414, 415. All right, that's just my opinion again. We'll see what happens there. Meta, Snapchat, okay. Again, I'm a little late on going through all of my stuff. So, Thursday we traded Meta, all right? Thursday, I gave you guys, Thursday, I gave you guys the 415, the test of 510. That was a nice 495, 500 to 510. That was a nice $10 move, guys. Beautiful $10 move there. And even look at the downside that you had. All right, see the downside you had? I will watch this level here. 485, 485. Let me see this real quick.
Global capabilities mean nothing without personal attention. We have investor relationships in 35 countries.
That could still be support there too. 482. We'll see. That's all I'm gonna say. We'll see. We'll see what happens here.
It's the shape of things to come. Discover the Bear Difference at beardifference.com.
All right. So Meta right now is at 489. Meta is at 489. So you have possible room up. You have a gap fill up here, okay? We have a gap fill up to 500, 501. No, we don't have a gap there. I do apologize. But a nice support level there Let me actually pull up a 15-minute chart real quick, just so I can see what exactly it is that we have here. This thing has just been sitting in a consolidation. 489, 480, and we're at 489. Let's see. All right. Yeah, 500. I think 500's the level, guys. I might actually delete these. I'll keep that. 510, 502, 503. I may even just do this here. You can see that level right there. Let's see. See, this thing is 500. Yeah, so I would look for a pullback on Meta. Come on now. Come on. Now, I guess you have to wait for this thing to pass the Senate, and I'm not sure if it will. It might. It may not, though. 490, we're above. No, we're at 490 right now as we speak. So be cautious. You're at 490 right now. Let's see here. Let me pull this down. Pull it back. Go over. Go up. 20-day. Dude, come on. No, I just want to click. There you go. Alright, so let's look at this daily chart. That's a breakdown. They're buying the dip. Yeah, let's see if we can get to the 20-day moving average, and it's already almost there. You know, 505, 510, that's the level. You know, I'm just going to say it now. I think that's the level we need to watch. Is 505, 510. If you're able to get a pullback at all to like 587.50, 585, then I would look for a long. All right. Again, I'm going to say that. What is this? 587.50. Yeah, I'm gonna do this right here. Dotted line.
The timeline is such that it doesn't take it away as a risk for the election, and it seems the U.S. government is so limited in so many ways when it comes to these election influence efforts.
The timeline of giving this can be a complicated transaction. To give it up to a full year, I think just from a business standpoint makes sense.
That Senate Intel Committee Chair Mark Warner yesterday on Face the Nation after the House did pass legislation over the weekend that could ban TikTok in the U.S. unless ByteDance sells its stake in the app within 9 months, possibly extended to a year. The bill now goes to the Senate. Jim?
One thing we want to take notice in is like Thursday, right? Look at this volume here on Thursday compared to Friday. It was okay during, you know, we had a lot of momentum and a clear rejection level up there. So, I would expect 495 to be the target, 495 to 500, okay? That's what I'm going to look for on Meta. It'll probably be a play of mine today, I'll be honest with you. Any pullbacks, I will try to get long and see if we can't take this thing up to 495, 500. Alright, that's my game plan there with old Medi. Medi, we should get that pullback very soon. Again, if you haven't hit the like button, I'm not sure what you're doing. If you have questions, throw them in the chat. Again, I started this channel to be able to help some people actually make some damn money and change some lives. Because there's a lot of people hurting out there. Alright, there's a lot of people hurting out there. And number two, a lot of people just continuously fail at this. Because they do stupid stuff like I did last week. Trading when there's not even a trade there. Right? Doing really good. Oh, I got a couple bucks. I can just trade the trade. Maybe it works out. Maybe it doesn't. That's not it. Protecting capital is number one. And we can't get comfortable and throw that out the window. We need to respect the money. Okay? Respect it. Because if you don't, someone else will. Again, I'm only speaking for myself because, you know, I did really well for myself and, you know, I was not trading the best of setups. At least I wasn't fighting the trend either, though. I think, you know, like I said, I think like Friday when I shorted Nvidia, I think my problem was is that I didn't have anybody to like speak to and talk to, and I was in my head with it. And a lot of trading can be difficult for that reason. You know, you don't have a perspective from someone else, things like that, where you're just like impatient, because you're trading by yourself. It's a lonely career. It really is. So, all right, Meta. I'm not sure if Snap's going to pass or not, but I will say this. Let's try to get this bounce into the 50-day moving average. See, 490. Did we already get there? We did. So you have a clear resistance zone here on the daily chart. You guys can see this flat top resistance right there. Oh my God. I can't believe I just did that. Look, Cole Cantonilla. Huh? Kramer brought up Trump. He said, if you want to do, like, talking about, like, if you want to badmouth him and stuff, and Cole Cantonilla looked at him like, what are you talking about? What do you mean? Don't play dumb, Cole. You know exactly what he mean. He was surprised. He was really just surprised right there that Kramer just said that. Anyway, 490. It's got to be a level that we look for. It just tapped it, okay? Just tapped it. I think you got to look for Friday's close, honestly. I think you got to try to get Friday's close, 480, 481, if it gives it to you, to try to get long Meta, if you're looking to get long. I'm not saying you are, but I probably will. I probably will try to do this with Meta. Again, I'm not going to force this thing, and it all depends on the market. Momentum, shoot, I forget. Hold on one second. So, if you guys want a nice MTUM, okay, so if you guys want a nice indicator, index, which has Meta, Nvidia, all the fun stuff, MTUM. All right, it's a momentum. Dude, why are these not saving? I don't understand.
That in fact,
well, then it's just a message.
You can't do
it's
it.
Just
though.
a message.
You can't convince anybody. There's always this belief based on the Chinese actions you were just talking about that they'll always find a way.
We can't punish them cybersecurity because they've gotten through every single method that we have. So maybe you punish them TikTok. I mean, you punish them on the Blackwell at NVIDIA. You punish them wherever you can, but we don't have a lot to punish them. We can boycott their stuff, but
I mean, this thing could get signed really soon, right, Carl?
Feels like it's almost all the way there.
Well, I'll tell you. Look, you want to know what to do? Buy Meta.
Buy Meta.
Don't outthink this. Buy Meta. Zuckerberg coming to town really for the Time 100?
Nice.
We don't know for certain.
You gonna corner him?
Of course. If he doesn't corner me first.
Exactly. We will get Kramer's Mad Dash and countdown to the opening bell. One more look here at the pre-market as a consequential week kicks off with the futures in the green. Don't go anywhere.
That's going to be my range right there, guys. Support down there at 480.75, 481. Friday's close. Look for a bounce. See if we can't try to get, like, in the next day or two, try to get a bounce to that 50-day moving average. This thing might just rip right off the gate, right out the gates, guys. Just so you're aware, this thing might just pump, like, right off the bell, ripping and roaring. So be ready. Be careful. Also, be patient if you need to. Wait for the best setups. Wait for the best setups. If you don't know what a best setup is, ask me what I think, and I'll help you out with that. Right? If you think you see something, I'll give you my opinion, and that's all it is an opinion. That you can take it for what it is, or you can just throw it in the trash. Alright, so yeah, we got some resistance up there, 485. Now it's looking clear. Now I can see clearly now the rain is gone. All right, man. I think we gotta try for 495. I think we do. I think as long as we can get up above, as long as Meta can get through 485, which we did. Meta. What is that? 485, 485, hold, 485, and what else are we looking for? 480, 485, 480, hold, long, and then I would like to get to the 50-day moving average. What is that? See, that's only a few dollars, but that's okay. See, Meta's ATR is $10, so it makes perfect sense, right, on why these would be the targets, which is adding up to like a $10 move, more or less. 490 target, 490 is the target, and maybe even 495. 490, 495 target. 495 target. Alright, yes, I don't have much. You can always play Snapchat as well. Alright, you might be better off playing Snapchat because there may not be that much IV baked into the trade. So think about that. That's how we got away with NVIDIA
Some
last
NASDAQ
week.
100 gainers. You'll see NVIDIA on the list
Friday.
coming off, as we
You could've
said,
been
the
there.
worst
You were here
day
with us.
since 2020.
You know, I even
Draw
said-
down now 22% off the
I said,
all-time
yo,
high.
you could probably, I said, not even probably, I said, the way it's looking, you can play both sides of this trade. Spend a little on both sides. It'll pay for them both and still give you profit. And that's exactly what happened. Or take it off once it gives you the direction. CRM I have not looked at. So again, my target's going to be try to be like 490 to 495 on Meta. All right, I'm looking for pullbacks, get the long, and look to try to get up to 490 and or the 50-day. 490 is a decent level there, so you just have to watch. You might not get to the 50-day. It's hard to say. You might not. Watch the markets. Watch QQQ. Watch if you want MTUM, which is a momentum like. Which are names that are like NVIDIA, Meta, Netflix, stuff like that. The S&P's 499, and you are putting in a flat top resistance up here. So see if we do pull back and hold 496 on the SPY, 496 and or Friday's close. All right. Right now, it looks like you aren't even at Thursday's close. So we haven't even got up to Thursday's close just yet. Kind of wondering if you're going to get a pop and then a drop. Look, exactly what it's doing. That's cool. I'm cool with it. All right, we got a few minutes here. We got 3 minutes, well, 2 minutes. If you guys have any questions, post them in the chat below. What is that? 282. 282. 282. CRM is actually a down name too, guys. So if you don't know that, now you do. Edit properties. Let's do this real quick. Let's do the old blue. Bang for the 100-day. And we'll see if we can get this to hold. Where is it? Yep, we're good there. 20-day is up at... Oh, so you have a nice gap fill here on 295. You have a nice gap fill. Look at CRM holding the 100-day. All right, look at it holding the 100-day up there. And then we'll look for... you could look for targets on this. We have a minute, 20 seconds. Look for like 294, 295. This gap fill up here. All right, it's like 294 is where it's at. Where it's at. Oh, yeah. Good luck this week. Again, if you have any questions, do not hesitate to ask. All right? We have one job. Remember that. We have one job. So CRM target is a gap fill. It's going to take a while, obviously. You could look for, at least a shot up to, you have a flat top resistance here up at like what is that, 289? So look for CRM target would be 289. All right, 289 target for CRM. I got to hurry up. CRM 289, CRM 289 target. Where would I get long? I would get long down at this 100-day moving average. See if this level holds right here at 280. All right, 280 right there. Bang. See what happens there. All right, if it doesn't, then look for it to reject and look for us to pull back, fill the gap. Good luck today. Let me know if you guys see relative strength, relative weakness, not just me, but everybody else that's in chat. What is that? That's a lot of volume. The candles are just making the same size candles, and they're just either in an upward or downward position with a lot of volume, momentum. All right, it's your best friend. It lets us know, hey, we can get on this trade. Let's see here. Rejection, support. That support might actually be right there. Oh, look. I'm going to put a dotted line there. Okay. Right there. It's getting froggy. It's getting froggy right there. Right at that dotted line right there. She getting froggy.
We did see the stock of Salesforce decline pretty dramatically early last week on reports that it was in talk to buy Informa.
All right, so again, take your time. Be patient. Damn, that actually looks like a good area too. It's 274, 275. Damn, that's wild.
The company announced that it is not currently engaged in any discussions to be
Okay.
acquired.
So
Salesforce is rebounding. There's part of the statement. They also came out, by the
they're
way,
talking about CRM on whatchamacallit now. So now you could look for the rejection on CRM.
very strong.
All right, you could
Discuss first quarter results on May 1st.
if you're good enough. No, I'm just playing. Nice little level right there. Yep, I would look for the bounce back to the 100-day up there at that level. Let's go see what old Medi's doing. Let's look at Medi. Medi. That looks like a bear flag. False breakdown. Pull back. Bang. Get long. Dude, we could have a long here on CRM. You might need to give it a minute. Wow. Look at this bear flag. If I draw this out for you, look at that. Boom. Boom. Failed breakdown. Or wait, no. It broke down. It pulls back. And then it really gets it on, actually. Ah, shit. Never mind. I take that back. You might get something like that today. Just kidding. Just kidding. This is a good name. I wish, I did not buy CRM years ago. And I'm upset with myself that I didn't. I feel like it got away from me. And it's just always getting away from me. So I do not own Salesforce, unfortunately. I really, really wish I did. I wish I did. There'll be another day. Let's look at Meta. What's the vid doing? So we said Meta 485, 480 hold. What else did we say? Goldman Sachs for the Dow. Yup. Look at that. 407 pullback. 20-day hold. So far, so good. I have the SPY over here. So if you guys have comments, I cannot see them just yet. Live chat, no comments so far. Yes, they are. And Coinbase was one of the ones I was watching. I told you guys, Friday. What happened Friday? Mara, Riot, right? All had a good day. That's half the reason the IWM, the IWM was up. So, okay, Coinbase. Let's see here. Because Coinbase is in a tough spot here, I feel like. Coinbase is stuck between support, double bottom, and it's like, which is kind of making it a decent resistance along with the 50-day. So I would just watch Bitcoin and see what Bitcoin's doing, obviously. You want to know what it's doing, but I feel like the miners, obviously, are going to separate themselves from a broker, right? A broker like Coinbase. This is a nice support level. We'll see if Coinbase can hold.
Yeah, now we'll present the same
So we look for his pullback.
Well, I do think that
Yeah, let's see what happens at 215.
remains the fact
See what happens at that 215 level
below 20, and so therefore can
on Coinbase.
in the same way that I find that there are industrials that have plus 20%, 20 EP,
All right, SPY pulling back here.
and then there's ones that have below 20 and they're higher.
SPY pulling back. If there's anybody here that is new, welcome. Thank you for joining us. Let me know where you're tuning in from. What are you watching today? How are you feeling? How was your weekend? And I wish you all the best of luck this week. Very sad that, it's just not sad, but it was just so upsetting that nobody was really with us Friday morning for that NVIDIA short. Again, was our top play Friday, and man, that was a rough one. That one really hurt because I had put so much pressure on myself to just kill it Friday that I kind of screwed that trade up. I made some money in the morning, gave a little back later on, and then it felt like it was going down the tunnel of revenge trading. And I'm like, let me just not. And listen, trading's good. You're going to have your ups and downs, guys. I'm telling you, you're going to have your ups and downs. You just have to just recognize it when you're in that and shut it down. You got to. Now, the thing with me was I was going low position size. Really low, because I knew that, man, if this thing really gets going, like, you don't need a lot. The volatility was not priced in, and there was a hell of a lot of volatility with the semiconductors. So either way, you know, a little bit would have made you a lot. You know, I mean, you could have turned $100 into $10,000. You could have. You could have turned 1,000 into 25, 30, 40, 50 grand. And it's not buying far out of the money puts. Far out of the money puts either. Sorry. Because we identified it early. All right, we identified the SMCI news. And we identified the options were not pricing in a decent move for NVIDIA. So the options were underpriced. And it wasn't until SMCI just continued and continued and continued. And let's look at AMD, because I felt like AMD separated itself Thursday. No, it didn't. It did not. So, yeah, let's see here. You get the markets to pull back. I'm not in anything just yet. Again, I'm just going to relax for a minute. I'm going to let things set up. I am watching Meta. I'm watching that 480, 485 level on Meta.
But when you talk about what the aim is of investing, I don't think you want to own that name over the last
Well, how about ACT? Is that similar? Do you think that's not as much of a bond? Maybe that's a jump bond.
At least they got some. At least the capex guide doesn't change over at Verizon.
No. And look, I think
You can see that dotted line is holding. If you guys have any questions, feel free to throw them in the chat. I would love to help you guys out. Hello, anything. Or don't. It's cool too. You know, I get it. You're working. Working hard. She work hard for the money. Oh, shit. She work hard for the money.
where they hook everything up.
Sorry, I'm still singing. If you can hear me.
Cisco doesn't even have a headquarters, really, but it's San Jose marginally. But I do. No, I'm just reading that.
She work hard for the money. All right, some big earnings this week. There is a ton, man. There's a ton, bro. I'm gonna post some of these earnings calls. That's some other things I'm gonna work on. There are some really big earnings. I'm kind of curious how all this stuff gets priced in because of, you know, this pullback that we've already had. It's like the markets have already made their mind up. All right, so look, banks are doing nicely. This is something we noticed Thursday gone into Friday, that banks are doing nice. Look at JP Morgan, guys. Bouncing right into the 50-day. Let's watch this here. It's got some relative strength. That's a nice little bear flag here on the 1 minute, or bull flag, whatever you want to call it. Watch out for the reversal. Watch out for the reversal, the failed hold. I would need it to pull back a little bit. Shoot. I don't know if JP Morgan has any upgrades, downgrades on it today or not. Update market chatter. Bank regulations make new push to curb Wall Street bonus pay. It's abandoned Wall Street. Nothing. I don't see anything. All right. Other than CRM and JP Morgan, they all have a gap up ahead of them. JP Morgan had good earnings, and they still sold off. And that was the other part that I was just getting into, was that, you know, the market's made up its mind. You're seeing a lot of CEOs sell. You're seeing them retire, right? We just talked about that this morning. And that's all it is, you know. So JP Morgan does have room to 189. If we can catch a pullback here, which we're getting now, just keep an eye on the Dow and those safety names and see if we can't try to get a nice little play here on JP Morgan. I feel like that's that was it right there. I know it. Damn it. JPM. Maybe I'll be patient. Let's be patient a little bit. It is a bit oversold. It does need to pull back just a little bit. So I'm not taking that right now, unless there's something I did not see. I feel like this could have some relative strength, guys. So let's just take notice for a few minutes what the SPY does. And if JP Morgan cannot break VWAP, let's see if it closes a 3-minute candle down in this area. This is something I did not do for NVIDIA and something I've done over time. I'm going to look for it to hold VWAP and hold this area. Now, if it just like closes right at or a little bit below VWAP, but I'm going to consider that a stay. But I'm talking like, does it close underneath here? That's a very nice hold. Watch your time in sales and orders. Sorry, I don't have time in sales up. Let's look here. Let's see. Our target, so you do have some, you have the 50-day as resistance, which is at 188, and then the real resistance level at 190. So you could look for like a, I would do the 175s. All right, I would do the 187.50s. I'm sorry, 187.50s. I might stay away from this for a little bit because I would much rather just wait for a pullback, if you know what I mean, and see if we can't get it down at like 184. All right, see if we can't get it down at 184. So, because right now what you have is JP Morgan pulling back. It's right back up to its earnings, right? It's right to the day after the earnings. And let's see if it gets up in there. If it can get up through there and get up through the 50-day, I think this thing needs to pull back. Doesn't mean it will. Look, it's going to go. Just feels like it's setting up really bullish. Setting up like right now it wants to just try to take off. I'm not looking at the markets either. I have not looked at it yet. Here, let me see right now. Yeah, see the SPY just broke down below, or it's right at pre-market lows. So let's see here. Let's see what happens. See what happens. Maybe it does just bounce right up to the 50-day. It's just, look at the volume. You're not getting, just yet at least, the volume is not conducive to a bullish play just yet. That doesn't mean things can't change and that volume can't come in out of nowhere. It's one thing I try not to get too crazy with, is over analyzing. Like if I could have one indicator, it would be volume. All right, it would be volume, but you just have to understand that just because like Coinbase or JP Morgan, like, yeah, right now the sentiment, you know, how many ways can you come up with it, like with an idea for the upside and or downside? Right now we're above this resistance level. We pull back, we're holding it. So I think I would like to see us I would like to see what happens here in the next couple minutes, because you're about to find out. We're about to find out if we're going to get a nice little shot up to that 50-day. It's not going to happen like that because it's JP Morgan. like right now is where you want to see an increase in volume. You're testing the initial morning high here at 186.79, right? It's holding VWAP. All right. It's just a little bit oversold, but we'll see. We'll see. I think, I just think on the daily chart, this is a nice setup for the long. It's really hard for me to take it right here. And I think others are thinking the same. I feel like others would like to have Thursday's close, 185.45, right? And Friday's close. All right. It feels like some, traders would much rather be long down there where it hits the stop losses and then try to get your 185.50 long. Let's see what happens there. See if we do test that level. Let's see what happens here too. See how the candles just dropped off and they're a little bit smaller on that 1 minute? This is when you want to see that break through and make a new high a day here. And it's kind of like holding back a little bit. It just feels like it's heavy. The volume isn't that great, obviously, because not too many people. Look, so here you go. You might start to get the market behind you. See what it does here. I'm not in this. I'm not in it. I'm just letting you guys know. If you guys want to take it, I think you have room up to 190 within the next, week or so. Let's go see what... So Goldman Sachs was actually on our list, and we said, let's look for financials. You had regionals today. You had Zion Bancorp report earnings. I'm not sure what Zion's doing. Zion, this regional bank, guys, is actually pretty liquid, especially if you trade options. Believe it or not, look at these spreads. They're actually pretty tight, or they used to be at least. 85, 95. Okay, so maybe not so much today, but they were a while ago, right? For a name that at least I have not even seen a Zion Bank, I don't think, in my area. They were, when the last time I traded Zion, it was pretty liquid. So let's just go look through the overall markets. Oh, snap. Yeah, look at that pullback off the Dow. Pull back right into that area. You have to see what happens if you do get a bounce. Dude. Oh, Nike's cutting jobs, they just said. Look at that increase in volume, too. That's wild. What I would look for is to see, you were above it. You could not hold it. Look for the bounce to VWAP. Have VWAP and the 100-day at all meet right there. And see if you do end up breaking that level. Again, we said it pre-market. Watch the IWM. The IWM was our leader Friday. And it has names like Mara, crypto, SMCI. It was crazy that SMCI sold off, which is in the Russell 2000, but yet it's still closed green Friday. It's still closed green, right? A lot of those crypto names like Mara and stuff, they had a really good day. Mara, Riot. I mentioned this Friday too. This was a play of ours. I said, watch this level at $15. Look at this. Bang. So, look at the volume today. That's a nice increase in volume, guys. I might actually try this. I might actually try to play this. Hold on. Let me not rush into this, but I think I might go for this. This is a resistance level here. This could turn sideways on you real quick, so don't just jump in it. I was looking for Bitcoin to pull back, I thought. Damn, this thing's got to get above 1750, guys. It's got to get above 1750, but even if it does, it's got that 20-day waiting for you right there just to smack you down. Let's just watch it. Let's watch. Look, yeah, now Riot's going off on the scanner, too. Kind of funny. Let's see which one has a better setup. Damn, dude, man, that'd be cool to get this Mara to 1950. Right? Get it back up to that 100-day moving average. What I'm going to do is I'm going to watch this 200-day moving average right here and see if I can't get a long down at like $16. That's what I'm going to look for on Mara. All right, $16. I'm looking for a long and or Friday's close. Okay? and/or Friday's close, because you could find yourself in a position where it just it doesn't quite get to the 200 day. So let me pull this back just a little bit more. Okay, let me edit this just so I know the color and what it's for. Let's just use that. Oh God, that hurts the eyes. Holy cow, that's bright. Holy cow, that's bright.
What makes a comfortable retirement? It's having the money to
All right.
retire.
Yeah, guys, I'm gonna wait for a pullback. I gotta change this. I gotta change it. Sorry. Let's go with something like this. All right, that's the 200 day. That's a little bit easier. Damn, that hurt. So you could have some resistance here on Mara. Look, oh shit, it's actually holding. It's not holding it just yet. It is. It's trying to. See if you get a pop right there. Nope, rejected. 1710. There it goes. It should start to give you some. It should start to like break down a little bit here. Let's see. It's holding on. Nah. Look at the volume. Get some buyers to step in there. Bang. 1,000, 5,000, 575, 2,000. Sellers are stepping up too, though, in size. 5,000 sell, 1,500 sell, 1,100 buy, 2,000 buy. Let's watch the bid ask. 17,023. Let's go look at Bitcoin real quick. Let's go touch in there again. Please hit the goddamn like button. Share this with someone that wants to learn how to trade and make some money. All right, there's a lot you can do watching someone else trade and see how they do it. Doesn't mean it's going to work for you, but I'm going to tell you right now. There's all different kinds of ways to make money, and that's our job, is to make that number bigger. We have one job, and that job is to make that number bigger. How are we going to do that? Let me know down in the chat. How are we going to do that? I'm really curious. Let's see here. All right, so it looks like Bitcoin could have some support down here. We really could. I think you get some nice support down here at 65,000, 679. Let's see if you get a bounce here out of Bitcoin. Let's see. Let's see here. Let's go to a 15-minute chart. 15-minute chart. You might need a pullback to Friday's close. I think that is, or some, I don't know when that is. You might need a pullback here, but I don't know, man. This could start to get, you know, yeah. Look for a pullback to 65. Look for the pullback to 65, I feel like. I think that's the safer play. I feel like a pullback to 65 is the safer play. Alright, it's just my opinion. I would actually probably play that. I might play that. I might play this rejection up here. Maybe you get another little pop real quick. And then you play the pullback. Hell, even to like, yeah, 64, 65. I would say 65. Or 64, I'm sorry. That's what I would say. 64. And I'm actually going to put a line there because I believe in that level so much. I think that's where we're going. There's a lot that we had this week. GDP, earnings, all right? Just a lot. There's more that I didn't say because I was drawing a line. Hard for me to do a few things at once, but... Small caps? I have not looked at small caps yet. What do we got for small caps? What's going right now? I just heard something on the scanner. So, Mara, there you go. Let's see here. Again, guys, I think you have room up to 1750, 1755, and then you have to be careful after that. Maybe you get to 18 in the 20-day. You know, that is our target, but I feel like it's already pulled back in the Friday's close, and that's where we wanted to be. All right. The target is the 100-day moving average in like 1990 or so. I just want to buy weakness. All right, I want to buy weakness. This might actually be a good setup right here. It's been in a nice uptrend. It's a nice hold. let's see here. We're gonna find out real soon. That should be a 38.2 fib also. It might be a 50. Nah, it should be right around the 32, right? Yeah, it's right around there. Say it's right around there in the 50. Yeah. See, that's why. See, sometimes you know, if you understand that stuff, you really don't need a Fibonacci. I mean, if you want to see the level to be exact, but you should have an idea. After, you know, all it is a measurement, and you know, why do people use Fibonacci's? Why? Like, what is the relevance of that? Well, it shows you weakness and strength. Is it just a pullback or is it a sell-off? Right? And you can grade that between the amount that it pulls back off of the move. Like, if you were to do this, right, from Friday's close, you pulled back over 78.6% of that gap up. You pretty much took that gap up back. You know what I'm saying? So in that sense, there is a lot of weakness there, and that is why VWAP and everything is not holding right now. It's breaking down on low volume. Because you would want to see the pullback sit up in this area for strength. You would have not wanted to break that level there. And listen, a pullback to Friday's close, that's all cool and all. Like, it's not a bad thing. I'm not disagreeing with that. But you really wanted to, like, have some strength, in which it did. It did not close below Friday's high. It was just, you know, an increase in volume. It was just a straight drop down. You know, it retraced majority of the whole move, which is okay. But, you know, I feel like this is why it's starting to break down now, guys. And you're starting to get an increase in volume. Because normally when you see something hold with relative strength on a gap up, it'll just like, it'll gap and go, right? It'll gap and go. Maybe it pulls back a little bit, but it sets itself up differently for where all of your indicators are. This was crazy, right? And then, listen, if it works for people, it works for people. I seen just randomly on YouTube. I didn't watch it really. I just seen it, and it was like one of the first things that he said, and it popped off. You don't need indicators. I said, oh shit. How do you know? But then how? Like, I get if you want to trade levels and stuff, but I'm watching this person. I'm like, bro, you're killing yourself right now. You have no. Where is your confidence to know what is going on underneath? Like, you can sit there and read price action, but he's not reading it because he's on his phone. He wasn't even looking at his monitor and stuff. He was looking at parts for cars and shit. I'm like, Brody, like, it's all cool. Like, I'm not, you know, do your own thing. But I'm like, I just can't do that. I need to be able to feel this thing, right? I need to know what's going on. So, you know, levels, playing levels and this, that, the third are cool. But how do you have confidence? You don't just, like, cup it, like, not necessarily cup and handles, but, like, break and retest and stuff, right? How do you have the confidence? Oh, I'm just going to stop out right here. No, you should know that unless news comes out, that the stock is going to do what it's supposed to do what it's going to do. I still expect Mara to pull back here to 1671. I'm going to be honest. I still kind of expect that. I still expected to pull back to test this level back down here. Maybe it doesn't. You know, maybe it doesn't, and it's just relative strength here, where it just stays up at highs, and it could. But if it breaks this level right here, I'm going to know very soon. We're going to know, like, very soon, right now, what's going on with this thing. All right, you're going to find out very soon here, I feel like. Look at the volume that was starting to come in there, too. All right. And look, there you go. She's just pulling back decently now. Look, the herd might get on it. Let's see. Oh, 7,000 buy. That's a big one. That's a big one. That's what she said. So there you go. That's low volume though too. So just don't. I'm not taking away the fact that these names could go higher, because they could. I don't know. But anyway, back to the story. I was just saying that, like, you know, me personally, I want to be able to tell the story. You know what I'm saying? I want to have confidence that what I'm seeing is correct by using a few things, and that I can pretty much see what algorithms are going to do at what point. right? And if something changes, that means, you know, Mara sat up here way too long at 1723, and I'm going to start to expect a rejection, right? Maybe I'm saying things wrong, but, you know, not using volume, and if you're not using volume, I need to be glued to my screen, right? Like, I need to see it, like, pull back to 1580, bang, bounce off of it. Pull back to it, boom, just, like, rips back off of that level. Like, pulling into 1580, we'll say, or the 200-day moving average. If I don't have volume, I want to see this thing pull back here, boom. Pull back here, bang, and quickly get away from it. Quickly get away from it. With what? Look at the candle size, right? I also don't want to see an immediate retracement of that candle either. Right there. You know what I'm saying? You want to see relative strength and or weakness. All right? Along with your levels. And how the stock is reacting in real time at those levels if you're not going to use volume and other indicators. Because there's a story to be told. Like, algorithms don't just trade randomly. Oh, we're just going to buy here, sell here, not necessarily off levels. But there is a story if you dig deep. You know? If you dig deep enough, you'll find the story. It's a part of the, it's a section that I have in the book that will help you, like, not just read the markets, how, you know, you could have sensed, like, just such the weakness, especially Friday, in the overall markets, and how weak the SPY and everything was, because we had an increase in volume to the buy side, but we just could not hold or gain, we could not catch a bid. It could not grind higher at all. So, I do think Mara might be a short, guys. I'll be honest. I do. Not a big short, but a pullback short, right? Like a pullback to like pullback to $16. All right, let's see here. We got Baidu with some news here. I think. Let's see. That is some nice volume there. Watch 95.98. Let me see. Sorry, guys. I did not expect to be looking at this. I did want to watch names like Datadog and stuff because of the because of these wars and everything, and that they had a nice pullback. Let's see. Yeah, see if Baidu gets above this level and holds here. See if Baidu gets above 95, 98, 96. If you get above there and it holds, you got room to 97. Hell, I'd call it 98. All right. You might just be able to do it too, because it's coming off of a nice little pullback. Shit, I wanted the hourly chart. I'm sorry. Let it pull back real quick, and it might look for like 10:30 or so. I would look for a bounce. Like right now, what's the story? The story I'm seeing is a pullback off of this level, and then what time is it now? It's 10 o'clock, and I'm not saying this is going to happen, right? Because there could be news, but if there is no news, I would expect a pullback off the level, which it's doing right now, and then like maybe you grind up a little higher to the level more, poke up to like 96.02, pull back, right? Pull back to like, I don't know, 95.12 or so, and then you look for that long down at 95. Let's see if that happens. We'll go back to it at the end of the day. I would say like 9:30, 9:45 or so, and then look for like an end of the day type of, like lunchtime, end of the day type of rally. We'll see if this happens. See, look, poke its head up there, and then we'll see if it can't try to pull itself back down. Okay. That is Baidu. Baidu. Let's go back to Meta. Look at Meta. Whew. Again, today, I'm just taking my time, guys. I was really, I don't know. I put a lot of pressure on myself Friday, not and we put ourselves in the right place. Again, I say it all the time that the one thing that I'm good at is, for some reason, putting myself in the right place at the right time. NVIDIA was our top name. I mentioned that, like, I just identified that, like, we were barely moving and the options were ripping. And I'm like, guys, we could just buy this thing both ways. SMCI is pulling back. I said I expected, and it went even more. I said that I expected SMCI to pull back about 15%. I think it went damn near 25%. There's probably getting a bounce back today. That was probably a good buying opportunity down here for anybody that does not own SMCI. Look at that rejection there. Huge day Friday to the downside, man. Just a shame that, there's people out there that could have joined us Friday, man. It was just, because I feel like working together and having a group is really beneficial in the sense of, like, if you're doing something you shouldn't be doing, even just identifying different setups, and working together, because that's what they do on Prop Desk, guys. They work together. They have meetings in the morning on what setup, like with setups and news, how to take the news, what levels, blah blah blah, what their thoughts are for the overall markets during the day, stuff like that. So it really helps, and this profession is lonely. I don't personally know any other traders, like, around me, because I'm not outside interacting with other traders. There's not, like, and I think I might try that. Speaking of that, I've been thinking about renting out the Chase Center, and I looked it up, and it was a little pricey. I think they were trying to charge 20 grand, roughly. So I'm like, I'd have to do some more work into it. But I think, I know when I was looking it up, I think it was like 20 grand to rent it out. So it's like, how much do they fit? Blah, blah, blah. And, to maybe have something right around where I'm at. Just to draw people into the markets. Because there's a lot of people that are not invested and should be. Especially at a younger age. When you have the opportunity just to be able to buy the best companies in the world and just load them up throughout your life. You have to do a little bit of due diligence when it comes to earnings and understanding where a company is. And but if you always, for the most part, buy weakness, you've been rewarded, right? You've been rewarded buying weakness on the majority of names, right? On the majority of names. So Meta just pulling back. I'm not sure if this is a sign that the Senate will not pass it. I'm not sure. Or if it's just the overall weakness in the markets. We're doing a really good job today of just, this is exactly what we did Friday, before I even get ahead of myself. Friday, you notice, like, really early, it's just like we could not get above pre-market highs, and then we just, like, sold off the rest of the day. So take notice to that today, guys. Take notice oh my gosh, why did I do that? Take notice of the weakness. Can we get a little bit of upside, or do we get like a low volume pullback, or like Friday, like the volume was to the buy side, guys, and we still sold off? That's what I mean by we cannot catch the bid. We cannot hold a bid. The market, that's just like drastically weak, and recognizing that. And I feel like this is a lot weaker than 2022. At least in 2022, we were able to get some type of bounce back. Last week, you just sold off, stayed flat, sold off, stayed flat, sold off. Sorry, you sold off, stayed flat, sold off, sold off, sold off. Came in with the gap up, sold off. Like, that was last week. Like, that speaks volumes. And it's because you have a lot of CEOs that are retiring. You have a lot of people that have been rewarded for buying the dip, and they're taking profit. You have a lot of uncertainty on what's going on. The market's pretty much saying, hey, within the next 6 to 10 months, if we're still where we're at, we're going to start seeing signs of a recession. We'll start seeing some commercial real estate, energy prices are higher. That means earnings should start to come down because that's less money that the consumer has to spend because they're spending more on energy costs, which also brings up the price of everything else. So the consumer just gets hit and hit and hit, right? Even with, add on the top of that rates for anybody that has loans for whatever it is, and they are not, locked in at a decent price. So when the cost of living goes up, it's just common sense for the most part that unless you're not, providing yourself with extra income some way. And I feel like also the other part to this is why, a lot of people say that we've done pretty well. Well, honestly, I would agree, yes, but then I would also say in the same sense that, two factors with everything that's been going on is I don't think we've given the rate hikes enough time, because if you go back, it's at least a year and a half to a year. It's at least, what did we say, 12 to 16 months before you started to see the unemployment start to pick up, right? And that's exactly what we're seeing. We're getting to that point, and you're starting to, we are just now in the beginning stages of initial jobless claims starting to ramp up. So with that said, that is usually when you start to really get that uptick in unemployment. Once you get that the first few big upticks in unemployment, that's when the Fed starts to cut from everything that we've seen. And look, watch Meta. This is what I'm talking about with relative strength. You see how it just left this level here? Bang. It took out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 15 minutes worth of price action. So, and this is a nice setup here. I think I think you have room, and it already hit it, but I think you can get back to 487 and then look for a rejection up here at 487 with VWAP. See if we reject VWAP. See if you can get a bounce to VWAP and then you get a rejection there. I'm not sure how the market's going to perceive this. I really don't. We traded Meta last week, Thursday, on the long side. I almost traded it Friday, but I was watching NVIDIA. NVIDIA was my number one watch on Friday. But so we know from last week, trading it last week, we know that 500, 510, 495, that 50-day, these are the levels we're watching. And now we're back down into 480, 490. So let's start to see this week and pay attention, write them down, what levels start to hold and reject, right? It's just when you own a stock and if you watch your long term, which I wouldn't recommend, unless you're a person, unless you kind of have an idea of what you're doing, all right? But you'll notice that you'll start to learn price, right? When you have some of these names in your long-term portfolio and you own them and you're looking at them and you're seeing, okay, Moderna, Meta, right? It's going back up to that 510. Let me take some profit because we'll probably get a pullback off of 510. And then we go back to 485, we get a bounce down there. You'll learn the price action because you're seeing it every day. And you're seeing the areas where the buyers and sellers are and how it's been reacting. So, and again, sorry, I did not have the live chat up, but it's always good. It's always good to watch something for a little bit and then decide to trade it. Instead of just coming into it. I mean, you can, especially if there's news, but it's just really helpful to watch something for whether it's a week. Just have an eye on it and see the price action and then try to trade it, So here you go. What did we say, guys? We said 485 to 480. 485 for two reasons. All right, that didn't hold. Okay, well, that's not our support. 480 is our support level. See the sell volume starting to dry up on the 1 minute? We do have a nice double top up there, 492. I would like to try to take a long here and take it to 487. But be careful. You might end up just breaking down. Man, Meta's crazy, bro. You crazy. You wanted $1,300 for a weekly. I mean, I get it's a $500 stock, really volatile. let's see here. Let me look at SPXL. Let's look at SPXL with the SPY or SPX. All right, is market starting to pull back here? I want to see how liquid these are, or how not so liquid they are. All right, so let's look at the SPY. Wait. First things first, okay? First things first. Let's go to the chart. Let's go here. No, let me go here. Let's go look at the IWM, which was our leader Friday. Okay, so it's holding up nicely. Let's see if we break up to high a day. All right, now follow me here, okay? Let's see if we try to test that high a day again. Let me go to the daily chart. You have the 100-day moving average up there. You have a flat top resistance up at 195.60 or 196. I'm sorry, 196, 195.95. All right, you guys can see it bottom right of the screen. You see that yellow that yellow trade line there, 9 EMA. So, or we're rejecting support, and we're going to test the 200-day. We'll find out. We're going to find out soon. You have an increase in volume up there at 195. What I'm looking for is to see if we get another rejection up there at high a day on the IWM. Why am I watching the IWM? Because the IWM has been our leader to the upside. So if the IWM and or the Dow start to go to the upside, which the Dow is pulling back. Let's look at the Qs. What are the Qs doing? Okay, so, wow. So the Qs just consolidated, ripped to it, not ripped, but they bounced to a new high and then pulled back. So there is a little bit of divergence there. That's some big divergence. That's what she said. So yeah, let's see if you get a bounce here. Man, my nose is like I'm just dry. The weather's been changing where I'm at. Warm, cold, warm, cold. Sorry. So we're still getting weakness. I'm not gonna try to be a hero. You can see on a 3-minute or 5-minute, whatever it is that you use, you'll see that on a 3-minute, you had some nice volume come in there on a SPY down there at 496.90. But we cannot get above pre-market highs. This is exactly what we did Friday. You come in with a gap down. We rally up to the prior days to Thursday's close, pre-market high, and we just sit up there and then bang, we sell off. On what? On an increase in volume to the buy side. Like, this is weakness like we haven't seen in a while. Let's see what happens right here. I want to see what happens right here. Do we hold VWAP? I doubt we're going to, but I could see us making a big pop here, or we'll consolidate and do nothing, which is also not, not surprising. I just want to figure out, depending on the news and what the index is doing, where I should be and what I should be trading. Right now, we identified earlier this morning that banks were relatively strong. We gave out JP Morgan. Well, I didn't really give out JP Morgan, but I gave out Goldman Sachs to watch. I said watch for a bounce up to 410, 414, and look for the rejection up there. What did we say? What did we say? We wrote it down. We said look for the pullback into 405, 406, the 20-day moving average. Where was our stop loss? Our stop loss was at 403, 402.85 area, which was Friday's, I guess, what is that, Friday's low? Yeah, a break of Friday's low. Look for the pullback, get long. You made some money, guys. Financials were strong. So there's already one for the books. Just because I don't take something or I'm not looking doesn't mean that you can't watch it and keep an eye on it. I felt really good about that trade there. I would probably be out of this trade because I would expect it to pull back to 408. Okay? If you start rallying right now, I would be surprised. I also wouldn't be because look at this volume that you have today. And this is why volume is important. Look at the volume that you have today, right? That you have not had in quite some time. Like consistently up there at 45,000 shares traded, right? Usually you're at like 30, 25, 23, right? This was a day after, 3 days after earnings here. So, So yeah, we're back up to the earnings entry, and again, Goldman Sachs was really the only stock that I've seen so far that gapped up on earnings, gapped up, right? It pulled back, it pulled back off the open that next day, but it was rewarded, and we saw the setup. We've been watching it. This is a really nice setup, guys. That's why I brought this. That's why I brought this up this morning. Because look at this setup here. We opened up above this flat top resistance, as you can see here on the bottom right daily chart. You can see how we broke out of this consolidation. We weren't breaking down, so bang, you get that breakout, which we were in. We traded it this day right there. I know somebody actually commented on that trade. So we pulled back into Thursday, Friday, Wednesday's highs. Okay. And you're getting the bounce. All right, so you've kind of filled the gap. You've pretty much filled the gap on Goldman Sachs. All right, the gap would have been back right there to that close right there, like 410.65, 410, 410.50 area. If you break above this, you see how the volume's getting lower? See how the volume's dropping off? See how the volume's dropping off right there? On what? On a pullback? Right, that's a low volume pullback. That's profit taking, not selling. See if you can't get the break. I would expect it to kind of just like fall out of bed and consolidate here, right around this area. Not fall out of bed, but like consolidate up there. The target would be the 50-day and/or 414 area. All right, this is a nice move down here from 405 to 410. I mean, I would probably be out of this trade because the purpose of this trade was just to stuff some money in the pocket. That's it. Not looking for a home run. If it happens, it happens. But just getting in and on a trade where the stop loss makes sense with the risk to reward. All right. Your stop was below Friday's low down there at 402. You're getting long at 406, 405, and you're looking for 414, 410, 414. So, and this is also another thing that I brought up. You see this? You see the rejection off of this level here at 404, 405? You see how big that candle is, even though the volume is low? How it just quickly got away from it? That's giving you an inclination, a sign of what's really going on underneath of this stock. That right there is showing you that you are about to get a rally. That there's relative strength with this name. You notice how you're not putting in this type of candle, right? You're not putting in this big long candle there off of this level up there at 410. Chances are it's going to just pull back, hold trade line and or VWAP and go up higher and break it and make it support, right? If you would have seen something like this, then you would have been like, okay, it's probably time that we take profits on this and get up out of here because we'll get our money taken if we don't. You know what I'm saying? So that's why it's important. Look how small these candles are off of that level. Look how big the candle was off of that level. Where's the volume at? On the same side as that trade. So on the upside, look. So this is what I mean by if you don't use volume, how are you able to tell? You're going to have to watch your screen and know these type of things. But this is why I feel like it's important to use volume. Because you could get faked out with like a low volume big candle and think, okay, cool, everything is gravy, which you kind of did have here. But I think, this thing's just setting up strong. I just, like, it's hard for me to explain. Like, there's been times where I've identified that, this pretty much might be a failed breakout because I don't know. I can't explain it right now. I'm gonna just relax for a second and kind of just see if I still can't try to find a trade. What's Mara doing? I was looking for a pullback on Mara. All right, hold on. There's new. So other countries now are talking about doing this. Sorry, give me 1 second. Okay. All right, so again, you're seeing the SPY pullback. I'm gonna watch for Friday's close. I'm gonna be watching for 495. It's not surprising the market's still pulling back. It's really not. Let's go check on some of the news. Let's check on some of these names, right? Tesla. If you guys have questions or charts you guys want to cover, don't hesitate to throw them in the chat, and we'll get right to them. All right. I appreciate you guys. Where are you guys tuning in from? Anybody from outside the USA, like in another country besides the USA? Spain, England, Dubai, Arkansas. All right, so Bitcoin is getting a nice little pop there. It's got a little room to go, 67 or so. I would just like to see Bitcoin pull back, and that way I could feel good about the upside. The farther it goes, I feel like it's setting itself up for failure to get more downside, unfortunately. That's why I was hoping for Bitcoin to pull back to 63, like 63 flat, 63 or 64, 63. But it didn't. It did not make 64 support, unfortunately. So, wait, why did I draw the trend line there instead of there? This is where it should have been. Oh, they're suspending it on Wednesday. What are some ways that can you still use it or like download it, or will Apple and Google not let you, or Android? I have an iPhone. What are your guys' comments on that? Like, I don't know if you can still let me see here. Let's see. That's the 10 years still going. Damn, that's crazy. All right. You know, I don't have a TikTok, but I am kind of curious how and if people are going to be using it, regardless if they ban it or not. And I'm not sure how the phones companies are going to react. That's crazy. That's so crazy. Like, I don't understand why they're doing it. I really don't. I'm sure there's a reason, but just because somebody's okay with giving your data, then hold on one second. Let's listen to this.
TikTok spokesman that TikTok was important because it was used by 170 million Americans. They also pointed to the economic benefit, the number of small businesses that use TikTok, the amount that has been raised and brought to the U.S. economy via the app. That's a really big case that they've been making throughout this entire push, really putting their creators forward. And guys, we'll be seeing exactly what happens to this bill when it comes to the Senate tomorrow.
Emily, in a way, though, it doesn't really matter, does it? It's up to the Chinese. When Secretary Janet Yellen was in China a few weeks ago, when I went with her, they brought that up. They brought up the TikTok bill, and their concern is that the U.S. is using issues of national security to try to squash successful Chinese companies in the U.S. So ultimately, won't any sale, even if the bill does pass and President Biden signs it, be shut down by China?
I mean, they will definitely have to see exactly what the courts do here. I mean, TikTok has been successful in a number of its lawsuits against other state rules. I'm thinking of the one in Montana that tried to have a TikTok ban. That got struck down. But you do have lawmakers kind of pointing out here that it's not like TikTok's a little bit different from some of the other apps, just because, number one, of the tie to ByteDance, and number two, they say, look, we're not against TikTok. We're fine having TikTok in the U.S. It just needs to have the break between TikTok and the parent company. That's really been the thing that lawmakers have been emphasizing here.
Yeah, no, I guess I was referring to the sale more, that they would stand in the way of a potential sale to a U.S. group of investors, say to Bobby Kotick or Steve Mnuchin.
Group. No, it seems
interested.
unlikely that they, I mean, based on what we've heard and what I assume you heard as well when you were in China, that in fact they would allow it should that ban take place, and then that during that interim period. You're right, Sarah.
And that it would be more, it would stoke some pretty intense, I think, trade tensions on the Chinese front.
It would, potentially, yeah.
Emily, thank you.
Although they banned all of our social media apps.
No, absolutely. No. Emily, thanks. We'll turn to you on any development. 6 days of back-to-back losses for the S&P and the Nasdaq's worst week since November 2022. But our next guest isn't concerned, arguing, quote, prospects are good. We'll discuss it. Stay with us.
Well, what are your guys' thoughts? Do they ban it or not? Do you guys think the Senate's going to? I'm pretty sure what? It goes right to the Senate, right? And how do you think that whether it's kids or other people, they're going to use not necessarily an alternative, but are they going to try to access it anyway, right? Whether it's through an Onion like a Turo, or what, what does that mean for iPhones and Androids? Does, like, how, so usually I do not, sometimes, the majority of the time not upgrade, but I watch how many, and at least how quickly I do the, not necessarily the iOS, but it wants to do updates on your phone. A lot of times it'll update for the worse, and it'll make your phone slow, this, that, the third. So if I do an update and then it asks me to do it again in 2 or 3 months, I'm probably not going to do it, honestly. I'm like, because sometimes it's like I really don't like, there's no reason to even do it, I'm not doing anything where anything is hacked or whatever. I'm not saying that can't happen, but I don't know. So I don't know what that means. Like, do you get a new iOS that has this stuff banned and you can still access it if you don't download a new iOS? I'm really curious how this is going to work and what's going to happen if this really does happen. So here's Apple. You have a flat bottom. You have a support level up there at 168. Looking like, we might try to go a little red, but it feels like it's trying to hold on. I mean, not really, I guess, because you're just putting in lower highs. But you could sense that it does want to go back up and test 168, it looks like. I did not look at Coinbase. That was one name that I wanted to watch today, which was Coinbase. So Coinbase hasn't really moved either. It's just sitting up there at that resistance level with the 50-day at 225.50, 225.45. Right now it's at 221. Okay. I have not looked at Nvidia yet. I was just looking at Tesla. Let's go see if JP Morgan ended up breaking out higher. It did. All right, it did. Did anybody take JP Morgan? Just wondering if anybody took that. We said we were looking for that 50-day moving average. It had relative strength off of a gap up. You can see JP Morgan's green off of a gap up with the other sectors being red, like the Dow, IWM. It looked like the IWM was going red. Yeah, and I'm talking about today's open, not Friday. So it all depends on how you want to look at it. Yes, it's green. It's above Friday's close. But as far as the day, right, on the day, it is red. Looks like it's trying to hang on here, right? It looks like it just pulled back, tested the close of Friday, and it looks like you're trying to get a bounce. Maybe we could look for a long on the IWM, especially if we start to hold here a lot longer. Then I would expect whoever was short to get a little nervous and start to take profit. They've made some good money. I think like very soon you could get a nice little pop, and I would look for that to take you to prior highs up there. 197, 196. Yo, did any of you guys watch the fight this weekend? I'm really upset that I didn't put any type of money on it. Here, listen, the reason I didn't put any money on it, and I was kind of going for, I was going for Ryan, because I wanted to see, and my biggest concern was, would he give up quickly? A shot to the liver, this, that, the third, and I'm like, look, the playbook of hydration clause, shot to the liver, equals a win. All right? Tank is very good. I like Tank. I think those two should do everyone a favor and get in the ring and go at it. Put on a show. No hydration clause. Tank is scared. What is up, Matt? How you doing, buddy? Any thoughts on Arm? Oh, my boy, any thoughts? Any thoughts? Any thoughts on Arm? Yeah, I can give you a thought. You want a thought or you want a thought? Not sure if you're a married man or not. I'm just playing, buddy. I hope you had a good weekend, man. It's good to see you, Matt. Let's go look at ARM. Let's do an analysis. I feel like everything that we're looking at right now, I think is going to try to get like a little relief bounce. Like it looks like everything we're looking at has either the 100-day, 50-day, has some type of moving average on the daily chart above us. And that 100-day, oh no, hold on. So we're looking at this gap up. I'm looking at the bottom right of my screen. It looks like we already put in this test of this gap, and you just rejected it. Right? You guys can see right there that the opening price right there at 94.50. What I would look for is see if ARM holds 89.90 where it's at right now. Okay? 89.90. Wow, I can't believe ARM's moving that much. Just didn't seem like that much. Because I looked at 80 or 89, and then 89.90 is right there. It's like a dollar move. Doesn't look like it's moving, but like 75 cents to a dollar. I wasn't looking at the price, is what I'm saying. So just this didn't look like much. So I would look for a pullback. See if you hold this 89.90 level right here. I would look to see if you hold this right there, at which you kind of are now. But if it starts to break, then I would look for a pullback to Friday's close. I think you have to just watch the markets. In my opinion, we still have not gotten any type of strength or a bid to hold. So like I said a little bit ago, you'll notice just looking at the SPY, Friday and today look exactly alike. Outside of the gap up, right? Friday, you came in with the gap down, but you in the pre-market, you ran it right up to Thursday's close. Like you rallied pre-market, put in a double top. It pulls back when the market opened, and then it, on the pullback of the bell, you rally off the bell to like test pre-market highs, and you can't make a new high. The SPY today, gap up, stays flat at 498, just cannot get above and hold 498. Like, we were just seeing a lot of weakness. And even Friday, the volume was to the buy side. Today, the volume just stepped up there a little bit ago on a 5-minute chart. They're at it's not giving me the time for whatever reason. What's going on here? My cursor might be messed up here on TradingView. Yeah, I might have hit something. Anyway, so just a few minutes ago, the market's weak right now. What I would do is wait and identify if we get some type of weakness or strength in the market where we can actually start holding a level, and like you're starting to notice that we're putting in higher lows. Like you're seeing like a little bit of a relief bounce. Then I would look for ARM to go up to the 100-day moving average on ARM. Until then, I'm probably going to not do much and wait and see if we can get a bounce and then try to get a short on that rejection of like ARM, the 100-day moving average. You can't even get no type of bounce though at 99.50. So until you can get NVIDIA, SMCI, what's Microsoft doing today? MSFT. You know, look at Microsoft putting in new low a day, right? Like that's what I would say, Matt, is just there's just so much weakness right now. We gotta, you know, if you're looking for upside move, we gotta be a little patient. Nate, but something serious is happening in AMC stock. History is repeating itself like 2020. Be ready, let's go. Yeah, it's got a heavy float, so we just need a lot of money to move it. I mean, there you go. There's divergence. Thanks for posting that, Collector. I appreciate you, man. Thank you, guys. Please hit the like button if you could. It helps the stream a lot. He's right. This is probably one of the only stocks on the day that is green. That is at least not only is it green, it's above the initial morning high. Right? You're holding the high a day. So, you know, whether we say it's doing this or that, we'll see. We're gonna need a lot of money. I'm just gonna say that right now. You're gonna need a lot of money to get AMC to do anything crazy. Upside, make money, move? Yeah, we could. It's doing it now. You are right. I don't disagree with that. I don't disagree with that at all. Right? But to say something crazy is going to happen is history. I think they just, you know, I think the CEOs just screwed that one up for everybody. I really do. And here's the thing that we cannot forget. For anybody that's new, it's not that I don't want you to fall for it. This is not falling for it because you can get a rally. You can make money on these things. You got to understand that the market is a place that companies use to raise money at the end of the day. So the minute that something goes to, let's just say we get AMC to $10. That's over 100% move in a stock alone. Big trade. I'm on this, man. Look at this setup. This is a beautiful setup. This is a beautiful setup, as a matter of fact. We should look for that 50-day on AMC. Bro, Collector, appreciate you bringing that up, man. I really do. That is a really nice setup. You're not lying. You know, I don't think we go to 40 or 50, but we definitely got a long-sided trade here, in my opinion. But the thing is when this thing goes to a certain point, if the CEO does not do an offering, he'll probably get fired, right? And they have shares of their own. Like, if I own 85% of something, and then there is, or we'll say 75%, and there's 25% is out to the world, and I'm sitting on 85% of the shares, you know, it's probably going to be up to me on what happens, right? This, like, if I get something that starts to rally and I take profit real quick, chances are, you know, it's going to do what I say and not what everybody else says, because, you know, the public does not have access like I have access to, you know, the float, the shares, this, that, the third. But damn, I'd be damned if you can't get a rally back to $4. Where are we at right now? 325. What's GME doing? GME was setting up nice a while ago. Look, GME selling off and AMC is up. Let's do it. I'm with it. I might actually put a play on this, actually. I may throw a little, a small amount of risk onto this, just to have access in case something does happen. So do not trade this. You will lose money. If we can get a, man, see, I feel like if we hold here, if we get a pullback to VWAP, here's what I'm going to do, guys. If AMC does pull back to, let's say, $3.20 in VWAP, I'm going to get long. 320, I'm going to get long. See if we can't get a pullback. You had a little pullback there pre-market. You had one here. 320 is the area. I would like to see VWAP get lined up right with it. Look at the volume coming in here. It's really to the sell side, though. It's a little indecision there. If we can get VWAP to just like... Well, here's the thing that you're going to need, though, right? In order for this to happen. You're going to need this thing to rally, right? Like, very soon. Alright, you're going to need this thing to rally really soon. because I'll say this because what that's going to do. How do you lift up VWAP? Come on, give me the line. How do you raise VWAP? If I want VWAP at 320 and I mean, I guess you could, if you consolidate right here, you could do one of two things. You could consolidate, right? We could just sit here for a little bit and then get long at like 1 o'clock, 12:30, 12:45, and let VWAP work its way up here, and we both meet. That would give us a nice little buy trigger that I think would be nice right around there, around lunchtime, a little bit later on this afternoon. Or you get, or what you would do is you would get a rally and then a little breakout, like you know, a small little light volume pullback. But then you're paying up for it because it's going to raise VWAP up with it, and then you're looking at like that high there at 330. I want 320, so I'm going to keep this on my radar. I am going to keep this on my radar. I mean, it's green today. Everything else is for the most part weak, so you can't ignore that. You know, if there's going to be a trade, just because it's you know, just because you agree or disagree with something, you know, don't let it stop you from making money. Like DJT, that was another one I was looking at. Towards the end of last week, I was looking for a bounce. It was like Thursday. It just looked like you were setting up nicely for a test of that 40 level. It doesn't look like you did it either, which it would take a little bit of time. But you can see here at this level here at $40 is what I was looking at, the 20-day moving average, right? 20-day moving average here. And then, you know, 45, which 45 is a ways away. So, oh, come on, man. Sorry, I know my mouse is right next to the mic. If it's too loud, you guys let me know. I'll move it. So, damn, what a mean rejection there. We could probably even look for a pullback on DJT down to 33 bucks. Citadel might be mad. Boy calling them out. Oh, Trumpy calling Citadel out. So they might short the heck out of this thing today, just to be, you know, just to piss them off, just to go back and forth. Let's see here. And listen, if AMC does start to go, guys, be ready for sympathy plays like GME, DJT, like all these highly shorted names will go. All right, so be ready. I'm sorry that I'm doing this real quick. I'm sorry. Just give me 1 second. Let me get all this stuff ready. All right, so we know we have 40 bucks. $40 target up here if something does start to happen, right? Whether it's AMC, whether it's DJT. It looks like AMC is going to be the one that sets it off, though. All right. So let's pull it back here. All right, so let's have a little rewind real quick. What do we have going on? Where do we want to be? All right, we have crypto that is still hanging out, but more importantly, you have Meta, Snapchat. The trial also is going on right now too. By the way, I'm not watching it, but that trial is going on, so you could start to see a trade off it. Look how weak Meta is. I mean, it's not that I don't get it. I just think, is this a sign that Meta ain't safe either? I mean, I'm not saying that they're going to get rid of it because I don't think they are, but that's crazy. That's a big bear flag, guys. This is, man, like, we are so oversold. This is actually good. If you continue to put in new lows, this is giving you guys divergence. Look at this, right? Look at this. We're putting in a new low, right? And then look at your RSI. Look at your RSI here. There's the low on the RSI, and then there's your prior low, right? Here we go, right? This is divergence. So back up to the stock. You guys probably can't see this. I'm sorry. Here, let me pull it up. You guys see that? Let me see. Let me pull the stream up real quick. All right. So, yeah, you guys can see it. You guys can see it.
Talk about it all. I think you were when you were at City, just advising the
So
deal. I mean, it's yet another
you're putting in, look, low, 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 putting in a fresh new low. But look, what are you getting?
CEOs and they're
Right? What are you getting? This is why, to me, technical analysis can take a little while. You're starting to get an uptrend and a higher low in your RSI and stuff, which is just, you know, that's not really the way you want to use RSI, but it is, right? Because it's showing you divergence, right? The stock is doing something versus what's happening up and underneath of the stock, right? And that's what you want to be able to identify in real time is when you get stuff like that happening, right? That's why I think when people don't use indicators, it's like, okay, have fun with that. How are you, you know, even just staring at your screen all day long, watching how it reacts off of levels, like, you need something to help tell you what's going on underneath and to help tell with the time on when things are going to do things and whatnot. So you can really use these things to help tell you what the direction's going to be and when and where, right? Pullbacks, everything. Some people might wonder, like, how do I know there's going to be a pullback? Well, unless there's no news, you know, I use everything that I can to tell me what's happening from different time frames, different indicators, and it's just, I've been doing this for over 10 years now. It's like, you know, just putting the story together. And unless there's news that comes out, it should trade within the way we think it's going to trade, right? Like, I feel like you might get one more bounce back on Meta, like a, give me a line here. Like, if you get a bounce back to, like, 485 or so, 485, 487, and then you pull back, make one more new low down at 468. It might even be 468, 465, I would say. Yeah. Maybe you get, I don't know if you get 460. You have earnings coming up, so that's the other part to this. And that is why the options were so expensive. When I was like, damn, they're crazy for that one. $1,500, $1,600 for a weekly? You crazy. I know it's a $500 stock and all, but damn. She got an ATR of 10. She moves on average, you know, $6 to $8 on a low day and $10 to $12 on a high day. If not more, 504, 570, 475. She moved a lot Friday. We traded this long here for anybody that's just joined us. We were long Meta Friday morning to 515. 510, I'm sorry. Because we used that idea. What's the ATR? Well, we should be able to at least get $10 from low to high or high to low, right? The stock's pulled back. Let's see. We should at least get, like, if the ATR on a low volume, even on a high volume, like roughly we'll say $10 is what it does in a day from high to low. If we pull back, we know we should at least get $5 to $6 either further to the downside or a bounce back to the upside, right? So that's using the average ATR, and also it can help you not be scared to pay up for a trade when it shows you the direction. If Tesla pulls back $1.50, $2 and starts going to the upside and it's regained that $1, $2, it should at least give you $3 to $4 more of upside. And you can use the percentages, right? Like, look how far down we are on Tesla. We're 4.5% down, right? Which is about average. So it probably will either go break even, which would be to the upside, or it'll probably, dude, what is going on here? Or it'll probably end up closing today right around where we're at today, right? 4% down, 5%, which is crazy. But the overall sector as a whole is pulling back today. Oh, no, Ford's doing really good on the back of that. That was a sympathy play. I forgot about that. I talked about that this morning. Shoot. Damn it. Okay, so here's how would we play this? How do we know if we have any room left on the table? Let's go look at Ford. This is a prime example. All right, so a big day on Ford, right? Big day. Already quarter of the volume. Haven't even been through, well, we are almost halfway through the day. So, what do we have here? 1225 on the low side to 1275. We'll say 13. So we've moved $1. We'll say $1. We'll say 75 cents. We'll say 75 cents because that is what we've done. 12.14 even from the prior day's close. So 12.25. We'll say 12.72. So that's 50 cents. So we've moved 50 cents. What is on average? What does Ford do on a big day? So if I go here, what is that? 12.45. We'll say 12.50 to $13. So 50 cents. So we've already identified 50 cents is an ATR that we need to be paying attention to. Let's go look at this one, right? From low to high. What do we have here? 316, 1316, I mean, to 1395, 96. Just under $1. We'll say 80 cents. 80 cents. So I don't see anywhere just yet that's done $1.50 on the day from high to low or low to high. 1160 to 1210. So it's probably not a good idea to get long Ford. Even though the resistance level is up there at 1293, you know, you'd be lucky to get $1, right? And it's already done the majority of the ATR. So that would be a no play, obviously. 1298, 1350, 60 cents, so 70 cent move. So I would watch. Ford has earnings on the 24th. Yeah, on the 24th. Wow. Okay. So does GM. Let's see here. All right, let's go back to the charts. See it pulling back now? See it pulling back? But, you know, if you get a pullback to here, to VWAP or so, then maybe you could take a long from 1250 to 1275 and just, like, make a new high. But I doubt it'll give you that much of a pullback. So, you know, if anybody here that hasn't been with us before, you know, these are all little pieces of information to help you, right? Help you to take it, not take it, know when you should be taking profits, right? Understanding how much does that stock move in a day, right? And you want to, and at least me, not you, but what I do is I will separate that between, you know, a day where it doesn't have a lot of volume or news, right? Which would be like a low volatile day where it's not whipping around, versus a day where there's high volume. So I want to have the two separated. I used to say, you know, for instance, Tesla, right? It would give you, like, on a low volume day, trading kind of sideways, it would give you $4 to $6. On a big heavy day, it could give you anywhere from $9 to $13, right? That was a while ago. Things have changed because of the stock price now. And that's the other part to this is, you know, understanding that the percentages when a stock is at 300 versus when it's at 100, right? They're going to be two different numbers because one's obviously bigger than the other. So, but Tesla isn't up there anymore. So you're seeing that the volatility of Tesla is really slowed up. It's still volatile, but it doesn't give you that big, you know, $5, $10, $15 move because the price is low, right? So you have to keep your expectations within a certain boundary on some of these moves. And understanding, okay, well, if a stock's $900, it's probably not going to take much at all for that thing to move $35 to $45 in a day, right? Like NVIDIA. So, all right, well, let's keep it moving. So Meta sold off again, just clear weakness today. Again, this market nobody wants it. They don't even want to touch it with your money. They don't even want to touch it with your money. But me personally, if you do not own anything, you know, we added Apple to the long term last week, and we actually got a really nice rally the day of and after we bought this, which was right there, which was literally on that pullback. I had said I'm going to buy a little bit more, which was right there. I should have even thrown some calls on there. Like, look at that, man. Look at the next day, just boom. So obviously a lot of other institutions were thinking the same thing, like, hey, you know, your job is not to think you can call the bottom or a top, but, you know, just, and I had said this, do not throw everything in Apple right now. I'm not saying it's going to recover. We could still get, I'm still looking for 150, guys. You know, that is my target for Apple. I'm still looking for that level to show up. All right, look at that support level down there, or 160, 155. Look at that. That is a mean level down there at 150 and 160. So, you know, like, I did not buy any Friday, but I probably should, because you come in with a gap up. This looks like a lower high possibly coming in here. Dude, my monitor's going crazy back and forth. So, you know, that's up to you. If you don't own Apple, or if you do own Apple and you have a couple bucks you want to put away, I mean, look, I think even with earnings coming up, you know, it's already down, just like Tesla. So you may, if the move is to the downside, you may not get much more room to the downside. You might not. It may have to just be, like, it would have to be terrible for Apple to just completely crap the bed. Right? It could, right? Earnings could take this thing to 160. But guess what? I'll be there to buy some more. So, if you don't own any, I think now is a good time to think about it while it's here. Because who's to say that we don't start turning around for whatever reason? I don't think that we do, but you could get a headline news that says, you know, Israel is pulling out of Gaza Strip or whatever. You know, what would that do? Russia pulls out of Ukraine. Or Zelensky and Putin are trying to come to a deal. Like, this market's going to rip inward to the upside faster than you can blink. Right? So there's always headline risk. We got to understand that. So let me go grab a drink of water real quick. I'll be right back. Keep your eyes on AMC. This was a really good call out in chat. Look, we are trying to get that 320 level. That's what I'm looking for. 325. 320. If I can get that, I'd be pretty happy. I'm going to get some time on those options as well. I would not recommend it. You will lose money, especially if you don't know how to manage the position. Have a stop loss. Know what you're doing. All right. It's ultimately up to you on how you execute, right? I can only tell you guys what I think. I can't just do it for you. You know, I wish I could. Give me 2 seconds. I will be right back. Let's see here. Let's go throw on Schwabway. Again, I'll only be 2 seconds, guys, so just give me 1 second.
Worst performers of last week, which I know that some selling did plague the overall market, but Tesla unfortunately continues to make lower lows and lower highs as the bears have definitely taken over. Some news today that they're cutting their full self-driving or FSD software to around $8,000 according to Reuters. Tesla did slash the price of this assistant. It came from around $12,000 to then of course $8,000 here in the US as CEO Elon Musk is trying to double down on this technology, according to various reports. But per the company's website, customers will now pay $8,000 for the feature or could subscribe to it for $99 a month. So all things considered, this is just the latest development as far as Tesla revamping some of its pricing. Tesla is also cutting the prices in China, Germany, and the U.S. after recent cuts. So a number of major markets are seeing slashes as far as most of its flagship vehicles, the S, the X, the Y. The Model 3, I believe, was spared here in the U.S. as far as its price reductions, but $2,000 is pretty much the magic number you need to know across the board. Even overseas in China, I saw it was roughly like $1,800 they're cutting their prices by. So $2,000 then is an easy number to remember here, but the swath of price inflections does come as they do report their, of course, more of their financial updates tomorrow. We did already get their first quarter deliveries and production numbers, but any financial update, I think, for this company is dire and welcome at this point, Nicole.
Yeah, and so much talk just about Elon Musk. Any final thoughts,
you know,
Jenny?
I think that we get too much caught up in the minutia of Elon Musk, whereas I don't care necessarily who he is, what he talks about. That has never concerned me, but what he's able to say tomorrow as the leader of this massive company, that matters. And I think that you hear these reports that he wanted to slash his workforce by 20%. Of course, we did get 10% layoffs last week, but this is to match the reduction in vehicle deliveries between fourth quarter of 23 and the first quarter of 24. This is according to some Bloomberg reports we got. And I will say that while deliveries were a concern, the backlog was a concern, a lack of demand is a concern, something like Elon Musk maybe cutting another 10% of the workforce, that doesn't matter to me, nor does his pay package, which I know has been fought over with shareholders and now in court. None of that concerns me. Tell me how you can improve Tesla's share price. That is what I think more people should be aware of or frankly care about.
Jenny Horn, thank you. Markets correspondent. Thanks. Let's get some insights to the news shaping the markets because it's a busy week ahead. Young Maz with us, Chief Investment Officer, BMO Wealth Management. Thank you for being here today. Good morning. How are you feeling? You know, we've had, I think this is the first day in 7 that we're seeing some good up arrows. Not sure whether or not we can hold them because we're not too far off the unchanged line. Is the market poised for a rally, or where's the path of least resistance here?
Thanks, Nicole. It's great to be here. Is the market poised for rally? I think that's probably a tall order. I think first we need to see stabilization. And right now, the market is really only being supported by growth and growth expectations, given that the expectations for Fed interest rate cuts have been put on hold, and we've had multiple upside surprises to inflation over the past few months. I think that we have more of a natural push and pull of the market. We do think growth will hold up. We do think that it will actually accelerate in the second half of the year. But given that there's going to be so much focus on what is probably just the sole driver of the market this year, we think that this natural push and pull is going to be with us for some time. And first, we need to consolidate here. And a rally is probably a bit further away.
Yeah, I mean, we're right in the thick of earnings season now. I know you're watching that very carefully. I've had guests who feel that earnings season will only improve quarter after quarter, and that could help things along. How do you feel about this week? I mean, certainly this week we have big names. You have Tesla, Meta, Google, Microsoft, just to name a few, and some of these telecom stocks too. What's on your mind pertaining to earnings? What will you be watching for?
Praise New York City.
Well, it is a big week. I do think that when we see some of these companies come out with earnings, specifically Microsoft and Meta, there's going to be big questions about whether or not the spending trends across the board that have been taking place in the technology space and corporate spending relating to AI, if that's going to continue. We think that's going to come in waves this year, the enthusiasm for AI. It's not going to be consistent every day. There's this high level of enthusiasm, but we do think
that's a beautiful wedge right there.
Will come and support the markets this year at times.
I'm going to try and get long.
There are concerns.
I'm going to keep a quick stop loss. Look at this wedge right here. Bada bing, bada boom. Right there, you're pulling back to it, decreasing volume. See if you can leave this level quickly. You know, I did say that I wanted this level here at 320. Sometimes you got to take what you can get. You know what I'm saying? Look at it getting volatile right there. You're getting some volatility kicking in right there too. Guys, I will be honest. Maybe this does. See if it gives you a failed breakdown. See if it gives you a failed breakdown where it does something like this, right? It tries to break down, right? Puts in the candle. And then it goes higher, right? Something like that. You could get a pullback again to it, and then you get that, you know, then you get the bounce higher. That's what I would look for. See if it pulls back here and you get a failed break down. I'm going to eat these crackers. My cracker ASS is going to eat these crackers.
Get updates from companies. So we are enthusiastic about AI. We're enthusiastic about the productivity gains, specifically that we think AI will create that will be more apparent probably toward the end of this year and into next year.
I don't know why I want to be 8 now.
But I think the important thing for investors to remember is that the enthusiasm about AI is going to ebb and flow. We expect there to be more flow than ebb, but it is going to ebb and flow this year.
Yeah, I know you have some geopolitical concerns, and so when you're advising folks, chief investment officer, what do you tell them about how to put money to work, and I guess how they may have to navigate throughout this year?
Well, in terms of geopolitical concerns, of course, a big one this year is going to be the election. It's starting to gradually come into focus and come on investors' radar. Internationally, of course, there are geopolitical concerns. The main transmission mechanism for those, the impact of those potential concerns globally would be more through the energy and oil markets. We don't see that as currently being in a place that indicates a difficult environment. So we're cautiously optimistic that despite the volatility in some of those conflicts that are going on, that the global economy is probably not going to take too much of a hit from those geopolitical concerns. But in terms of the U.S. election, there's still a lot of uncertainty and how that plays into the market dynamics. I think ahead of that, investors could become a little bit cautious.
Yeah. Last but not least, as we think about the economy, and we still have a pretty decent economy going here, so not likely to see a cut anytime soon.
I have something
and the
in my mouth.
questions
Give me 1
become,
second.
is a cut off the table? And does the labor market remain somewhat strong here? I mean, we were expecting cuts and unemployment to go up, and what's the picture now?
Yeah, the labor market resilience is quite impressive. Over the past few months, we've had nearly 300,000 jobs.
Sometimes I wonder, guys. Sometimes I wonder if any of these people actually do work, right? Look at that. I'm gonna show you all something. All right. Fed funds rate. Forgive me. All right. Let's add on. Let's add on. Oh, come on. Let's add on unemployment rate. Oh, it's been so strong. It's, I would just think that, like, if it was me, what I would say is, whatever her name is, let's just say it's like Dana or Donna. Donna, from history has shown us that unemployment, when the Fed starts its cycle, it usually takes anywhere from 12 to 18 months before you start to see that tick up. So it is to be expected that unemployment is one of the last things that you start to see. Yes, it's held up okay, but there's been a lot of money being spent from the government, physical, monetary stimulus. But Donna, whatever your name is, I'm still thinking, that 16 month, that people haven't given it enough time. Because if you go look back, every time, when did the rate hike start? 2004. Look at unemployment. When did it start to spike? 2007. Okay? Well, look, from when they, and this is the other part to this. When they started the cycle from the very last rate hike, right? Look at this rate hike, right? June or July of 2006, and then when did unemployment really ramp up? November 2007, bang, to April of 2008. About a year and a half. About 12 to 16 months. And really you started to see the tick up right there. Bang. June, July of 2007. So in that case, it took like just about pretty much 1 year. 1 year from the last hike. Look at 2019. Funny enough, right? What's funny is the last hike, February 2019. Look at the unemployment rate. Bang. February 2020. Bang. 1 year from the last hike. 2000. Last hike was in June of 2000. They held it. Unemployment, bang, January 2001. Right? So it could take longer with stimulus at the third. Even here, look in the 80s and 90s. They raised rates. 1989, unemployment rate, bang. 1990, June of 1990, July of 1990, sorry. So you can see from 89, bang, to July of 1990. That is weird, crazy. March of 1989, July of 1990. So it's like a year and a half from the last rate hike. Now, they also didn't spend $2 trillion. You know, there was only $800 billion for the great financial crisis. And you can do this all the way back, guys. You guys can go all the way back. So if you look at the last rate hike, how long was it when they paused the rates, they raised it, and then they stopped? Right? Like, that there would be a raise and a pause. Come on. Oh, come on, bro. So you can see right here. Damn, I don't know where that was. Shit. Right there. They raised. I don't know where it was, guys. Sorry. Because look, this one messed up. But it looked really good. It looked exactly the same. So it's not always going to be exact, but if you can find points and find this like middle ground of when you can expect it from what history has shown you, you know, you can start to like have an idea and think for yourself. You know what I'm saying? So watch here for AMC. I'm still watching this. Again, guys, I'm going to be waiting for some of these earnings. And the one thing I'm going to tell you guys right now while you guys are still here, I don't know how many people are here, but I'm going to tell you guys this right now. Netflix did it. JP Morgan did it. All the earnings that I've watched have done this. Netflix, if you go back to when Netflix was pricing in the earnings, I think it was like $50. It was like $49.50 on Netflix, right? Well, pre-market, let's go to Netflix real quick. And this is what I'm going to look for. So if we go to Netflix, you'll see here, right? It gapped down, right? It gapped down from, there's the close right there. Just give me 1 second. So there's your close at 610, and it opens up at where? 569. So right now, if it's got $50, if it's pricing in $50, this stock from yesterday's close, and now the thing is that it did the move pre-market, but the next day when it opens up, you know, and I always say this, from 9:30 to 4 is what really matters. That's the real liquidity, the real money. So if it was pricing in a $50 move at 610 and it opens up at, or, you know, it opens up at 568 and it's doing that's pretty much the move there, right? But look, you get to the high, 580, right? We're like, okay, we think this thing should be at least 560. But look in the morning, where'd it go right to? 556. It closed, it closed at 610, 610.50, and then you ended up getting that bounce back and that rejection off of 573 to go right into 560, 556. So here's what I'm trying to say. If I'm watching Meta, and Meta is saying the day before, right, that Meta is looking for like, no, not MTA. I'm going to be looking to get that move, right? Meta right now is saying there's going to be a $41 move. All right. Well, we haven't closed or anything, so I will go with the open. So, 489.50. 489. We'll make it easy and we'll say 490. So 490, we're expecting a $41 move. We'll call it a 42. We'll say a $40 move. 90, 80, 70, 60, 50. We should get to 450. What are the 450s? 1100?
Mr. Secretary, it's Sarah. You mentioned New York. That's what I was going to ask you about. When I see news like this, I wonder.
And from where we're at, 473. 83, 93, 103, 113, 123. So 523. But yeah, man, you're right, man. I do need to get a good trade this week, and I will. And I will get a good trade. I'm gonna take my time. Last week, I suffered from the, you know, I made some good money, and I kind of just wasted my time and money trading because it was okay because I had made a good amount of money. I had never really dealt with that before, at least until I seen last weekend. That I was like, wait, is this why I'm doing this? Is this why I'm trading? Am I trading setups or am I trading just a trade? You know, because I've done really well. Let's see what happens here. Let's see if we get a pop here. It's 11 o'clock. I mean, personally, guys, I still think you need a pullback on AMC. I would like to stay strong at 320, 325. But look, let's see. Damn, I wish I was in this last week. Here it goes. It's going. Look, it's testing yesterday's high. Look at that trade. Dude, I might take this. I might take this. Nah. Hold on, look. See if it holds. It might get ready and go, guys. That's it. It's going. She's going. Watch. Look, 1,000 to the sell side. That time in sales is running a bit slow. Did anybody take Goldman Sachs this morning? This may give up. You might get some people scared. You might get some people scared. 13,000 to the sell side there. So they're buying 10,000 shares there to shorting. Let's see.
Planning, procurement, and related activities. Maryland DOT is already well underway on that.
Okay, Secretary.
Again, if this thing can get volume, the setup is there. You just need some volume. AMC needs volume.
Coming up later today on Closing Bell Overtime, Brightline founder Wes Edens will join me in the 4 p.m. Eastern.
We're going to get a breakdown and another opportunity to buy it lower. I feel like that's going to happen. This thing moves way too slow for me. Does anybody else get that feeling? Like that it moves kind of slow. And it's not too volatile. I can come back to this. We'll see. Give me 1 second.
again, a win for you in many ways. Taking a look at RSI, a reflection of some of the weakness we've seen as price activity has come off, so has RSI. Just recently back down below the 50-day moving average, much like we've seen in terms of the broader market, still holding above the 200, which is well below, down around 107. Yeah, I mean, again, a bit of a pullback, but this could be a long-term buying opportunity here as well.
Yeah, and I'm sure you're watching the 50-day moving average too as you're waiting for this consolidation, Joe. Final thoughts on your trade?
Yeah, I'm also watching that 200-day, you know, like I mentioned, there's two ways to correct price and time. We've come down in price. If we just trade sideways for another 2 months, that 200 days is going to rise up and maybe touch it. So that's what I'm looking for there. And yeah, I would love to see this for the bull case to keep it above 120 here. Just looking at, I'm actually looking at the 125 put for 320 in May. Just want to keep my powder dry for May. If we go below there, I'd be happy to dry it, or else I can collect my 320.
All right, next up, last but not least, of course, we'll be getting some earnings from Alphabet Google this week. So this is ahead of earnings, and I'm curious to hear how you would go about this play. But your thoughts on the company, the stock here at 154 today?
You know, I think it's held up really well compared to a lot of the other tech names. It's kind of right in the middle of this Mag 7 trade. You know, it's not really Nvidia, it's not really Apple on the bottom end. So it's doing well for itself, and it got a lot of heat at the start of the AI race. OpenAI came out first. Microsoft took the big lead in the LLM, and the Bard launch just seems so disastrous for Google, but I think they've really righted the ship since then. They have a big deal with Apple. They're going to be their AI partner with Apple, so they're going to be on all iPhones with their LLM. And I think that's kind of what Google wants to be known as. They want to take that lead. If they're on Apple, they're going to have the lead in the LLM. You remember when Google was just starting out, Yahoo was the biggest company on the internet, and Google became Yahoo's search, and people trusted Google from then on as the best search going forward. So I think this is kind of a similar game plan for them. They're on Apple phones. They're going to be known as the best AI chatbot. That's what their goal is anyways. And I think there's so many other applications for Google with AI that they can just take advantage of, just really at the start for them. And I think they're finally jumping in with 2 feet into the water here. So I'm excited about this earnings event. I'm looking to play to the upside. And I think a lot of investors looking at their chart price compared to a lot of the other risky names are doing the same.
All right, taking us down memory lane there as well. I like that. Ben, your thoughts on the technicals here today?
Yeah, Joe started off talking about how Google's hung in there pretty well. I would have to agree with that statement. When we look at the bigger picture, you're going to see this is a kind of a mix of the two names we've looked at so far, and definitely a standout player here. Let's just begin. First and foremost, short-term weakness, a similar pattern playing out in terms of the other two stocks we looked at. We're talking about a price decay last week, 160 down to 155. We're kind of holding this level here right now. You've got a pretty well-defined lower extreme. Friday's lows around 152, 153. You've got an upper extreme around 157.50. But this is very short term, right? Let's just step back because broader market sold off here. So I'm not surprised to see Google coming under pressure as well. But relative to the broader market, as Joe pointed out, this one's hanging in there. 107, 116. You can see some of the areas of consolidation that formed on the way up. This chart's going all the way back to May of last year. It's a 4-hour candle chart. So we're basically looking at the last year worth of price activity. Here you can see it is hanging in there pretty well, right around 155, and you kind of got a line in the sand around 145, we'll call it. So
watch for the rejection on the S&Ps and the overall markets. S&P 496.50.
Just consolidating and just establishing value at this new
Keep an eye on the IWM and the Dow to see if they make new highs.
Because, again, with the broader market below the 50-day moving average, this is a prime example of a stock that's hanging in there pretty well. RSI's topped out recently. I think there was a little bit of concern here because you can see when we got up to 160 as far as price, RSI was unable to take out the highs that we saw back in January in reaction to earnings when we were trading up around 154. So you can see that price was rallying, but RSI diverged, right? And so
Yeah,
eventually
we were
did
talking
come
about
off here.
divergence too, buddy.
Participation to the upside was somewhat
Look at
limited
this.
with that recent run-up.
See if it
but
holds prior
yeah,
high.
I don't think that this is necessarily a sell signal. Does that make? I think that this could consolidate up here possibly, and I would have to agree with the bullish pattern or the bullish position Joe's taking here because we're seeing a bullish pattern play out still.
All right. Thank you for all of that. It's interesting to see that divergence, too, because something's got to give, right, when the RSI is going the opposite way. Final thoughts, Joe Tagay.
Yeah, just a very quick earnings trade for me. It's a name I want to own for the long haul, but just on this earnings, just looking at the 155, 160 weekly call spread, I can get into that for 220. Hopefully that's $5 after Friday. I think it's kind of like a 50-50 bet. I think it's going to be up above 160 on a good earnings. So I think that better than 2-to-1 risk reward is really nice for me.
All right. Great stuff for the big three today. Thank you both, Joe Tagay and Ben Lichtenstein. Appreciate it, right? We had Freeport McMoran, Taiwan Semi, and of course, Alphabet ahead of those earnings this week. Thank you. Coming up next, we will spotlight Spotify. So if you listen to Taylor Swift's new album, like the millions of other people who have, let's see and get some details and preview the earnings report as well. We'll be right back.
AMD looks like it's stuck there between, if you start to hold 447, maybe you run back and test 150.
It's been a long road, but now I'm working for Schwab. I love to help people understand the world.
I was saying if you get a hold there on AMD, you have a little bit of strength in that sector, but they are also pulling back in the same token. Like, they were all green, now they're not so green, which means, that was just a bounce that's getting sold. So, ARM's doing really well for itself today. I don't even see, I do see AMD there. AMD is down. AMD's just been really weak lately. But it got above this level here, and I think that's what's important is the fact that it's above 147. So I would watch that level and say, hey, it's above there. Let it pull back, see if it holds. Pull back low volume, and then you're going to go try and run and test high a day at 149, at 150, 149.95. So that's what I would look for out of AMD. All right, that's just my opinion. Trade it on your own risk, but that's what I would do. I would look for a pullback, try to buy the dip to go higher, but I will also know that I am fighting the trend. Look, the market is trying to bounce here, but it's putting in fresh new lows. Not like new lows, but like new lows of the day. All right, new low a day. That's a good area where it bounced off of, but it didn't quite get to Friday's close. All right, I feel like 495, 495.20 is the area it should have bounced off of, not randomly up. Well, no, that's not true exactly, because 495.40 isn't a bad area. But see what you do here at VWAP, 5-minute VWAP, which is pre-market support. Is it going to be resistance now? I'll show you what I'm talking about. Look here, right there. Oh, wait, no, what did I say? 497? Yeah, 497. So that's the level that I'm watching for is 497, guys. This pre-market level, which was that high here, 497.13. Support there, which did broke, regained it. Support, 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 breaks, rejects 497.15. Oh, new rules. Good, they should. I wonder what that new rule is. That their phones don't follow you around?
But what about the price action out of these IPOs post-day?
The answer is they're holding up.
Alright, so that's that, guys. 497, I'm looking forward to see if we reject 497 on the SPY. Look, AMC broke out. It broke out. Fuck. Did anybody? Did anybody take it? Fuck, I missed it.
Those are difficult to trace firearms. Buyers get the gun kits online, then they assemble the weapons at home. The High Court announced today it would take the appeal in defense of several regulations that were mandated by a lower court.
Did anybody get that? I still think we have room. I do. I still think that there is room on AMC. I'm just looking at the setup like, hey, that's a nice pullback and hold of $3. Yep, but the president's son can do whatever the heck he wants. So, damn, did anybody get it? Anybody take AMC? That's wild. Look, nobody's here now. Right when AMC breaks out. That's crazy, bro. That's wild. No way. There's no way. There's no way that happened. It's so funny to look back at my old stuff here. Like some of these old like thumbnails and stuff. Like looking at them now. Yo, where's this? I thought I had one saved with this guy. Where'd it go? That's wild. Ah! You gotta get on it now. Alert! 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 Click below now. Live trading. Make money. Change your life now. Oh, shit. It did break out, though. Damn it. This thing moves so slow. It's so hard for me to get a hold of this thing, man. So if we get this little pullback, I will... I'm going to go long. Long and strong. Alright? Just like, I'm not even going to say it. I'm not even going to say it. Just refrain from saying it. Just have an edit. Just don't do it. 325, guys. 325. If we can test prior highs, I really like that area for a bounce back. I'm going to be honest. I'm going to tell you guys right now. So, if you guys see AMC at $3.30, $3.29, I am in calls. I will promise you. You don't even have to ask me. Yo, are you in calls, bro? Yes. As a matter of fact, I am. You should know this, man. Because I told you that if we get a pullback right there, that's where I'm at. I'm gonna just circle it for you guys, just so you guys know. I'm gonna get it, and I'm gonna go right there. Now, what do I look for? Do I go 2 weeks out? Do I go a week out? Do I go? Do I buy half of the? Do I put half the position closer to the money for a week? Or do I go and then use the other half for like next week? How do I play this? Jay, How are you playing this, bro? Let me know. Well, let's go find out. We can do it together. All right? We can do it together. So let me just edge down the options change because Meta was a little pricey. It was a little pricey this morning. So here's what I will say. If for some odd reason you get $1 on by tomorrow or by tomorrow, if you're able to get a nice gap up and you're up to $4, well, you'd have to be at $4.25, $4.50, honestly. So let me not even say that. Here's what I might do. I'm gonna go for the 11s. I'm gonna go for the, you know what? Nah, cuz I'm going for a 350. Here's the thing. The more people that sit at 350 and not $4, the easier it is for market makers to hedge their bets. So if you have something that's way out of the money, that's when you start to get a gamma squeeze. So you're fighting two different things here, and I wonder if the crowd knows this or doesn't know it, because you have a lot of them lining up right at 350 because they're cheap. Well, chances are you might just go to 345 and cut it here. Look at the volume dying. We'll see. Look, we pull back to 330 area. That's my next shot. I'm going to keep following this thing up. I would like to be long. I'm going to go with the crowd, I guess. I don't think 4 is too crazy for this week. But, I mean, just look. 1, 2, 3, 4 days there. 5. You went from $3 to $2.45. Never mind. Take that back. $3.50. I'm gonna buy some $3.50s for this week, and then next week, where are we at? What we got, gang? $4. I wish they were all at $4.55. Do I go out longer than next week? Do we go to May? We could go to June, but the deltas are probably trash. I mean, I don't know. I haven't looked at the options chain, but
So is Southern Company announcing a dividend increase of 2 cents versus the
they're not bad. They're 1 for 1 right now, for the most part. The volume isn't. Oh, okay. Cool. Let's go. Let's do it. You can get a $5 down here. Wow, that delta is extreme. I like that. I actually like the June 21st $5 calls. I might split this up into 3. Damn, it's not going to give me my entry, guys. If you guys could, please. We put in a lot of work here. We as in me. We just asked for a couple likes. We're out here scratching our neck like crackheads. Like, yo, you going to finish that? Can I just get a like? Can we get a little donation? We giving out. We paying y'all. We're paying you to be here. Literally. If you just take the analysis and execute. Goldman Sachs. That's money, honey. That's a long, right? We said what? Stop loss. 403, 402. Right below Friday's, right there. You got that nice little rally to 410. Again, I'm going to be taking my time today. I'm not rushing into this week. We have a lot of earnings, a lot of things setting up for later in the week. So, but that's no excuse. That's no excuse. We're going long. Long and strong. That's what she said.
Hey, Carl, good morning. So something for investors to consider out of those earnings. Could we see them return more cash than ever to shareholders? Like a dividend or a buyback boost, could that underpin the results? Meta, remember, surprised the street in February of this year by issuing its first...
I got so much more work to do. I got to finish this damn book. All right, here we go. Wait, oh, that's not Goldman. Look, you could get a breakout on Goldman Sachs right here too, guys. Look for a breakout here on Goldman Sachs, honestly. Guys, this could be another wedge forming here on Goldman Sachs. I would seriously watch for this thing to break out. This is a nice setup. This could be a buy trigger right here. This is a really nice buy trigger, guys. Damn, that's an entry there at 408. Let's see. You should start to get an increase in volume. Just like AMC. It's exact same setup. Let's see. Just give it a second. I'm not going to turn away from this one. I might, but it's only good to go back to AMC.
She has now taken on the roles of president and chief investment officer. So perhaps raising the question, will she be more responsive to calls from Wall Street for a dividend? Now, free cash flow is also one key difference between now and
okay, come on. Come on, GC. What are you doing? What you doing, GC? Or GS? Grant Sardone. What you doing, GS? GC?
Microsoft, CVP, head of engineering, Rudy Rivers announcing a
stepping down?
with Duolingo.
Oh, I thought he was stepping down.
That's Delta Uniform Oscar Lima, DUOL.
Okay, DURL. Duolingo, right? DUOL. DUOL. So nice pop there. But will it help AMC? That's the question. You know, Duolingo and AMC, they got a lot in common. They both bullish as hell. Look at that chart. That screams, you know, higher. That's a crazy Head and Shoulders, guys. Look at that. I don't know. AMC might actually be better. I'm just kidding. I'm freaking kidding, bro. Don't get your panties in a bunch. Just kidding. Damn, look at that Head and Shoulders. Like, that is a Head and Shoulders, guys. And you have an increase in volume on the sell side, bro. Come on. That shoulder line need to break real quick, so you can get a bounce back and short the shit out of it. Come on, man. Hurry up. Let's go. I'm trying to zoom in, but it needs a minute. Computer needs a minute. Had to go to the restroom. He said, I'll be right back, coach. I'll be right back. Fuck. I can't do nothing, guys. My stuff is just kind of frozen here for a second, so. God damn it. We built this city. It's so crazy these days. We can't even get this shit away for free. Alright, so like I said, guys, if you guys see, if you all see 3:30, just know I'm there. Just know I'm at 3:30. So you guys don't even have to ask.
It's not a 9-to-5 proposition. It's all day and into the night. It's all the things that keep this world turning. The go-tos that keep us going. The places we cheer and check in. They all choose the Advanced Network Solutions and round-the-clock partnership from Comcast.
That's crazy. Yeah, did you guys hear about that? The around-the-clock trading? They're thinking about it. It's pretty cool, isn't it?
Differently. You know, Hugh just said that we use these phones differently today than we did 10, 20, 30 years ago. You know, the iPhone and the Android 20 years ago did not exist. This marketplace is a brand new marketplace. T-Mobile at that point was a small fourth place provider after Sprint, and they were struggling for survival. So, Verizon, AT&T, T-Mobile, all of these companies, as well as all the resellers and many other companies are moving into the space. This marketplace is changing. It's moving to streaming and wireless and the web and so much more. And Verizon has to remain relevant as a wireless industry continues to grow and change and be affected by all of these new technologies and all of these new competitors. So Verizon right now is doing okay. I'm glad to see that they had this performance, but this is not a guarantee for the future. It's continuing to change. And I think if we move out just 5 years, the marketplace will be very, very different.
It's not giving me
Same
a
as it was for
pullback.
T-Mobile. 10 years ago, T-Mobile was lost in space. They were not one of the players. But today they're a leader. So that can happen to any company. Any company can go from a leader to a follower or back to a leader again in the course of just a few short years. So we don't know for sure what's going to happen, what the world will look like in 5 years, in 10 years. But it will be very different from what it is today.
Right. And look, Hugh, you noted too about the bundles and what that's helping to keep Verizon in the position it's in, bundles with Netflix, Max, Disney, and the stock's at $38. Where do you think this stock is headed? And we didn't even get time to talk about the hack on AT&T, compromised information. We're out of time, but do you see these stocks going higher? Which one would be your pick, Hugh?
I think if anybody, I look at T-Mobile, and I think the thing they have no one else is looking at and supported is agility, available to move with the market. That is the component that, like was being stated earlier, that you need. You need to be able to have agility. AT&T and Verizon are old players. They're playing the old game by the old rules, and T-Mobile is playing a new game by the new rules.
All right. Hugh Odom and Jeff Kagan, thank you both very much. Good to see you. Thank you, friends, for being with me right here on Trading 360. I'm Nicole Petalides. Make sure you download that free Schwab Network app. It's available in the Apple App Store 24/7, schwabnetwork.com. I'll see you at 2 o'clock. Keep it right here.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing.
This could be a nice
in one
setup long
convenient
for
location.
Coinbase.
Moving funds between
Still
your
watching
accounts is
AMC,
easy.
never gave
Cash
us the
moved to your
pullback
brokerage account is
that I was
available
looking
in
for
seconds.
here
That
at
means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Wow. Damn, these things are...
Welcome to Schwab Network.
Daily live exclusive content tailored
Yeah.
to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
Yeah.
No politics.
No noise.
Analysis
Yeah.
ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
The dollar main
If you don't know, Carl Cantanilla got mad. I asked why he only has an agenda with when he posts things, which is okay. He can do what he wants. But I said, you can't get upset when you get some backlash because it's the truth. If you're going to speak some stuff, throw out both ends of the trade, bro. Nope, couldn't do that. So he acted like a little girl, and
we're on a 3-week losing streak for the
because
S&P down
there's
6
somebody.
straight days. MKM.
What's funny is there's somebody that gets paid on YouTube who can play it, but Carl said nope. Nope. You're so right. I'm gonna. You must be a Trumper. That's what he said. He just went to town clinking, talking about copyright and shit. Tried to report me. All because I said, bro, why don't you just be a realist and throw out both sides of the trade? Come on, bro. Nope, Carl wasn't having it, and he actually. I used to like Carl Cantanilla until we saw the real him. Just like a lot of people here, right? I gave out both sides of the trade and kind of just connected the dots and said some things. And you guys can say, oh, you guys want to hear too. Just the point is we're not blocking y'all. Don't talk politics. Don't do this. Don't do that. Why? Why do people say that? Why they get so upset?
The Mag 7. I'm not so sure that there is that much downside ahead of us. I think that
I gotta watch. She copyrighted me there.
Trying to find
I'm gonna
a
go
little bit
grab
of an area in
something.
which we
I'm
could
still
bottom
watching
from.
AMC.
I'm not telling.
I'm looking for a pullback to 330. I'm still looking for it. Man, she's holding really nicely. She's up 8%. I wouldn't be surprised if you start to see some profits get taken there.
If you look at the way that earnings are going to be growing throughout the year.
So yeah, I love you guys. Please hit that like button so I can give you guys some more trades. All right, Goldman Sachs was a nice idea. That played out well. Probably JP Morgan. AMD, I just said, watch the overall markets. You could probably stick with a tight stop loss with AMD. And what I would look for is AMD to try to hold this level here and then try to take a trade back up to 150. See if you can catch the range, right? Our job is to make money, but just watch out for 148. Just watch out. She might be a little slick here. 147.75. Y'all know how the police is. They act all cool just like politicians in front of your face, but are quick to just... You know what I mean? I don't know. I don't even know what I'm saying right now. Look at this bear flag, actually. Look at this. Look at this. Bang. Bang. Do we get a pullback? Do you get the pullback here? And then the reversal, failed breakout, or it breaks out, and I just noticed that. I did not see that. All right, let me go get a Red Bull, and I'll be back in 2 minutes, guys. 2 minutes. Scanner's on. Squawk Box is on.
Did not make sense.
Did he not do it?
We're coming back to what are we at now? Maybe 19-ish times. That's a more reasonable thing to work off of. In terms of your question of is there more downside? Sure. Everything always overshoots. Right, we could get back to flat on the year. I wouldn't be surprised if we end the year in the up high single digits, 10% range. But to get there, it can't be a straight line.
I mean, it remains to be seen, though, Weiss, if the overall market's valuation was too stretched. I mean, earnings season's really just about to get going. This week, got a third of the S&P companies reporting. Now, if you want to take issue with mega cap valuations, okay, we can have that debate. If you look at where we are versus the 10-year historical average, in some cases we're well ahead of places that we've been in the past. In some cases, we're not. Alphabet today is below 22 times. 10-year average is just below 23 times. Meta today just below 23. Historical average is near 26. Amazon's much lower. I mean, it's not like Apple's so egregious. It's not like Nvidia is either. And we're working through some of that.
No, I agree with everything you said. I mean, how could I disagree? They're facts. But here's what I'd say. The market overall is where it is because you pulled forward the narrative. You pulled forward the action of the Fed and cutting rates. And now to the point you made in the introduction is we're still adjusting to the fact that maybe we're not going to have any rate cuts this year. So then you have to assess, will the ongoing level of monetary policy then contribute to a decline in the economy, which we're starting to see. You take a look at truck inventories, for example, they're at 20% of sales. That typically leads to a 20% cut in production. So the economy's weakening. But to the bigger point about mega cap tech earnings, yes, you have to pay attention to where the levels are in the PE. As I do, and I think Meta, which is one of my biggest positions, Google and Microsoft as well, I think they're cheap if you're looking longer term. But what got us the last part? So what concerns me, and I said this show last Monday, the next 25 points for Meta is down, not up. But what got us here is that, similar to what we saw with Netflix in front of the earnings, analysts tripping over themselves to have the highest target on the street. Particularly during the quiet period when the companies aren't talking, when there's no new information. So they go for multiple expansion again. So that's the dangers we go into earnings. But my view is why we're seeing such muted bounce today is that not only because we've got big earnings coming and important earnings, not just from those, but also Caterpillar, but PCE, which is where it's all going to end up.
Well, PCE's on Friday.
Exactly.
We already have kind of an idea of where we're going to be on that.
The risk is to the upside for the market from the lower PCE because we're all convinced now that right now that inflation is going to continue to either firm or move higher. So unless you get a bad number,
but it depends what you're reading. I mean, because the PCE doesn't necessarily suggest that. And as Powell even said last week in his remarks, he sort of front ran where PCE is going to be. PCE is your friend. CPI has been your enemy.
Without question. Look, I keep saying this. The Federal Reserve wants the reason to cut rates. And if your investment thesis is, I need to buy stocks because the Fed is going to cut rates, you're looking at the wrong thing. The Fed ultimately will deliver something that pivots monetary policy into a more accommodative policy, whether that's on the balance sheet or whether that's on an actual rate cut. But that is not the premise of why you're buying stocks. You're buying stocks based on the revenue growth. And if the guidance comes in this week better than expected, then you have to raise the estimates for 25 and 26. And I think the jury is still out on that. And there's still areas of the market. That's why when I say the market appears to be bottoming to me, it doesn't look to me like we're having broad-based universal selling. Look at healthcare. Healthcare is performing ridiculously well. We haven't spoken about Merck on this show in quite some time. Merck is $127 right now. Look at the financial performance that we're seeing in the last several days. Goldman Sachs, which I added to last week, it's up at 410. It's pressing towards an all-time high. It's holding really well, and energy's holding really well. So maybe what we're witnessing right here, where the market looks like it's running in place, is a little bit more about rotation than anything else.
I think that's exactly where it is. It's rotation. And if you look at Friday, DVY, which I like to look at for dividend comparison, was up 1.56% when the market was down, shy of 1%. That rotation was kind of crazy. And I think it's to your point, Joe, we need to look for revenue growth, and the leadership in revenue growth is shifting.
And maybe, Jenny, maybe it's nothing more than these are just little trades that you could find opportunities in the market. They're not really long-term investments, but that's probably just enough to get us through this period.
Don't you think that one of the reasons why we got to the peak was the narrative that rates are coming down, that we started the year looking for 6 cuts, and then we were still looking for 3 until recently.
Yeah,
undoubtedly,
Steve,
in my
I
mind,
agree
that
with
was the reason that we got to where we were.
But I also think we got to where we are on the explosive growth from NVIDIA and the semiconductors and the AI.
Right. Let me just make one more point, Jenny. I'll turn to you. But countering that, we've seen earnings growth come down from what, 7% to 2.7%. So in spite of that, because
it's never been about the overall earnings growth of the S&P. It's been about the earnings growth
based on.
But it's been about the earnings growth related to generative AI, the semiconductors, and the companies that are most benefiting.
What does Caterpillar had to do with AI?
Wait. Let's pause and go back. When you said, didn't we get there because the Fed was going to cut, right? Yes, and that goes to your earlier point where you said...
Not entirely, but it undoubtedly played a role.
A huge role. But earlier you said because they pulled the narrative forward. And that's it. I think the narrative for the whole year remains in place, which is why we may end up perfectly well.
Which is why,
it just got forward too
after
fast.
you work through, this period, if it remains just a little period of pullback, people are still bullish, figuring that, again, keep your eye on the ball. Cuts are coming. Economy still looks pretty good.
Yep.
Now, maybe the economy isn't as good as people want to make it out to be. Under the surface, maybe it's not. Weiss points to certain metrics, and others point to other things that maybe would suggest that. UBS today, their strategist, not an analyst, downgrades the big 6, if you want to call it, because we've stripped out Tesla from that conversation based on the magnitude of the pullback it's had. And its market cap now just doesn't make it one of the Mag 7 anymore. They say the momentum's collapsing in these names. Big 6 EPS growth is expected to decline from 42% to 16% over the next year. So the engine of the stock growth is maybe skipping a couple of beats. It needs to, get a bit of a tune-up before it can reset to a degree.
Yes, and if in fact that is what is going to be reported, then we are going to have to do more work in this bottoming process that I believe that we're in. Can price deteriorate further? Absolutely it can. I'm not going to sit here and pretend that if we have earnings that are perceived to be disappointing for the Mag 7, that the overall market is not going to feel the wrath of that. Of course it is.
Maybe they're not going to be disappointing. I mean, Meta's Wednesday, Alphabet and Microsoft are Thursday. They haven't disappointed yet. And, Apple doesn't report for a bit. So we don't have to, quote unquote, worry about that. NVIDIA's not for a month. We're talking about a month before we even hear from NVIDIA. And, you doubt that earnings report at your peril, at least what you've been taught, I guess, over the last couple or 2-3 earnings reports.
We learned that in February.
Right. We'll just have to see. What's the point you want to make?
The point is, it's hard for people to think about going from 42% earnings growth to 16% earnings growth and thinking that's disappointing. To me, that's not disappointing. That's normalizing, right? And so why would it be so disappointing just to say, hey, NVIDIA used to grow at 60%, now they're growing at 30%. That's still fantastic.
Jenny,
so
let's be clear. Why would that be disappointing? If you look at the stock appreciation, where the story has gone.
Starting point is today.
That would be very disappointing if you're talking about 42% to 16% and assume that the stock price wasn't going to have a commensurate correction. I mean, let's be honest.
But it should have run up. But follow me with this. So NVIDIA ran up. It ran up why? Because earnings growth was like 100% or 60%.
Yeah, its earnings growth and its guidance have been incredible.
And now the valuation, because it ran up, is kind of reasonable for what it is. It does not need to sustain that level of earnings growth forever to still have a very successful case in front of it.
Sure, but the difference is the narrative around it, or at least the thinking was, you could deal with that in a declining interest rate environment. If you're going to have more pressure on the markets due to higher for longer interest rates, then everything perhaps needs to get some level of re-rating. It took a while, but maybe last week, and certainly the tail end of that, was the beginning of that process.
But I would also say that the re-rating came in the explosive earnings, where it drove up the denominator, bringing down the overly high valuation on a lot of these. So I think they're kind of set, and this goes to what you were saying before, with Apple at 23, Amazon at 20, whatever they were, they're all in the low 20s now. Those are reasonable, right? When you're trading at 60 times, you need 60% earnings growth. When you're trading in the low 20s, 16% earnings growth is okay. So I think that's where the UBS strategist is interesting. All they're really saying is these are still good companies, but we don't expect the magnitude of performance leadership.
The other
we think
point,
the magnitude of growth is slowing. Fair enough.
The other point is that, so far, any pullback from these names of any degree has been bought. You've had people step in and buy the dip. Our Bill Baruch is doing just that, a member of the investment committee. Of course, he joins us today via Skype. So you bought more Tesla and you bought more Meta. So why don't you start with Meta first, because it's apropos to the conversation we're having here. It is the first of the mega caps to report this week. Again, Tesla's tomorrow, but it's sort of been stripped out of the Mag 7.
Yeah. Remember a couple weeks ago, I announced this Meta buy. We did not own it at the time, and it's sitting in our bottom 10. Basically, what I'm doing here is we bought it around 520 as a new position. I'm increasing that significantly to now that we're below 500. So it's right in the middle of the pack. It's not in the bottom 10 of about 40 names now. And, listen, I think they could have a really good report. I really like what the partnership is in the direction it's heading with Google. We have Meta's AI assistant now integrates real-time search results with both Google and Bing. I mean, when you talk about innovation, they're heading down the right direction. And if this is another really great report from Meta, I want to make sure it impacts my portfolio properly.
Yeah. Do you feel like, when you look at the mega cap correction, if we're in the midst of that, and it's sort of hard to deny that we would be when you look at the declines last week, for example, of 6% for a Meta or a 6% for Amazon, a 6.5% for Apple, 13.5% for NVIDIA, Microsoft obviously pulling back along with Alphabet too. What's your gut tell you about where you think these stocks are going to re-rate at?
Yeah, I think we've seen last week was really the thick of a rotation, a correction, however you want to look at it. But at the same time, our method is to do the small things right over and over, stick to your plan. And this is something that we were prepared for. Rates move very quickly. I think stocks and just in tech, especially as you go out long duration tech assets, seeing the speed in which the 10-year move, the 2-year back above 5%, that definitely shook things. And then you have just overall some profit taking, I think, that came in too ahead of these big earnings reports. But again, this was something we were ready for. We brought down our tech exposure between February and April, brought it down by about 10%. Some arguments, the real tech sector itself, we were around 50%. We're below 40% now too. So we're prepared for it, and we're using this as a little bit of opportunity to go shopping.
Okay, so you went shopping for Tesla as well. Now, I want to hear your explanation for this, because you could certainly make a credible argument that, the stock is broken and the story may be too. If you want to focus on repeated price cuts in the face of, the street thinking, well, they're done doing that, and then maybe the shift from the lower cost vehicle to the robo-taxi idea, and just real questions about where the trajectory of this company goes from here.
Yeah, absolutely. The story is in pain right now, but that's something that we all know. I mean, it's been in the headlines. It's a very emotional name, whether you love it or you hate it. And, I think right here we're heading into this earnings report. And for a lot of tech names, it's not about what you did for me. It's about what you're going to do for me. So I think a lot of this bad news has been flushed out here. And yes, it's falling. And I don't like buying falling knives. I don't really, usually step in and make a statement here. So I did increase this a bit. Again, it was the bottom 10 of our holdings, and added about 25% to it. Want to make an impact at this level, dollar cost average in. We hit a trend line. If you go back to that March 2020 low, this is the trend line into that March 2020 low at 140. And now, yes, back about a month and a half ago when I did add in the 190s on the show, I did say 160 was my line in the sand. But we've seen a relative correction in overall tech assets, which allowed me to be patient with this name here coming in a bit. So I do want to add it ahead of earnings. Listen, they may miss, but I think what they're talking about in the future is really what's going to be driving this stock. Look at TSM, look at Netflix, look at ASML. Those were all not very bad reports. In fact, they were very solid quarters.
Sure.
But the reason why all of them turned lower was because of how they looked at the guidance and some of the moves they made.
Yeah, but I mean, one of my problems with technical analysis is trend lines don't mean squat if the fundamentals of a story change.
Absolutely. I'm not arguing with that. What I'm doing is taking a calculated position here. We own it. It's in the bottom 10. And if I own this name, I should be adding to it this 140. So I'm not sitting there saying, viewers, hey, load up on this. Well, it's in the bottom 10. I've increased the exposure with some cash we have by about 25%. So it's more of a significant position here. The fundamentals really are not looking good, but I think everything has been flushed out of this name. And if that proves me right, we could turn higher here at that point. And that's what I'm looking at as a trader, as an analyst. And, the rotations we've done, those small things we've done, the names that we wrote up, the names we trimmed, it's given us this opportunity to be patient right here with the outperformance we have so far this year, and say let's lean into a little bit of a stake here into this earnings report.
All right, I appreciate you coming on. I'll see you back on the desk soon. That's Bill Baruch joining us there. Let's talk about Apple too, in terms of dip buying, if you will. Morgan Stanley today. Eric Woodring, the analyst there, sticks with it. He cuts his target though. He says he's still overweight. He does rate it with 210 as the price target. It's at 165 now. That's down from 220. So it's a slight come down on the target, Joe. He stays with it. You again have this June event, WWDC, looming. So maybe there's not going to be a whole cavalry of negativity getting ahead of an event like that. B of A names it as its top pick for the year. What do you think here? You got it in the Joe T.
Yeah, look, it's very difficult for me to be able to offer commentary on Apple because I'm conflicted personally in what I see in the rules-based strategy. The rules-based strategy is incorporating technicals. And to your point before, fundamentals can change and technicals might not reflect it, or technicals can change and the fundamentals remain the same. I'm not so sure that in the case of Apple, it's not a scenario in which the technicals have deteriorated, and I don't know if the fundamentals are consistent with that. I don't know that the fundamentals, while the revenue growth is slowed, while China is a headwind, I don't know if it's concurrent with the type of technical deterioration you're seeing. So I have to acknowledge technically the stock looks like it now has negative momentum. That's for certain. On the fundamental side in June, I would be surprised if Apple didn't deliver on AI. I mean, expect that they will.
2 weeks ago, the stock looked like it was getting its mojo back.
Yeah,
it was at 175 based on that one-day announcement where you had the best stock performance for Apple in something like a year based on that announcement.
You did, and there was clear enthusiasm, and I was part of that enthusiasm surrounding the premise that now AI is going to finally be introduced by Apple into the products that it's giving to its consumers. Hopefully in June you get more information on that, but the runway is long until June, and during that period, really technicals are what ultimately is guiding me, and the technicals don't look good for the stock. They don't.
All right, so again, buying the dip, looking at something that's come down a bunch and saying, I'm going to add to my position.
Oh man, I'm going to say this now, guys. I think if you're not in AMC, you got to be buying it. Let me refrain from saying that. I think it's happening now, and I think we all got to give a big thank you to Collector. Big shout out to Collector, man. Got us on. Doesn't look like we're getting 3.3 today. This thing might go up. Let's go do a little work on it real quick. It as in AMC. Look, I think Riot Mara is still going, so 375. So we could still have some room, guys. We don't have anything really stopping us now, from what I can see. I think that's it. I think that pullback right there, we at 340, man, that sucks, bro. I'm going to be patient. I'm going to stick to my guns here, and I'm going to be patient, guys. I'm going to be patient. If I miss the move, I missed the move, but I'm going to be patient here. All right, I'm going to be patient. I need my pullback. I told you guys I was holding firm at this level of 328. I think I'm still going to do that. All right, I think I'm still going to do that. I'm going to still be patient because, I'm going to do as I say. You do still have some nice, you could have some support here. at 340. I'll put a dotted line here. Just to like, just to say, all right, you know, that way if it does hold 340, then, and we see a consolidation up there with an increase in volume, like a low volume pullback, then okay. You know what I'm saying? What is it, Turkey? It's my cat. What, Boo Bill? So, if it holds that level, then I'll think about longing there, but I'm going to try to stick to my guns here and really wait for this level of 320, 330 area. Pretty much like Friday's highs for the most part is what I'm going to watch for. Okay? So, either you have to accept that either you might miss the trade, and you, again, I say this all the time, we're not going to be trying to put, you know, that much pressure that we're going to know exactly where the pullbacks are going to be, and not be, and where it is going to go and where it's not. That's just doing too much. That's too much pressure you're putting on yourself. So watch this level here. It already held once. Watch 340. If we do pull back from 340, I will figure out what it is that I'm going to do from there, because then the setup kind of changes a little bit. So yeah, I'll let you guys know. I'm looking for 330 to try to get in, as long as everything still works out, or like if everything still looks okay. Just be safe out there, guys. There is plenty of opportunity out there still. Still a lot of opportunity day after day. Let's go check in on some of the names with news. Let's go. We can also look at some of these movers if you guys want. So yeah, Tesla, Li Auto, Ford had a really good day today off the back of the news with Li Auto and Tesla. Damn, she's still going. I figured that was about it. We could look for, I did say, guys, on this pullback, you would look for a little bit more of an extension for a new high off of that level there. I was thinking 1275, 1280, right around where it's at now. And you can see the volume is fading because that's about its ATR. The problem with this, trying to get something like this, trying to chase this higher, is that you're going to see, that the volume's going to decrease because the risk to reward doesn't make sense anymore, and it's going to have to be some really, really, really big news in order for it to continue going much higher, as in entering here to make a profit. Like, it's just not happening. I don't think. Like, your risk to reward is really skewed at that point. You would need another pullback to 1260. Even then, this is when you had to get it right there at that consolidation. Look for that little breakout higher, bang. Maybe you get to 1290, and then look to have a pretty good day. So banks were acting really nice off the bell. They gave you a nice push higher. My call out was Goldman Sachs, and then look. Remember the pennant I just drew? Look at that perfect breakout. All right, perfect breakout, guys. All right. I'm just having a drink real quick of water and kind of just scanning. If you guys have questions, please post below. Please if you don't hit that fucking like button right now, shame on you. Shame on you, because we're gonna have another. I am shooting to have another killer week. I really am. If you don't know, I gave you guys the short on NVIDIA Friday. That was something I got myself into, and I bought calls, and I said, hey, we could buy both sides of this trade and probably still do really well.
All right, we are back. Some committee stocks on the move today. We want to trade starts with Verizon. It's down 4%. So, Jenny, they reaffirmed the full year guidance. They did post fewer first quarter sub losses. Why is the stock down? It is the worst performer in the Dow today.
Right. So I think it's down 4% because they missed on cash flow, and that probably startled people a little bit. But it doesn't really impact the longer term story. That can happen for a variety of reasons, things being pulled forward, pushed out, whatever. I think what's important for me as an investor, or you as an investor, to focus on is the fact that the stock trades at about 8 times earnings, has a 6.85% dividend yield, should grow earnings in the low single digits, like 3% next year, about 5% the year after that. So if you're in Verizon for the right reason, which is to make a really steady return, that's totally in the cards still. If you're putting 6.85% in your pocket and seeing the shares grow in line with earnings, an extra 3%ish, like I'll take 9.85% total return over the next few years anytime. And I think this earnings report has no impact on that trajectory.
Okay, so Joe, I remember when this news broke, you were on the show about Salesforce apparently in talks with Informatica, okay? You did not want them to do that deal. You said that, they had gone through this period where they had done a bunch of deals. Investors were tired of it, including yourself, which is why you didn't want this deal to happen. Now, apparently, it is not. Stock is up, albeit slightly on that news. Now, what do you think?
Well, I'd like to hear from Salesforce that they're not going to pursue any other deals now that Informatica has said that they are not for sale.
I characterize all that as correct, right?
Oh, absolutely.
You're tired of the deal.
100%.
You're tired of the deals.
The last several years, they've moved away from being the serial acquirer. They've disbanded the M&A division that was exploring and getting all these activities, and they focused on the bottom line. They focused on the
Watch this
company.
level right here, guys. Watch that level right there at 497.25. This might be a possible long entry. You just be aware that the volume, you're going to, just watch your volume and stuff. That's all I'll say. It's a lower type of volume day, but see if this area holds right there, and or VWAP. All right, VWAP would be your test for a long. Maybe that's an entry point right there at 497. 497.28 with a stop below VWAP at like 496.72 possibly. For the long. Sorry, for the long. We're above VWAP. Just make sure you're also watching the IWM and the Dow and the Qs to see where they are in conjunction with one another, and that'll help give you guys an idea for, the direction, the probability of the direction.
An enormous boom in AI spending that has to flow through to Cisco, and as you increase your networks, your everything, like that benefits Cisco. So I think that those earnings estimates could be low. I also just think it's really funny within a week to see two analysts have different opinions.
All right, top picks at Bank of America today, Joe. both KLA and Applied Materials, which you own both. So KLA price target's $850, and the AMAT price target is $222. I don't know if we can show both a little picture of both.
Yep, semi-equipment companies that last week declined in the wake of ASML falling short on orders. So there's three semi-equipment companies: Lam Research, Applied Materials, KLA Corp. These are the three all-stars in the semi-equipment space. Logically, it looks as though with this pullback here, it's the right spot to buy them, but you're just relying on technicals there. You need to hear confirmation from each of these companies that what we witnessed from ASML is not also affecting them. And that suggests that investors must wait to hear what is delivered in earnings. I would not be stepping out and doing anything right here.
All right, let's get to Contessa Brewer, who has the headlines for us today. Hi, Contessa.
Hi, Scott. The Trump hush money trial just adjourned for the day. Opening statements were delivered by both sides. Prosecutors say this is a case about criminal conspiracy and cover-up. The defense insists nothing criminal happened. Former National Enquirer Chief David Pecker, the first witness called. His testimony is expected to continue tomorrow. The Supreme Court is weighing how far cities and states can go to police homelessness. The court is reviewing an appeal from a group of homeless people in Oregon who challenged local laws banning sleeping in public, which they say violates the 8th Amendment ban on cruel and unusual punishment. And Tom Brady is about to be in the hot seat. The retired NFL legend will be in Netflix's first ever live roast called The Greatest Roast of All Time. Tom Brady, hosted by Kevin Hart. It will make history for being the first live roast on any platform to air unedited and uncensored. The roast will stream live on May 5th, so presumably, Scott, not something that I will watch with the children. Also, who would put themselves at the center of that? Like,
Yeah.
you want to be first? I don't know.
A good roaster, too, by the way.
Yes.
Kevin Hart's going to be good.
It's going to be awesome.
Contessa, thanks. That's Contessa Brewer. Up next, betting on the next big thing. Bob Pisani joins us with a look at how investors can tap into private companies before they go public. That is in today's ETF Edge next.
Join Jim.
We are back. Let's get to Bob Pisani now with today's ETF Edge. Hey, Bob.
Hello, Scott. Good to see you. There is intense interest in trying to access the shares of tech companies that are still private, like SpaceX and OpenAI. A closed-end fund, Destiny Tech 100, recently began trading on the NYSE and is trading at a rather large premium to its net asset value. But are there other ways to access private tech equity? Let's talk with Brett Winton. He's the chief futurist at ARK Investment. Brett, you and Kathy Wood launched the ARK Venture Fund in 2022. Now, this is an interval fund that also invests in private tech companies like SpaceX, OpenAI, Epic Games, and you also own some public companies like Coinbase and Robinhood. You just published a paper claiming this interval fund is a superior way to invest in private companies. Can you explain to us why it's superior?
Yeah, an interval fund allows you to invest daily or at the underlying value of the assets in the fund, and then you can redeem on a quarterly basis. And so it allows for efficient allocation to illiquid assets like venture innovation companies.
So I just want to make sure the viewer understands this. With an interval fund, you can buy at any time at the net asset value, and you can sell to the company at a set time on a quarterly basis. Is that right? That's how it works?
Yeah, exactly. And so it's the right product for exposing yourself to less liquid assets like venture type companies. So as opposed to a closed-end fund structure where you may be investing $100, but there's only $25 of underlying exposures in that investment. So you're really buying 25 cents or $25 for $100. An interval fund allows you to buy the amount you invest is identical to the value of the underlying exposures that you're getting.
So it addresses the problem of trading at a premium or a discount to the net asset value. You're always buying at the net asset value. Is that correct?
Exactly. And that's why we chose that fund structure, because we think it's the better way to get access to venture exposures for everyday investors.
Right. So why does the fund own both private and public companies? You own some public companies here, like Coinbase, for example.
Yeah. So the public part of the book is intended to allow us to meet quarterly redemptions. And so we maintain a public part of the book for kind of liquidity purposes. But the majority of the exposure is in private venture companies like OpenAI and SpaceX.
And just quickly explain, why can't we just solve this whole problem and just float an ETF with these private shares underneath them? What is the problem with doing that?
Yeah, with an ETF, which we think is a great wrapper for public equities, you wouldn't be able to accommodate exposures to illiquid assets like venture products. You can't buy or sell a private company on a daily basis to meet the redemptions and demand on an ETF basis.
Okay. Thank you. Much more coming up on how to invest in private tech equity. That's coming up on ETF Edge at 1:10 p.m. Eastern Time. Brett will be joined by Howie Neig from Forge Global, which recently launched an investable index of venture-backed private tech companies. Also joining us, Nicholas Cole is from DataTrade. That's etfedge.cnbc.com. Back to you.
All right, Bob. Appreciate that. Thank you. Bob Pisani. Still ahead. We're going to get the setup on some key earnings this week, and we will do that next. S&P still good for about 26, just shy of 5,000. Be right back.
All right, AMC's back at that level, guys. Throwing it out there right now. It's there. Coming up, and what did we say? We're looking for VWAP.
%50 off.
It is heavy. Aside from kicking off Mega Cap Tech, we have Cadence Design. That is today after the bell. Joe, it's all about you. Nucor, Ameriprise. Jenny, I'm going to get to you in a second because we have some tomorrow that are in your wheelhouse. But what do you think about these?
Cadence is the one that's very interesting to me. This is obviously a software semiconductor AI play. It's had a phenomenal run here over the last 18 months. Now we're seeing a little bit of an earnings deceleration. Stocks in somewhat of a precarious position. Options are implying a 5% move, which is a pretty big move post-earnings for this company. I'm looking here, if you get the washout, this is a name that on the washout, given strong fundamentals, you want to buy, but I need to see a little bit of a further price deterioration before you step in.
Nucor or Ameriprise, which stands out?
Ameriprise, to me, you're going to get the stronger results here, and it's funny because the sentiment is now more bullish towards a lot of these financial services companies than clearly it was in the last 12 months. On Nucor, you're looking for a little bit of a revenue contraction here, somewhere around 15%.
All right, Jenny, tomorrow you got Freeport and JetBlue before the bell.
Yeah, let's do JetBlue first. So what I'm looking for on that call is finally a path to profitability. Right now, analysts have them breaking even in 2025. Pre-pandemic in 2019, they earned $1.90. They should be able to, at some point, at least get back to $1. If they do, that's trading at 7 times earnings. So what I want to hear tomorrow is like, all right, we've got the noise out of the way. Here's where we're going. Here's when we're going to get there. They better come out strong tomorrow. Freeport's interesting. You want me to do Freeport?
Yeah, I'm sorry.
Freeport's
please.
really interesting. So if you look at earnings estimates from analysts, like they're all over the place. So some analysts have about $2.43 next year. Some have $3.60. But we know that this is a long-term booming demand story. Here's a wild little fun fact on it. As data centers power AI, it's going to require an extra 1 million metric tons of copper by 2030. So what I want to hear from them is just them talking about how huge that demand is, seeing copper prices up more. EVs take up 4 times more than ICE engines. So it's just a cool long-term story. It should be a great quarter.
All right, we're going to take a break. We come back. Mike Santoli, our senior markets commentator, is with us for his midday word next. right, we're back. Our senior markets commentator, Mike Santoli, is with us now for his midday word. It's good to see you. I think we can all agree we're probably due for a bounce.
Yeah.
But saying we're due for a bounce doesn't get you bounced.
No, it doesn't. It's sort of indifferent today, although I think that the boringness of the morning action, just the fact that it's in a narrow range and really no stress evident, is probably a net positive. It shows you that there wasn't this kind of self-reinforcing mechanical unwind that needed to continue today, because last week's action could have told you that. So far, no deep fade off of an intraday rally. We'll see if that lasts through the end of the day. Market breadth is positive today, and I think one thing that maybe people have to be kind of prompted to notice is the bond market has done nothing for a week. Literally for a week, yields are flat. And so bond vol is what, if it goes down, enables the stock market to get its feet under it. Again, there's a lot to prove. Got to go up 3% before you're even sort of turning the tide a little bit on this retreat.
It seems it just took the market a little bit of time to catch up to the bond market. In terms of what the bond market was telling us about higher for longer, the stock market in some sense was like talk to the hand until it couldn't anymore.
Yeah, I mean, look, the stock market is going to try and focus on the micro to a fair degree. It's going to anticipate earnings. It's going to say the economy's good. Why am I going to sell for that reason for as long as maybe possible? So yeah, I do think the yield has to go to a certain threshold and stay there before you're convinced that you have to recalibrate a little bit. And there's also a way in which you can describe what's going on. It's just a messy rotation. The crowded stuff is again getting hit, and the rest of the market is trying to hang in there. Banks up more than 1% today.
Yeah, not necessarily unhealthy in any way. I'll see you over the last hour. All right. That's Mike Santoli. He'll join us on Closing Bell, of course. We'll do finals next. I hope you'll join me closing bell today, 3 o'clock Eastern time. We're going to see if this bounce for stocks holds today. Dow's up nearly 200. S&P trying to take back 5,000. We'll see what transpires over the next couple of hours. Cameron Dawson, Ayako Yoshioka, Gabriela Santos, and King Lip on tech will be with me. I hope you will too. Weiss, you got a final trade for me?
Taiwan Semi, look, while I'm not putting new money into the market, I think that this one is oversold and cheap enough to buy with capacity sold out for as far as you can see.
Jenny Harrington.
Yep. My year-end contrarian play was SL Green. And last week, buried amongst the horror of the week where the stock was down 10%, they actually had great earnings. So you've got 6% yield, 10 times FFO.
All right, staying with that commercial real estate play. And Joe T.
Tough to find strong positive momentum in the market right now. Patience is probably the best position, but Goldman Sachs is one name in which you will find strong positive momentum. I think it continues to push higher.
We'll see you on the bell. The exchange begins right now.
Thank you, Scott. We will see you on the bell indeed. Meantime, welcome to the exchange. I'm Tyler Mathisen in for Kelly Evans. Here's what's ahead this hour. You got your GDP, you got your PCE, you got big tech earnings. It could be a market-moving week big time. Now, if there's a pullback, our market guest says buy, and he'll tell us why and where he's looking for opportunity. Plus, speaking of pullbacks, some of the semi-names are in a bear market. But our analyst sees strength ahead and soon. He tells us when, why, and which names he sees best positioned across the chips universe right now. And on this Earth Day, a special 3 buys and a maybe ESG edition. The acronym may be divisive, but the returns our guest sees for these names may make you a buyer. But we begin with today's markets and Bob Pisani at the New York Stock Exchange. Hey, Bob.
Hello, Tyler. We are essentially at the highs for the day. Been a good day, 2-to-1, advancing to declining stocks. Yields are stable. That's a big help to the markets. Let's take a look at some of the major indices. S&P 500, fairly narrow trading range, about 30 points on the day, just at the highs of the day. Dow Industrials also fairly narrow, around a 200-point trading range. The high print was right at the open, and we had a mid-morning slump. We always do, and then we recovered. Same with the NASDAQ, started positive, went negative, and now you see up 0.6%. I think the important movers this week to watch are the semiconductors and see if we're getting a bounce. And indeed, that's exactly what's happening. NVIDIA, remember, NVIDIA was $900 like 6 trading sessions ago, and a horrible close on Friday. And you see the move here to the upside. Taiwan Semi was down several days in a row here after poor guidance last week. It was, what, 147 or so, and now it's 128, but recovering. Texas Instruments, Micron also on the upside. Dow leaders tend to be financials and defensive stocks. I've been commenting on the banks. They're having the biggest ones are having a really nice little run. Goldman's been strong. JP Morgan's been strong. Bank of America strong. Wells Fargo's at a new high. That's a noticeable trend. Defensive stocks are not leadership groups, but Procter & Gamble have been okay. They had the earnings last week. It's been up since then. Johnson & Johnson had earnings, what was it, early last week, was it? And they're trading to the upside as well. Big names. There are some big names having a terrible time that you all know and love. Tesla down again today. It's down, what, 40% this year. That is very close to a 52-week low. Let's call it just about. Apple, believe it or not, down 14% this year, is also not far from a 52-week low, 1 or 2% away. And Boeing, same thing. That's down more than 30% this year, also near a 52-week low. What I am excited about is the IPO market. We had a bunch of them last week that are holding up very well. We're going to have a big one this week. Rubrik down here at the New York Stock Exchange should be trading this Thursday. That's a big data security company. That's going to raise a lot of money, close to $700 million. And we also had an announcement just this morning about another IPO be trading next week that you all know, Viking. This is the Viking Cruise Company, of course. They're set to start trading May 1st. That's, again, NYSE IPO. This is scheduled, $44 million, 21 to 25. You do the math here, Tyler, that is close to a $1 billion IPO at the midpoint. So we're getting several weeks in a row where we're getting $1 billion to $2 billion in IPO money raised. That's what we used to do prior to COVID. You do $1 billion a week, and you get $50, $60 billion a year. But 2022 and 2023 were awful. 2024, at least April, really looking pretty good. Tyler, back to you.
All right, Robert, thank you very much. Our next guest says the outlook for the economy and for corporate America are strong, and even sees a rate cut delay as a positive because it keeps more dry powder for the future, which can lengthen the market cycle. For more, we're joined by John Porter, CIO and head of equity at Newton Investment Management. John, welcome. Good to have you with us. Among the other things, well, why don't we start with the interest rate argument here? You're putting on your positive hat and saying that if we don't get 6 cuts, we don't get 3, we might get 2, we might get 1. It's all good. Why?
Well, I wouldn't necessarily say it's all good, but I think it's generally pretty favorable because I think you have to look at the reasons why the rate cut's been delayed. And a lot of it's because the economy continues to be so strong. I mean, we're looking at a first quarter GDP print we'll see later this week that's probably going to approach 3%. The market's not exactly demanding rate cuts to fuel economic growth. Admittedly, inflation isn't coming in quite as fast as some market participants were expecting at the beginning of the year. But inflation does continue to improve, and I think the outlook is when, not if, that we're going to see rate cuts. And I don't mind seeing them delayed because, as you said, I think that provides fuel for later this year and into 2025 even.
Yeah, the assumption is that they're coming. How many? Well, who knows? But they're coming, and the market seems willing at least to tolerate that. Among the things you say, it says here in my notes, thoughts from John, small cap valuations seem very attractive relative to large cap, at least a 15-plus year low. It's been this way for a long time. So why would I think anything's going to change here and that small caps are going to have their day in the sun?
Well, that's the exact right question. Why should anything change? And I think until you see the fundamental backdrop change, nothing will change. Part of the reason why small caps are at such a discount relative to large caps is because the large caps have been driving the earnings narrative in the broader market, and the small caps have been lagging. Certainly the last 5 or 6 quarters, large cap stocks have outgrown small cap stocks by close to 1,000 basis points per quarter on a year-over-year basis. And as long as that continues, large cap is going to be where the money's going to flow in the market. Now, we see a broadening out of the economy, a broadening out of the market, possibly happening in the second half of the year based on current forecasts. Small cap earnings should be growing faster than large caps in the second half of 2024. And if that plays out, particularly where valuations are, we think small caps are poised for quite the catch-up rally, but we need that fundamental catalyst of earnings improvement to be the driver.
2 sectors you like right now are energy and small cap healthcare. Explain.
Yeah, in the small cap world, I just see a lot of innovation happening in small cap healthcare, particularly when I compare it to technology. Down in cap, the small cap technology companies aren't really driving the innovation. We're certainly seeing that led by the mega cap companies. On the healthcare side, though, the small cap companies are where the innovation engine really exists. And we're seeing the new products come out of the small cap healthcare companies. And you're seeing large cap healthcare companies having to dip down into small cap to make acquisitions to fuel their own growth. The other area I like is energy. Now, I've liked energy for a while. I think energy is very attractive because of the capital discipline we're seeing from companies. It's a new environment for energy companies. They're much smarter about capital allocation. They're going to dividends and share repurchases, not speculative investments in the ground. At the same time, the strong economy we're seeing is improving the supply picture, the demand picture while supply continues to be constrained. So I think the setup for energy in 2024 is very attractive.
All right, John Porter, thank you very much. We'll have you back soon. Appreciate it. Thank you. John Porter. Cool. All right, the VanEck Semiconductor ETF hit hard by last week's sell-off. Shares are down 8% over the past 7 days, now 16% off its 52-week high. And it's not the only chip name seeing some weakness right now. NVIDIA and Micron all down over 9% since last week. But our next guest says this downturn is pretty common this time of year. And while the sector is dented, he's not deterred. For more here, we're joined by Vivek Arya, Senior Semiconductors Analyst at BofA Securities. Vivek, welcome. Good to have you with us.
Thank you, Tyler. Thank you for having me.
Why are you less worried than some about semis?
Sure. I think that volatility is par for the course for the semiconductor sector. If I look at the last decade, we have had 10 to 12 10% plus corrections in the sector, but the SOX index has compounded 26% annually, which is 2 times what the S&P 500 has done. So it is a volatile sector. It does very well in Q1 and Q4. But as we get into Q2, that's when, just before earnings, there happens to be this bout of volatility. In fact, April, the month of April, has been down 8 out of the last 10 years. But you know what? The month of May has been up the last 9 out of the 10 years. So that's the seasonal. But more importantly, when you look at the growth leader in the space, which is NVIDIA, the addressable market for them is growing. Their execution is extremely strong right now. Their pipeline is extremely strong. And most importantly, the stock's valuation at about 25 times next year's numbers. That's exactly where the stock has troughed the last 3 times it went through this kind of volatility. So we think that volatility is part of the course for the sector, and the growth leader is doing extremely well right now.
And so you like NVIDIA, but what about other names in the semi area that you like as well, and some that you might avoid?
Sure. So I think the analysis really starts with where can we trust the spenders. So if I look across all the different end markets, the spenders that are really investing the most heavily are all in the data center, because they are in early phases of building out their large language models, of building out their cloud infrastructure. We think we are just in year 2 of what is probably at least a 3 to 4 year deployment cycle for them. So we like most of the names exposed to the data center. NVIDIA is our top pick, but also names such as Broadcom, such as Micron, Marvell, AMD. And I think a number of these names benefit because they are all exposed to different parts of that build out. Some are doing better on the computing side. Some are doing better on the memory side. Some are doing better on the networking side. But all 3 of those sides have to essentially come together to help the cloud customers build out this infrastructure.
Are there winners potentially in areas that are not so directly tied to data center? We hear a lot about the data centers, but obviously that's but one area of sales opportunity for semiconductor companies. Are there other areas, other companies that could see growth?
Yeah, Tyler, and you might have heard us talk about the 3 C's of semis: cloud, cars, complexity. These are the 3 places where we think there is enduring growth in the sector. So cloud computing, we just discussed. I think the next interesting area is just the rising complexity of chip making. So names such as KLA, Applied Materials, Cadence, Synopsys, I think these names are levered to the secular growth and complexity of designing these chips, or manufacturing these high-end systems. So complexity area we like. And then cars. I know that there's a lot of concern about just the pace of EV adoption, but if you look at an average car that sells globally, it is the cost is about $35,000, and the amount of semiconductors in it is only 2%, or only $700. But look at every feature the consumer cares about, whether it's electrification, safety, security, infotainment. So we think over long periods of time, as much as it is cyclical, we do think that automotive semiconductors and names such as NXP Semiconductor, I think are also positioned extremely well outside of the data center and cloud computing area.
Does weakness in the auto sector, for example, Tesla cutting the price, which is certainly a signal that they need to juice up their sales, does that worry you at all here?
Yeah, for sure. I do think that last year global auto production was up 9%. You know, we saw 30+% growth in EVs. This year auto production will probably be flat, and the growth in EVs is probably going to be more like 15-20%. Now, as much as Tesla may not grow this year, or the growth rate is being challenged, remember that growth rate of EVs outside the US is doing quite well. In China, for example, is doing very well. And that's the important thing about the semiconductor industry, that these are companies that are exposed to the global market, not just the US market. So for, let's say, a Tesla that may or may not be doing well, you have this secular adoption of semiconductors across hybrids, across traditional ICE cars, you know, because every consumer cares about safety, security, you know, infotainment. So it's not just EVs. I think outside of that, there is semi adoption. And then look at customers outside of the US as well. So it's a global industry. And then valuations also, I think, are a lot more reasonable. NXP trading at 16 times this year, 14 times next year, I think is extremely compellingly valued at this point.
Very interesting. Okay, Vivek, thank you so much. Vivek Arya, we appreciate your time.
Thank you, Tyler.
Bank of America. All right, coming up, Disney could be taking a page from Netflix, and our next guest sees it leading to meaningful streaming profits. He tells us what it is and how much upside he sees ahead for Disney. Plus, 3 more names are getting ready to report. We've got the action, the story, and the trade on GM, Lockheed, and Philip Morris International. Before we head to the break, check out shares of Wolfspeed, surging 14% on a Reuters report that activist investor Jana Partners is urging the company to explore a potential sale and other strategic alternatives. Wolfspeed shares down 42% so far this year, but up nearly more than 10 today. The Exchange returns after this.
This is The Exchange on CNBC.
Trial. All right, welcome back to The Exchange, everybody. Disney's plans to crack down on password sharing is raising concerns about subscribers and revenue. But if Netflix's history is any indication, Disney will do just fine. Our next guest says the percentage of Netflix users may have dropped, but the company did add more than 8 million members in North America over the past year. Meanwhile, revenue up 17% in the first quarter, and he sees meaningful streaming profits ahead for Disney as well. Joining us now with more on the new streaming playbook is Ben Swinburne, head of U.S. media research at Morgan Stanley. Ben, welcome. The password sharing does not seem to have dented Netflix all that much, which must hearten some of the other companies that are considering doing this.
Yeah, I would say financially, Tyler, it's really worked out well. A couple years ago, Netflix wasn't growing. One of the ways they talked about accelerating growth was identifying that over 100 million homes around the world were using Netflix without paying for it effectively. And by the looks of their results for the last year, they've had a lot of success converting a lot of those users into paid subscriptions or extra members. And you read the results yourself. The best North American net adds quarter that they've had since 2015 was reported last week. So it seems like it's working really well for them.
Would you say that those great net adds that they had in the first quarter came largely from the password crackdown, or was it organic? How would you sliver that up? You see, get the import of my question.
Yeah, of course, and it's an important one. I mean, I think, look, Netflix is about a year in. They literally started really implementing paid sharing about a year ago now. So we think that the impact, the benefits to net ads probably peaked a year ago, and they've been moderating since. When you look at 2023 and 2024, these are a couple years now that look like Netflix will add somewhere around 30 million members a year. That is well beyond paid sharing. Some of the content they had in the first quarter, Three Body Problem, as an example, I think really demonstrates that the core part of the product is working in the market. And one of the things we've written a lot about is just the fact that everybody in streaming is raising prices. So the market's become less competitive for Netflix as the leader, and I think that's helping them as well.
Does the fact that Netflix is sort of doing away with the subscription numbers as a featured metric, does that take some of the pressure off some of its competitors because they don't have to measure up to, everybody benchmarks off of what Netflix was doing?
Yeah, it's not a bad point at all. I mean, I think so this will happen next year, right? So probably this time next year will be the first quarter Netflix will report without giving us a specific member number. I think they'll still give us some qualitative commentary around it. But yeah, look, I think over the long term, this is a disclosure shift that you may see adopted around the industry. Streaming is maturing, particularly in the US. And I think what Netflix is focused on, their North Star is revenue and profits. And frankly, that should be, and I think is the North Star around the industry. So this could be the beginning of a shift in disclosure over time across the sector. I don't have any expectation of any changes anywhere else anytime soon, however.
We've got all of these streamers out there. We've got the Netflix, we got your Disney, we got your Warner Brothers, we got your Comcast, your Peacocks, we got all of this. In the end, 5 years from now, Ben, how many real winners are there likely to be? And which will they be?
Well, look, Netflix is pretty clear. I don't think we're making a lot of news here by describing them as a winner. They're generating
perfect. They're like the Dodgers. They're going to be good every year.
Yeah, or I'll go with the Yankees if you don't mind. But yes, look, we think Disney is quarters away from meaningful profitability. Warner Brothers Max also kind of knocking on the door of kind of annual profitability for their business as well. But after that, the rest of the players are, still losing lots of money. So I think after we get through those, call it 2 to 3, real question marks remain.
Real question marks. Well, appreciate the clarity of the call there. Ben Swinburne, Morgan Stanley, thanks very much. We'll see you again soon.
Thank you.
Appreciate it. All right, coming up, at least 2 things are still getting more expensive. That is chocolate and luxury homes. But buyers of both are still paying up. We will dig into that next. Plus, from Larry Fink to Bob Iger, so-called anti-woke backlash has some of Wall Street's most recognizable names beefing up personal security. Will the responses from fringe groups and activists deter sustainable investing? We will discuss that. Welcome back to the Exchange, everybody. Cocoa prices keep hitting records, making it one of the hottest commodities of the year by far. For more on what's behind that price spike, let's bring in Frank Holland. What's happening in cocoa, Frank?
Well, hey there, Tyler. Good afternoon from London. Okay, so cocoa, obviously the key ingredient in chocolate, is having a somewhat of a mysterious rally. It's up 300% over the last year. Of course, that's raising the cost for major chocolate makers who also raise consumer prices. Still, U.S. chocolate demand, that increased about 9% from Q4 to Q1, with 5% increases in both Europe and Asia over that same time period. The primary reason for the price spike is a crop shortfall in West Africa, where just about 3/4 of all cocoa supply is grown over 2 seasons. The spring harvest, which is underway right now, is forecast to have a 10% shortfall, according to the International Cocoa Organization. I spoke with the executive director. He cited aging farmers, plant disease, and climate change as some of the factors there. However, there really isn't a clear-cut reason, and traders say that mystery is what continues to push prices higher.
The major issue today is I can't tell you exactly, I cannot put my finger on the exact reason why the crops have failed in the way that they have this season. And as I can't be categoric about the reasons that they failed, that means I can't be categoric about whether it's going to happen again or not.
And this cocoa rally's had a big impact on companies. Hershey's was downgraded ahead of upcoming earnings on concerns about margin due to rising cocoa prices. You can see other chocolate makers, their stocks are down year to date. Citi put out a note saying we're seeing the tightest cocoa market in the last 50 years.
Watch here, guys. Watch here. Nice little double bottom. Let's see. Let's see what happens. Where are we at here? I'll do a few for this week and next week. Let me see. Shit. It's going. It's going. It's going. Damn it. What is going on there?
Good to see you. Frank Holland in London for us. Good to see you. Frank mentioned the chocolate companies. Hershey has actually held up better than the rest of them.
Bro.
That's one of the reasons why MAI Capital's Chris Grisanti, a good friend of this program, likes it. He told us a month or so ago that the company is
unfortunately,
profits flat, even though cocoa prices have risen fourfold. He says good management execution combined with a tailwind when cocoa prices come down make this stock a buy for him. Well, it's a tale of two real estate markets. While the broader housing market is suffering from high rates and low inventory,
everything's starting to get a bounce, everybody. Looks like everything is starting to get a bounce. That's what we want to see.
has more on that story. Cash is king, Robert.
Cash is king, Tyler, now more than ever. Real estate sales overall falling 4% nationwide in the first quarter, but luxury real estate saw the biggest increase in 3 years.
All right, so again, I'm looking for 365 or so. Let's see. See if we can hold this here. See if we can hold this. 350.
Cash deals accounted for a record 68% of all sales. Now, all
Let's
that
see.
cash is pushing up prices. Luxury home prices went up 9% in the quarter. That was twice as fast.
Let's see what happens here.
Higher prices are drawing more buyers. The number of luxury homes for sale.
Keep a watch.
13% in the quarter. That compares to a 3% decline.
Boom.
For the rest
Get this thing ripping and roaring, guys.
inventory there. Now, the market with the fastest luxury price growth was Providence, Rhode Island.
315 or 350 calls this week, and then we'll split it up. Maybe get some next weeks or so.
Where the wealthy are putting their money. You can sign up for the new Inside Wealth newsletter. That's cbc.com/inside.
I'm trying to figure out whether I want a limit order or market order in.
doesn't surprise me. We know what's going on in those markets, but Providence, Rhode Island surprises me. Maybe they're selling them out there in Newport, and Providence is part of Newport, or Virginia Beach for that matter.
Yeah, Providence, remember, this is a percentage price increase, so it may not mean that
Boom. That might be it right there. I can't see the timing.
Prices have gone up among that top 5% of homes by price. So that's how you define luxury. in that market. So it just could be that a lot of homes are getting up to that price, and those at the top have seen, you could get a small number of deals in Providence that could push that higher. But again, it's interesting how dispersed. And New York, by the way, had a 10% decline in prices. So we think the usual wealth hotspots, it's not where this growth is coming. It's coming from those outer markets right now.
Very interesting. Robert Frank, thank you, sir.
I'm just watching. I'm just sitting here watching it, guys. I'm not in anything yet. Look, 16.
But price among that top 5% of homes by price. So that's how you define luxury in that market. So it just could be that a lot of homes are getting up to that price, and those at the top have seen, you could get a small number of deals in Providence that could push that higher. But again, it's interesting how dispersed. And New York, by the way, had a 10% decline in prices. So we think the usual wealth hotspots, it's not where this growth is coming. It's coming from those outer markets right now.
Very interesting. Robert Frank, thank you, sir. And let's go now to Courtney Reagan for a CNBC News update.
Hi, Tyler. Well, as Ukraine aid passes in the House and makes its way to the Senate, President Biden renewed U.S. commitment to Ukraine in a phone call today with President Vladimir Zelensky. According to the White House, Biden assured Zelensky that aid would arrive as soon as the Senate passes the National Security Supplemental Package and he signs it into law. Federal food safety officials issued a health alert for potentially contaminated ground beef. They warned this weekend products that were produced in March and shipped nationwide may be contaminated with E. coli. The items in question were produced March 22nd and have a use date of today. Check your packaging. E. coli can cause food poisoning and other gut infections. And the Rock and Roll Hall of Fame has announced the latest group of inductees. Artists include Mary J. Blige, Cher, the Dave Matthews Band, A Tribe Called Quest, Ozzy Osbourne. Those are among the members of the class of 2024. The induction ceremony will be held on October 19th in Cleveland, Ohio. Tyler, back over to you.
My wife will be thrilled that Cher has made it. She is a big Cher
It's been a long
fan.
time.
All right. Thanks, Court.
Thanks.
Coming up, we got cars, cybersecurity, and cigarettes. We have the action and the story and the trade ahead of reports from General Motors, Lockheed Martin, Philip Morris. Earnings exchanges next. And don't miss the 2024 CNBC Stock Draft featuring WWE superstar Charlotte Flair, NBA champion Kenny Smith, the Jet, WNBA champion Breanna Stewart, and more. That's this Thursday, 2 p.m. Eastern on Power Lunch. Welcome back. Earnings season in full swing, and we are going to look at General Motors, Lockheed Martin, and Philip Morris in today's earnings exchange. They come out tomorrow before the bell. Here with our trade, Jeff Kilburg, KKM Financial founder and CEO, and a CNBC contributor. Jeff, welcome. Good to have you with us. Let's start with General Motors. The shares are up today. 8-day losing streak seemingly in the rearview mirror. Deutsche Bank says GM is the best positioned automaker into earnings with strong pricing, sustained cost-cutting efforts, but Deutsche watching spending on the more speculative EV and cruise programs. What's your view on GM here?
Well, Tyler, I agree with those analysts talking about what they're going to see from a perspective of what's the uncertainty in China. What are they doing with the slowdown in EV? But I want to be a buyer here of GM, and that's due to the fact that it's had a great year to date. It's had a great 1 year, but there's still more room to run. If you look at a 3-year perspective, Tyler, it's still down about 25%. And by and large, at about a 4.7 times forward PE ratio, it's not that expensive. So I think there is opportunity here, but we really are going to be focused. I think it's critical, not just for GM, it's for Ford, it's for all the motor companies to get a better understanding how are they going to handle the slowdown in EV, and more importantly, how are they going to grapple and digest the China uncertainty. But I own Ford as well as GM, but I think GM has the opportunity to move back higher. Just remember, Ty, about 2 years ago, it was trading up over $65. And here in the mid-40s, it seems to be offering a discount.
Yeah, and it's up 46% 6 months, 18% year to date. As you pointed out, it has been kind of a stealthy gainer here. Let's move on to Lockheed Martin. Shares flat to start the year despite global geopolitical tensions. JP Morgan lists further escalation in the Middle East, delays in F-35 deliveries, and a new air defense contract with the U.S. military as some of the key factors to watch. How would you trade Lockheed into earnings? You'd kind of think that a defense company of this scale would be a market winner. So far this year, it has not been, up 1%.
That's right. And I think if you look at the environment we are geopolitically, this is a name we want to own. This is actually a name that I owned for quite some time, the Essential 40 portfolio. But if you think about it, this is a blue chip essential defensive name. It's got yield nearly 3%. It's got a very low risk profile. If you look at the year 2022, Ty, when you saw the NASDAQ 100, the S&P 500 moving lower, this was able to find some investors to come into the marketplace due to the fact of its risk profile with a beta of only 0.48. So I like the defense contract. It still has some room to run. It is slightly overbought, though, Ty. If you look on a relative strength index measurement, it's above 70. So it's interesting to see the all-time high at $508. Not that much higher in here, but you think the world we're living in, the amount of money we're spending, not just as a government, but as a globe on defense, I think Lockheed Martin moves higher.
All right, let's move on finally to Philip Morris. The shares slightly lower so far this year, but Stifel sees potential in Zyn, its nicotine pouch, and other smoke-free products, while also noting solid growth in its heated tobacco business. What an interesting way to put that, heated tobacco, as the company looks to reduce manufacturing costs for both. What would you do here with Philip Morris?
Well, the heated tobacco, a.k.a. smoke-free tobacco, which is actually, Ty, about 1/3 of revenue now for all of these tobacco companies. But I'm a little bit negative on Philip Morris due to the fact it looks like the technicals are rolling over. I know there is optimism because they will be able to sell. They bought from Altria. It was about a $3 billion price tag. The rights to start selling their heated tobacco or smoke-free tobacco. So I think that will ramp up in late 2024 and potentially 2025 when it's more rolled out domestically. But right now, if you look at this stock for 3 years, it's flat and it's gone nowhere. So this is not where I want to put my money. I can't come up with a pun right now to really give you something, a zinger for Philip Morris, but I'm taking this and putting it on the ashtray. No, thank you.
Thanks a lot. Jeff Kilburg, KKM Financial. We appreciate it.
See you, pal.
You bet it. You bet. Coming up, stocks rallying. The Dow now up more than 300 points, up 323 at the high. There you see it higher by 317. S&P and NASDAQ also near highs as you look down at the ticker there. But it's been a rough month for tech. Recent history may not repeat itself with 4 of the Magnificent 7 reporting this week. We will look at how big tech has matured since the 2022 sell-off and what that could mean for shareholders like you. Next.
CNBC.
It's been a bit of a tough month for the mega caps. 4 of the biggest tech stocks in the red for April, but Meta, Alphabet, Microsoft all report this week. So could it be an opportunity for a bounce back? Deirdre Bosa takes a look for today's Tech Check. Hi, Dee.
Hey, Tyler. So for tech investors that are feeling nervous about the recent sell-off, free cash flow, that is a key metric to watch this earnings season. It is a signal of a company's ability to pay down debt, reinvest in the business, or return capital to shareholders. And mega caps have more of this than ever. This chart looks at free cash flow at the end of 2021 versus now for the big 6. And it could potentially raise the potential of a dividend or a buyback boost that could underpin results in the coming weeks because Wall Street loves dividends and buybacks. Typically, though, tech companies reinvest for growth. That's been changing. Meta surprised the street earlier this year by issuing its first ever dividend, leading to speculation that Google might do the same. BofA is forecasting that Apple will re-up its buyback and increase its dividend by 5%. Now, in the past, mega caps have put some of their huge cash piles to work by acquiring companies, but the current regulatory environment has been a lot tougher to get deals done. We've seen that. And that could potentially be more reason to return cash to shareholders. It's a bit counterintuitive, Tyler, because you don't think of tech as returning capital to shareholders.
Amazon, I note, has been an unlikely buyback candidate. What's changed there?
It has. It's that Jeff Bezos day one mentality, right, where you invest every penny back into the business. On top of that, Amazon hasn't been consistently profitable. It turned that way over the last few years. It is hard to imagine an Amazon under Jeff Bezos doing a capital return program, but under Andy Jassy, maybe more of a possibility. You're looking right now at those big 6, and you can see that Amazon is the only name on that graphic that doesn't offer a buyback or dividend. There you go. Jassy, though, seems more responsive to Wall Street. There's, he gets on the earnings call. That's something that Bezos hadn't done in many, many years. He talks a lot about efficiency. So who knows? And that free cash flow pal, bring it back there. It was negative back in 2021. Now it is positive. So who knows? It could be next.
Dee, educate me a little bit here. We're, I guess, prone to say that the AI race is between 2 and maybe 3 players, Google, Alphabet, Microsoft, maybe Amazon. But I keep hearing Meta sneaking in there, that they may be a real up-and-comer. Am I wrong or right about that?
You're absolutely right about it. They're taking very different strategies, right? Microsoft kind of exploded on the scene with ChatGPT, which is a closed model. You saw Gemini from Google, also a closed model. Amazon's doing like a bunch of different things that are a bit less clear to investors. But Meta came out really swinging last week by just incorporating GenAI and its Llama large language model into its family of apps. So we're at this phase, Tyler, where last year we kind of looked at the picks and shovels of the AI race. Who's actually using it in applications? That is sort of where we are now, what we're going to be looking for in the next few weeks. And Meta kind of leapfrogged ahead by just putting it into its existing products, which has a distribution of billions of users, right? And it has been developing its own large language model, which is open. So it kind of means that it crowdsources from a bunch of different developers. So very different strategy, but absolutely Meta is a contender.
Interesting stuff. Deirdre Bosa, thanks very much. And
Thanks,
coming
Ty.
up, these shares down about 2% year to date, but could its recycling efforts turn things around? That name and 3 other environmentally friendly stocks to buy on this Earth Day. That's next.
humanly possible.
Welcome back to The Exchange. Once a hot buzzword on the street, ESG investing has become a target of sort of anti-woke activists who say it makes companies misuse capital, leading to lower profits. Now, the backlash has gotten so bad that some executives have had to increase their personal security details. The Financial Times reporting that BlackRock CEO Larry Fink has become a prime target, leading the company to triple his security spending last year. But in honor of Earth Day, we are going to look nonetheless at some of the names making strides in ESG today. In a special edition of 3 Buys and a Bail that we're calling 3 Buys and a Maybe. The Maybe is a name that's not on my next guest list of sustainable companies, but is, however, making big progress in sustainable practices. Joining us now for more is Helen Bugwa-Kahuki, Director of Research at Calvert Research and Management, a big socially responsible investment company. Helen, welcome. Good to have you with us. Let's start, why don't we, with Constellation Energy. And I guess it's a little bit surprising that your leadoff stock would be an energy company. Why?
No, thanks for having me, and happy Earth Day to you. So we actually view nuclear energy as one of the most important assets for decarbonization of the power sector. So investors' perceptions on nuclear have actually changed quite significantly, especially following the IRA Act of 2022, which created new production tax credits, or PTCs, for existing nuclear plants.
Sorry, guys, I'm here.
Constellation Energy has a highly strategic asset base that will get more.
I was just doing something real quick. It may not be time yet, but just keep an eye on watch. You are back above the 9 EMA. We'll see here. I'm still watching AMC. I'm still watching a few things here. AMD was a nice trade that worked out. Did anybody take that? We said look for the range. We said you got to be a buyer. $15. Or, I'm sorry, $150. Look for, oh my goodness. $147. Look for a move back to $150. She's doing it. Old Baidu, relative strength. She running and gunning too. I gotta use the restroom real quick. I gotta pee. Alright, I'll be right back, guys. Yo, hit that motherfucking like button. Something. Let me know what's up. Where are you watching from? What country you in? Yo, are you serious right now? The whole time I was making that, this is going on? Bro, stop it. Are you kidding me right now? Oh my God, bro.
Investing for 40 years, but really taking a more nuanced approach when we look at the sectors or trends or companies in particular.
Interesting. All right, let's move on to our second stock here, and that is Lennox International, climate control products company, up slightly so far this year. What made you lean toward this one?
The reason why we like Lennox is because it's a leader in energy efficient residential and commercial.
Look at Goldman Sachs. You're shitting me, bro.
That both lowers like energy use and carbon emissions. So climate control is actually a key pillar of global adaptation for economies and populations. As buildings account for about 1/3 of emissions, energy emissions. So elements.
How foolish of me, man. How foolish of me. Let's go, Goldman. Let's go. Sitting here talking about AMC and shit, and the overall market's ripping and roaring. That's wild. Not really. Notice how AMD is not doing this, guys.
Equipment recycling which is also positive for the environment.
All right, let's
That's
move
not-
on to
that's not
the
a good
final
look.
buy, and that is Waters Corp. Shares down about 9%
Not a
so
good
far
look.
this year. Testing equipment.
It should be up
for
here.
PFAS chemicals,
Testing
also known as
151, 154
forever
even.
chemicals. They're common in
Something.
consumer products, and you say that this
So,
could be a
you
key
can tell right now
growth driver as more municipalities and others require testing of those.
So you can see now semiconductors are lagging the market. Sorry, I was just going to go grab a snack real quick. Just give me 1 second. Just give me 1 second. I was going to say secondito. Right? That's how I say that's how I speak Spanish. Like I'll say, "Give me cookie way," or like I don't know. So yeah. So I don't know. Yeah. Leche. I gotta go get some leche.
Regulations in Europe. We're also seeing New Zealand and the likes of Australia, and also like specific like US states start to set up some sort of controls around this PFAS issue. So we think that given the fact that Waters Corp has been, investing heavily.
First person to spell her name correctly, I give $100. Say it out loud. I want to hear it recorded, and I want you to say it.
Especially given the global footprint that it
I feel
has.
bad for whoever got to try to do that.
And we asked you to give us a name, a top pick
Without
for a company
hearing
that
it
is not
first.
on your sustainability list, but you see making progress, and you chose the maker of Barbie, Mattel. That was our mystery chart, by the way. What potential do you see there?
I think Barbie's story kind of pivots us. It takes us away from emissions, and another environmental topic that we're very keen on is just the whole idea of plastics. So the issue with plastics is that it's not a biodegradable, or it doesn't biodegrade. And so the toy industry, though, is one of the highest like plastic intensity industries in the consumer goods specifically. And so Mattel, we like Mattel because it's a turnaround story that we like in regards to like it set up like really good targets around achieving.
Can you recycle Barbie? Can you recycle Barbie and melt her?
It actually does. Actually, one of the key things about them that I thought was interesting is that they have this Mattel Take Back program.
Right.
That also includes Barbie, and you can actually you can actually send back your old Barbies back to Mattel.
Send back your old Barbies. Helen Mbugua Kahuki, thank you very much for your time.
I was waiting
Exchange
for it.
Power Lunch is next. Contessa,
Before I
we're
went.
getting ready.
He
I'll
did
join
it.
her on
He
the other side
tried.
of
He
the
did a
break.
good job. Clap it up. Clap it up. Clap it up. He did a good job. Overall strength in the market. Give me 2 seconds. I'll be right back. See if we can't see what happens this afternoon. Again, I'm not rushing. I'm not rushing. Don't forget, man. You might get up here and then you got some nice volume and whatnot. We're at least making way. I'm still watching this area here, guys. The area I would watch for is 504. 504, boys. That one's a rough one. 504, 503. That's the one you got to be careful for. Look for a pullback to 500. 499, 500. And see if you can't get a nice little rally off of there. The level again, I shall repeat it, was Friday's high, 499. 499. Even though you already kind of made it support, I would say it's right there. Why does that say 5 and I said 499? That's so weird. Hold up. Oh yeah, 499.95. So yeah, they did it. They did it already. Brutal. I cannot believe I got stuck watching fucking AMC like a dumbass. Like a fucking...
Kiss.
Welcome, everybody, to Power Lunch alongside Contessa Brewer. I'm Tyler Matheson. Glad you could join us. Ahead on our program, C-Suite ramping up security as more executives take social stands on behalf of their companies. Companies are investing more and more into personal protection. We will discuss that.
Plus, we're already seeing backlash on social media over the potential passing of a TikTok ban added to an important foreign aid bill. We'll dive in on that.
But first, a check on the markets. They are slightly higher today, coming off a rough previous week. But we are heading into key few days now for earnings. Big tech reporting results. Meta, you got Meta, Alphabet, Microsoft, all on deck. And for that, let's go to Steve Kovac with a look at what to expect. Steve.
Hey there, Tyler. Yeah, so it's going to start this week with Meta on Wednesday, and then we get Microsoft earnings and Alphabet on Thursday. Amazon and Apple, they're coming next week. And I wanted to take a look at each one of these names through the lens of AI, which, of course, not big businesses yet for any of these names, but some are progressing more than others. So let's call this your AI gut check. Let's start with Meta partnering with Google last week to power a new version of its Meta AI chatbot. The most important thing here for Meta is engagement, proving that this keeps people using Meta apps like WhatsApp and Instagram and, of course, Facebook. It debuted to millions of users last week, so a huge user base to play with there. Then we got Microsoft. One thing to listen here is any hints at Copilot sales. That's the digital AI assistant they're selling, and a little taste of AI revenue growth from the Azure Cloud unit. And then over to Alphabet, just reorganized its finance and product teams around AI ahead of the report this week. That includes bringing AI researchers into the broader AI unit called DeepMind. And then next week, we'll start with Amazon. Not much consumer facing there in AI, but does have a lot of AI hosted on its AWS cloud. And that is the metric to look for, sales growth there. And then Apple, the laggard of the bunch here. Not much of an AI story right now, but expecting that to come at the developers conference in June. More concern right now around declining sales in China. And notably, like I said, shares are only -1 of the group, down 14% year to date, guys.
All right, Steve, thank you for setting us up there. For more on tech earnings, let's bring in Brent Thill, senior analyst at Jefferies. It's good to see you today. Brent, what do you see in the tone of tech going into these big earnings?
The tone is really mixed. It's overweight semis and hardware, and it's really negative software. I'm primarily a software analyst. So software's down 2%, semis are up 16% year to date. So it's very different. We're dealing with kind of beach weather and semis and hardware. We're dealing with Arctic blast inside software right now. And so I think it's so negative in software. It bodes well for a lot of these companies because everyone has been making so much money owning Dell, owning NVIDIA, that they've had no time for me. They don't really care about the group. And I think that's a signal. In the last year and a half, I haven't seen it this bearish on software. So, semis and hardware have been the area that investors have made the most money. They want to continue to ride those stories. But I think at some point, you're going to see a transition inside tech back to software. I think everyone's waiting for the summer, waiting for more AI data points. And, a tale of a beach and an Arctic blast in software. So it's very mixed right now.
And who wouldn't rather be on the beach? Let's start with Meta then about earnings this week. You heard Steve Kovac there talking a little bit about AI increasing engagement in Instagram and WhatsApp and really all of its broader platforms. Talk to me a little bit about the opportunities with Meta.
Meta has some of the best checks in the internet. Advertisers continue to go there because of the effectiveness of their platform. So we continue to see really high engagement. Advertisers are spending more money. There's definitely been a shift to Meta, even away from Google and other social platforms. And the checks have been phenomenal. And they've been trending that way since last fall. And I think this goes through, you know, the privacy lapse, the refocus in AI, and the quality of the Instagram platform is like no other platform for advertisers to be on. So we continue to hear good things. They will generate incrementally more ad dollars than the rest of the industry. They effectively continue to be very disciplined on expenses. So Zuckerberg, every call opens up and says, we have 3 billion people touching our platform every day, and we're focused on doing it efficiently. If he keeps with that tone and they continue to roll out some of these innovations like they're doing with Meta AI, there's going to be more users that want to be on the platform. So hearing continued really good things from the field about where they sit.
I was speaking last hour with Deirdre Bosa about Meta and whether it gets sufficient credit for its positioning in AI, and that it may be sort of a stealthy gainer in that area. Would you speak to that point and compare it on AI with, for example, Microsoft and Google?
Yeah, I think they're stealthier. I think if you think about where they sit, right? So if I'm sitting in my office, I'm not using Meta, I'm using Microsoft. So I look at Microsoft and Amazon as a great way to play AI for the enterprise. And for the consumer world, Meta and Google and others are in a better position. So we kind of put our investors in different buckets of, hey, this is more of a consumer-facing story today. Over time, Meta could get into the enterprise. They have open source Llama, which is their one of their AI languages. We think that could be a really big business over time. So today it's largely consumer-facing. It could be over time they have a mini enterprise business inside the company. But today it's, you know, simple things like you're a small business and you want to have a sidewalk sale and you want to create a campaign. Well, with AI, you can create these campaigns with with not bringing in expensive video shoot and makeup artists and all these things to create the campaign.
And
finding people on the platform
Brent,
is another big thing.
You think that the AI winner out of this group, though, is Microsoft. Why?
In the enterprise, and for a consumer, it'll be Meta. But for the enterprise, Microsoft has led the charge. They've been out in front. Nadella has nailed this. They have partnered with the best AI company, OpenAI, and they've effectively ingrained it in every single product manager that you're going to have a co-pilot in every one of these businesses, from apps to infrastructure to security, all the way up and down the stack. And they're monetizing this better than anyone in software, and they're the most trusted right now, which is a huge thing in AI. And so for the enterprise, Microsoft will win, and they are laps ahead of anyone else.
Brent,
in consumer, Meta will be in a really good spot.
Really appreciate your insight, Brent. Thank you for joining us today, Brent Thill.
Thank you.
Already many investors hoping those tech names can help the market regain a little bit of its footing as the S&P comes off 6 days of declines. Are stocks oversold, or will Fed policy drive us maybe even lower? Joining us now to help dissect last week's downturn, Michael Farr, Chief Investment Strategist with Hightower Advisors, CEO and founder of Farr Miller in Washington, also a CNBC contributor and one of the longest-serving ones of all, if not the. Michael Farr, welcome. Good to see you. You say the markets may be due for a bounce. What tells you that? And to the minute, when will it happen?
Okay, to the minute, I think it's happened, Tyler. Thank you very much. I usually never answer that question with a straight answer, but it does seem that we followed a pattern last week that started out again today. Futures were a little bit higher. They couldn't sustain any strength, and every day followed the same pattern where stocks just traded lower and lower and lower. A little bit of strength in the morning, lower. Showed that again this morning. They did indeed move lower, and then they found support technically and have risen higher. I've got to tell you, Mike Santoli, in his weekend article, absolutely nailed it. One of the best articles I've found in a long time. He's so good. This guy is so good, but I commend this article to everybody. They should really read it. Mike's line was, the work of a pullback in a bull market is to unwind over-aggressive positioning, drain excess optimism, reset expectations, and take prices down to meet fundamental buyers' convictions. That's what I think we've seen so far. So we've had a pullback in a bull market, have the fundamental buyers come in. We need to see another day or two, but certainly a bit of a bounce here. We could revert, But this is the bounce you look for, at least to put us to the end of those 6 days, Tyler.
And yet you think the fact that there's a bounce does not necessarily mean that there is another leg higher in this bull market, right? Or what should my interpretation
Absolutely.
be? Yeah.
Absolutely. So what happens now on a technical basis is the stock prices will have some rally, and we'll see if this is sustainable. We've reached an oversold condition, and now we're going to see if this bounce back is sustainable. The Fed's in a quiet period. I think you probably get a little more strength out of all of these earnings calls this week, and then it'll be back to the Fed. We've been through this same pattern with the Federal Reserve, where the Federal Reserve and FOMC has said we're going to be data dependent and we're going to be really cautious until we see the real whites of inflation's eyes. The market's created its own narrative of 6 or 7 eases this year. The Fed never endorsed that. And when the market narrative runs into the Fed's actual actions, there's been disappointment and trade downs after the Fed's meeting. We'll see if that happens again. If Jay Powell spooks the markets after the next Fed meeting again and says it's going to be longer before we see a rate cut, I think maybe you see a renewed sort of pullback and fall in prices again.
Okay, so if all of that is the case, I mean, here you're quoting Mike Santoli. I'm going to quote you. Cowards live a long time and nobody ever went broke taking a profit. Are you suggesting right now is the time to be cautious, keep your money in a money market? And what about the ultimate safe haven, gold, which has just kept climbing?
Cowards live a long time, and I am the guy who typically lays up rather than takes the long shot over the water when I'm playing golf, too. I save my golf balls that way. I save my money this way. Prices are still very high. There's a lot of conflict in the world. We're still near all-time highs. There are a lot of outsized positions. It never is a problem to trim some of those. You don't want to take capital gains for no reason, so you do have to be cautious. But the old line that you sell in May and go away, well, how about raise a little bit, take some profits if you have them in these outsized positions, do a reevaluation here at the end of April. Safe never offends. I'd rather miss out on that last 10% to the upside. But for now, the economy's in good shape. Things are okay, but things in no way are cheap right now, Contessa. Even after we've seen this bounce back today of 1.25%, I think caution is the rule, and complacency is the danger.
If I want to follow your advice and take some profits, where would you put, very quickly, where would you put that money and store it? Would it just go straight into a money fund at 5%? Treasuries, what?
So two places. One, if you don't own like the Microsoft, the Amazon and Google, if you don't have some sort of core position there, those are core positions for me. I would look at a stock like Mondelez, perhaps, that hasn't performed all that well and has pulled back for some other reasons, that has a reasonable growth rate and kind of a core position in the consumer, less riskier area. And then money market at 5.3% or 5% anywhere in there. The Treasury bill right now, 3 months, is around, again, 5.3, 5.4%. You're still getting paid to wait and be cautious. And there's a lot of money out there that seems very patient and waiting to see also the white of inflation's eyes and hear that the Federal Reserve has seen it too and that Jay Powell is going to sound the all clear.
Wow, the white of inflation's eyes. I mean, that's really
Vivid.
saying something there, Michael.
Vivid.
Thank you. Coming up,
Thank you all.
Today is Earth Day, and while investing in the future of the planet has its own returns, of course, there's a big money at stake as well. Global funding into clean energy hit a record high in 2023. Now, Massachusetts is looking to attract climate tech to the state. Governor Maura Healey joins us next.
The CNBC Stock Draft is back. Hoping to take this year's title is Brianna Stewart of the New York Liberty. If she were a stock, the ticker symbol would be MVP. She has 2 WNBA titles, 4 college championships, and 2 Olympic gold medals. Will she add to that impressive resume? We'll find out starting Thursday at 2 p.m. Eastern.
Okay, guys, sorry about that. I just went out, got something to drink, got something to eat. Well, I didn't really get anything to eat just yet. I went ahead and got some crackers and stuff. But nice rally. I missed it. I was doing a few things, and I was paying attention to the wrong stock there for a minute. Because AMC did look interesting. At least, you know, I was just watching out for it. Kind of, you know, not so correlated with the overall markets here. And, you know, you are getting your little pop here. It's going to take a little time. So if you do decide to go after that, I would give yourself time on that. Just to be safe.
Will.com. Happy Earth Day, everybody. And on this Earth Day, we take a look at the growing role of the startup space in fighting climate change. With early stage investment in clean technologies exceeding 50.
For me, I was talking about, you know, maybe grabbing close to the money weeklies. And then, but, you know, I wanted to see us get off of this level at 330. And then going out to maybe like June or so. If you, you know, I was also thinking too, if you were looking to play, like Meta and like large cap names, you could look at, let's see here. It's not here. Hold on one second. Let me get the ticker for you real quick. And the reason I'm bringing this up is because you can, let me see here. And you can, you know, I don't know because I haven't played this that much, but the options, you know, as far as the options are concerned, if you're an options trader, if you want to buy the stock outright too, that's another thing. But, you know, as far as Meta, they have earnings. Microsoft, I think, also has earnings. I'll have to go back and look at the, whatchamacallit, but, let me exit out of that. So I always think this is Newport's the Newpont with the little triangle. But anyway, so Meta, Microsoft, this is all in this, right? And I think Tesla as well. I could give you guys the exactly what tickers are in it, but you know, this could give you access to that without paying up for premium. All right, so there's always a way to be able to play something, whether it's a sympathy play, whatever it may be, and not have to pay up for premium and all that stuff like for intraday trading. So I would personally keep an eye out on that. Apple's doing pretty good today. The market's up really nicely, 1.5%. I missed this because I wasn't necessarily paying attention to the overall markets, unfortunately. But that's okay. I'm taking my time today. We'll see. I do have my area, at least for the S&Ps and the overall markets, on where I think we go to, and where would I like to try and get a reversal if we're going to get a reversal. But this is really nice. We're finally getting a day of strength here. Not sure exactly why, other than a technical relief bounce. But there are a few areas that I do like and wouldn't mind seeing. You know, we need a decent bounce back. I still wouldn't be surprised if you get like a day 2 continuation. Like where you still even come in with a gap up. You got to be careful though, because the closer we get to these earnings, we have a lot. Okay, there's a lot. There's data, there's earnings, so there's a lot to watch out for. So just protect yourself. Worry about protecting your money before you worry about trying to make any. Okay. That was my problem last week, is I made some really good money, and I ended up just trading too much and not trading the best of setups, We have a nice little gap fill here. So the first area. So now we're in this. So now you can see here on the daily chart, we're in this range here. So what I'm going to look for, did we already get our pullback here? What is that? Oh, I'm on the Qs right now. Okay. 419, 420. What is that? That is, yeah, 420. So we did pull back off of 420. You rejected it, pulled back, broke it. See if you pull into 420 and then try to rally. I got to come up with more of a watch list tonight. I wanted to see what we did today before I decided on any type of plays and stuff. And I kind of wanted to see if we had news and whatnot that came out. But Snowflake's still down. Snowflake down. Netflix up a little bit. Meta, you know, watch out for Meta. It's got a lot of premium baked into it. It's still down. Well, it's green on the day. It's green, but on the day it's still below the opening price. So let me scan through these charts real quick, and I'll be right back with you guys. See if we can't find something.
So it's just of what I'm talking about when I'm talking about this kind of synergy we can bring to bear, public, private, to incent the development and deployment of climate technology.
Governor Maura Healey, Massachusetts, thank you so much for your time today. We appreciate it.
Great to be with you both. Thank you.
Yeah, good luck. All right,
Thank
speaking
you.
of climate tech, you may think of the agriculture industry as being green, but it's actually one of the world's biggest carbon offenders. And that's why startups are coming up with futuristic ways to reduce waste. Diana Olick explains in her continuing series on climate startups. Hi, Di.
Hey, Ty. Yeah, what if I said we could now talk to plants? The plants could actually tell farmers when they're in distress, and then farmers could help them. That would not only reduce waste, but it could also streamline the use of pesticides. Sounds crazy, but it's real. Even with the use of pesticides, 40% of most food crops globally are lost to disease and pests. Agriculture already emits massive amounts of carbon dioxide, and this waste makes it worse. That's why companies like SatAgro, Climate Field View, and a California-based startup called Interplant are working to reduce agricultural waste. Interplant genetically engineers plants, making them able to communicate with farmers.
So as the plant is reacting to the stresses in their environment, like fungal pressure, insects, or nitrogen deficiency,
That's
will start to
crazy.
signal, and then we can help farmers understand what areas of the field need something.
Interplant's technology uses fluorescence, so the plant's leaves emit a signal when in distress. That signal is detectable by devices that can be attached to satellites, drones, or tractors. Farmers then know what to treat and don't waste money on chemicals, which are up to 30% over.
Wow, that's really cool.
We want to eliminate all the unnecessary applications of chemicals into our food system, into our soils, and also the additional cost that comes to farmers that they don't get any benefit from.
This
I'd like to see what it
plant-by-plant
looks like.
technology is highly scalable and could be licensed to major seed companies. That royalty revenue would come back to Interplant, which makes it enticing to investors.
If you can get this technology into every single corn seed or soybean seed across North America and maybe even South America, that is many hundred millions of acres. And you can think about, you know, a few dollars per acre, and that all of a sudden ends up in a lot of revenue for this business.
In addition to Bison Ventures, Interplant is backed by John Deere, MS&AD, UpWest, and B Partners. Total funding so far, $22.3 million. Interplant is now working closely with small farmers as well as some of the nation's top agriculture producers. Some have paid early access to to get the technology, which will start with soybeans and then expand to other crops. Back to you guys.
Well, it sounds like technology that would come in handy for me with houseplants. I'm just curious then, what's the opportunity with these fluorescents? And does it go into the seed itself?
So,
or it's
like,
part of the plant.
Hold on, I
once
want to listen to
they're-
this real quick.
It's
beyond
the seed. Yeah, it's actually a genetically engineered seed. So it gets into the seed, and then the seed are then sold to the farmers. The farmers plant it. It becomes a plant, and it emits the signal. But it actually just has tremendous potential beyond just the farmers. It could be to the agricultural large producers as well as to the food producers who are themselves agriculture producers.
Diana, thank you.
All right, ahead in power lunch, bracing for a ban. The House voting in favor to
Brody,
potentially
good job though for
TikTok
closing it. What up, baby? That was a little weird, but Trump fan club. What up, bro? Close shorts took a loss. Now bull holding till 26 April. Big results coming. Boeing, Meta. Exactly, man. I'm right there with you. I would I mean, unless you're saying that that was a position that you had on today, I mean, I get it. But, you know, I just, you never know. Like, some people just, kind of, listen, and I've said this when it started, was like, these bear markets can be tough because what happens is you pay up for premium, or if you're just shorting it, but more so options traders, they lose money because they just can't handle the volatility and the fact that they're paying more in premium. It causes them to go red, and then it just, you just have to know what you're doing. But that's good, man. You're I'm doing the same thing. I think, like, especially like, let's just say like right here with Amazon, I'm gonna look for a pullback like really soon. And where's this? Let's see here. Where's this? Is that 50-day still there? I'm going to look for another bounce back to this 50-day here. Not saying that it's going to be Amazon that's going to be my choice. Like, look at the volume that Amazon has here on this bounce back. It's barely back green on the day. Unlike, the overall market. So, look, the overall markets are ripping and roaring because, look here. You rarely see this. Everything is green. Well, except gold. Like energy on top of tech, you rarely see that. And utilities, everything is green. Energy's kind of like, yes, it's green, but it looks like it's trying to pull back. So I think that's why you're seeing this huge rip. So just understand what's going on underneath for anybody else that's listening, not just, Trump. Just know that. Just know that and understand it. You're getting this big rally because, energy is also helping you out to the upside, which is pretty crazy. But we'll see here, man. We're going to, again, last week, so for the past 2 weeks, and if you weren't with us this morning, like this morning I called out Goldman Sachs. That was the stock that I was wanting to look at for a few different reasons. And it performed really well today. It's still up, making an all-time high. My target was 414. My target was 414. I never really got the pullback that I wanted to, which was down here at 407 to get that entry. But you could have got it off the bell. All right, we could have got this off the belt. We have our guy here, and I wasn't watching it because of AMC. Once somebody in the chat called out AMC, I was watching that just to see if we could get, because the markets were pulling back, and I'm like, all right, let me look for something that's like doing something that the market isn't, and it was up 3-4% for AMC, and I just was waiting to see if I could get a little bit of a rally or put on some type of exposure there with AMC, and apparently that messed me up. So let's Rick Santelli, I think, is on right now.
And it doesn't look like it's letting up. However, if you look at a year-to-date chart, on the 16th, we settled at 467. That is the high yield close, not only of the year, but going all the way back to November. But I do underscore that that is a very significant technical resistance level on a closing basis, and we need to monitor that. That could be the last big area of resistance until we test potentially 5%. And if you consider that on the 16th, we also did something else when we had that high yield close. We moved towards 218 basis points higher in yield than a 10-year European bond. That is the widest in 4.5
For anybody wondering, I am watching 505 to see if we kind of put in like a light rejection, a pullback at 505 on the SPY. We are coming up to that double top gap that is here at like I can't see it, but it's at like 502 area, and we're coming up on it now. So we'll see what happens. I'm still eating cracker, so just give me 1 second. I don't want to just chew and stuff on the mic.
Attention options in a way they have never done before. Contessa, back to you.
Mr. Santelli, thank you very much. Let's get to Seema Modi now for a CNBC News update. Seema.
Contessa, the U.S. is reportedly considering giving legal status to immigrant spouses of U.S. citizens who are in the country illegally. Officials telling the Wall Street Journal an announcement of such a program is not imminent, but say the White House is discussing potentially timing it before the election. Immigration advocates say there are an estimated 1.1 million undocumented immigrants married to U.S. citizens. Donald Trump's lawyers reaching an agreement today with the New York Attorney General in his civil fraud case. The deal will allow the former president's $175 million bond to stand. Trump had to post the bond to appeal a more than $454 million fraud judgment against him. The AG had raised concerns about the bond's security, but the agreement today introduces some stipulations, including requiring the collateral to remain in cash. And Delta announcing pay raises today for tens of thousands of non-union employees. The airline is boosting its starting pay to $19 an hour and will raise wages by about 5% for flight attendants and ground workers. This as the union does attempt to organize flight attendants. But for now, we'll see if this works. Contessa?
Seema, thank you for the update there. Coming up, social discourse and the C-suite. America's CEOs increasingly are getting caught up in hot-button political issues, and often it costs the companies big time. Think personal security.
I'm going to be watching and looking if we do get a reversal. I'm going to try and I have never really played SPXL. I'm going to be looking for this. You know, like if we get some downside, maybe grab some puts on it. And like a low position size, low risk, or I shouldn't say low risk, but, you know, kind of like high risk, high reward, I guess you could say. But low position size, high risk. And that's what these are meant for. For anybody that doesn't know, like, you know, your triple leveraged, double leveraged stuff is to allow you to have a position on or a hedge. And you don't necessarily have to lose on your hedge. But, you know, it allows you to, let's just say, like, maybe you're long, and you take maybe a quarter of that, and you put it on the upside, or for the short side. And that should help allow you to use less of a position size than your other hedge, than the other side of your hedge, and still be able to, you know, put out less money for the same position. If that makes sense. One more cracker and I'm done. So, did you guys have a good weekend? Where are you guys tuning in from? Did you have a good weekend? And where are you tuning in from? Let's go over some earnings. Let's go over here. What do you guys? And if you guys want me to put something in the ticker box or anything you guys want to watch, you guys just let me know. I'll throw it in there. Yeah, AMC struggling up here. But I think this is going to take time. I think it'll work, but it's going to take a little time. That's crazy. Well, we rally 6-7 points. We are running and gunning for that 50-day, man. That's crazy. We are headed right for it. You know, I didn't think we would get here today, but my target today was 500. That's where I was looking to get to, and we surpassed that. So today, depending on where we're at today, guys, I will look for a pullback intraday, maybe tomorrow, or if we can just continue. Again, look, volatility is going to be ripping and roaring in these type of markets. You're going to get like longer than expected bounce backs and longer than expected drawdowns. So don't get hurt. Don't get hurt. All right. For anybody, because here's the thing is you don't get much opportunity. This is a really nice inverse head and shoulders. If anybody ever wants to know what a decent pattern looks like, the only thing I would take away from this is maybe you could have used a little bit more volume on the buy side, but look at that. That is what you call an inverse head and shoulders on an intraday chart. That right shoulder is a little messed up, but then it breaks out, pulls back, boom. So, you know, I know a lot of times people throw out tickers and you're looking at it, you're like, no, I don't see it. I mean, I see what you see, but it's just, you know, one shoulder's like way bigger than the head, and you guys know what I'm talking about. Anyway, brutal though, man. This was, you know, at least we were able to call out Goldman Sachs, and I said it this morning that I can't enter and exit these for anybody, but that was one of the top names on the list, and we had a few more. CRM I was going over, but Meta and Goldman Sachs. Goldman Sachs would have been a really nice winner for people today. Our target was 414, and you got well above that. So we'll see what happens next. I did like this. So everything about Goldman Sachs that I liked was that this was one of the only earnings that we had where it got rewarded, right? And we were on this before the earnings on this consolidation breakout here on the second day. You had the gap and go, and we were on this, right? This was a call out this day. We were on this. Somebody in the chat took it. And then you come into the earnings and it has a gap up, and then it pulls back off of the gap up, but that's only to pull back and retest this prior level, and pulls back again a second day, and then boom. And you notice how it's still up at highs when the overall market on a daily chart would have been, you know, below the 100-day. It never got below its 50-day. Well, it did. I'm sorry. It did prior to the earnings, right? And then here you go. So I would look for this thing to honestly try to make new highs. You know, I would look for the pullback to 410 first. Maybe even you get a pullback to 407, but 410. So just keep it on your radar. It has some nice volume. Like, look at this breakout day here. If you look at the SPY, you're going to not really see these type of candles, or, you know, that type of volume to the buy side. So this was a good one. This was one of the top ones on my list to go long, right? This was a particular long stock that I mentioned because we noticed that also the Dow was, you know, kind of like flattening out with a little base, and it was just doing a little bit better than tech. Tonight, I'll probably do a watch list tonight, but I will be this afternoon working on what I'm going to look at this week, because I kind of wanted to see how we traded today and what type of news that we got or didn't get before I made my decision on what I was, you know, how I was going to take on this week. I really like that. I really like that we were able to, you know, get up on our feet, and because we just could not make nothing hold. And I thought we were starting to get that again today. You know, at least in the S&Ps and the overall markets are concerned, that it started off ugly. You know, coming in with a little bit of a gap up and just struggling up at pre-market highs. And then it just rolls over. And then I'm not sure what happened, if there was any news, but I will say you really didn't get any decent volume up until a little while ago at 130 or what is that, 150 or so. That's a nice volume breakout there. And look at that mean rejection there. Let's see. And that's just coming from the 1 hour chart. So overall, I would not fight this until again, my target for this is going to be up there at the 50-day moving average. And 505 and the 50-day moving average. You could come in with a gap up and then pull it back. That's why I'm not just going to try and get cute and short. Damn, I should have just got short up there. Look at that, right at the level too. Damn it. Look, here's what I'm going to look for, and I'm going to try and do this today. Maybe I'll use SPXL. I might just trade the SPY. Fudge it. This level here, see, it's not going to give it to us. This is showing you how weak we still are. Hold on. See, I don't like doing this because you're fighting the trend. Let's see if we can get a bounce back to like 501, like back to the trade line, right? See if you can get a bounce back to 501.75. Yeah, 501.75, and see if we can still get the rejection there. That's what I'm going to be looking for. I'm going to sit here and watch the SPY. Actually, what I need to do is go ahead and look at the IWM and the Dow to see if they are pulling back to give us kind of a heads up, which I'm sure they are, but as far as the continuation, and the continuation should be in the Qs. Let's see. So the Qs are actually holding that pullback there at 420. That's ironic, isn't it? 420 is the number. We just got past 420 in real life. IRL. So there's the Dow. So the Dow, or not the Dow, but the IWM is below this pivot low here on that first pullback. Let's see. Where's the Dow? Damn, the Dow is just a beast. Look, it's past Friday, Thursday. It's... Okay, so that's a gap fill for the Dow. So the Dow just filled its gap. Now what I'm thinking about is a reversal back to VWAP. That's really what this trade idea is based off of, is a pullback to you know, just a mean reversion type of trade. You have some nice volume there, poking its head out on the sell side. And that's why I use the 1 minute. I want to see kind of what's going on underneath, because, you know, I can't always just be watching each candle, especially when I eat as many crackers as I do. Not crackers, but crackers with cheese. It's the cheese that gets me. What did everybody do this weekend? Did you guys watch the fight? What were your thoughts on it? I know I tried to bring it up a little while ago or earlier today, but I think Tank should man up. He's probably not going to, just for his, you know, and I get it. He's, you know, he's wanting to do whatever he can do as a fighter to protect his record, right? Again, anything in a fight, it can just, even if you're the best fighter, one wrong move in a fight and you're done. Like, just anything can happen. So I get it, but I still think they need to put that stuff to the side and break some bread together, win or lose. There probably will be a second round because he's already beat him once, or a third fight, right? Give the people what they want, and let's see another fight. You know, I think even if Tank wins again, like I think he should do it without a clause. And, you know, again, I'm going to say that hydration clause with the liver shot will equal a win just about every other time. Especially if you're good and know what you're doing, man. That playbook is a hitter. That's a playbook for success. Hydration clause with the liver shot. put him out quick. But yeah, I think that would be cool. I doubt it'll happen though. I don't think Tank will fight him without that. He might say he will, but he cares about his records because Tank's not stupid and he knows anything can happen. He could, Ryan Garcia's probably got, from what I've seen, he's got a bigger length and stuff on him, but, and that's what I mean. He's got the length on him, but Gervonta can handle his own and get up inside and just chop him down, so. And if you guys didn't watch the fight, you notice how Garcia started to use his left hand, the left, whatchamacallit, and kind of guide the fighter to hit with the right. Like you've seen it with Gervonta where he puts his hand up and then boom, like kind of, I don't know. It's not really like you're putting the person where you want, but, I noticed Garcia's starting to do that. And, I did watch the and I'm going to get off of this and go back to the markets, but I watched the post fight. I watched the weigh-ins, and the weigh-ins, all you heard, what's his name, the promoter from the older guy that does the promoting that box with Mayweather and stuff. I just forget his name right now. De La Hoya, I think is his name. He kept talking about how he was hinting to how good of a promoter he was going into the fight. Like how it was all fake and stuff like that. And I kind of thought so too. It's kind of obvious. You act crazy going and you have a fight coming out and you're all over the place between Happy Dad and Steve Will Do It to Raw Talk and stuff. And you're all over the place and you're acting crazy. You could have seen it from a mile away. You could have seen it from a mile away, but it really got brought to the light. If you watched the weigh-ins, you would have saw that Oscar De La Hoya was really just y'all are fucking crazy. Because they were talking just like Ryan had no chance. Oh, he's bad, he's crazy, he come in overweight. You guys never know, behind the scenes, he may not have just been able to get down there. He probably got as far as his body would, and it just... You have so much muscle and mass on you. There's just only so much you can do as far as weight loss. You can try to take your dump and just flush your whole stuff out, but it comes to a point that you can only lose so much weight. And I know they're it's only, 3 pounds is a good amount when you've already lost X amount, right? And it probably was just it was probably just, that is what it is. That's, he's... You could see how much taller he was, right? For him to get down to 143, how much taller he was and whatnot, than the fighter. I mean, you could say that's no excuse. You're absolutely right, but I think it was a good fight from both fighters, and I think Ryan also could have lost just as easily as Devin did. Again, fighting one wrong move, man. It just anything can happen. You can get injured, right? You can get injured without even getting hit or something, and you kind of just something crazy, So that's the thing with fighting. And I didn't put on money on Ryan Garcia. I didn't put money on the fight at all. Because I had a feeling that it would not surprise me. I thought Ryan had a good chance, but I was worried about his the determination and the heart to stay in the fight. And I was scared that if something just went wrong, he would sit and kneel down like he did in the Tank fight. And it's not like he's just doing it because he can't handle it. I mean, a shot to the liver, especially on a hydration clause, that shit you just done. You are. Your body is going to give up on you. And he fought and he was with it, and I didn't have enough time to put the money in to, I wasn't confident that I could trust him, even though I knew, what he had gone through in the past with Tank and the hydration clause. I knew he didn't just give up, but it was, I kind of wish I did plus 500. You would have got 5 times your money, so But I didn't do it. It is what it is. Let's just see if Tank will step up to the plate and, kind of, bring boxing back and stop with all the bullshit. Maybe saying that he needs to make a certain weight. I could see that because he does have such a distance on him. But yeah, so let's go through here. Let's go see what some of our movers are today. Your midday movers, even though it's already 3 o'clock, coming on 3 o'clock. Let's see here. And man, it's just a crazy time to be alive. Let's talk about, like, Dubai flooding, Drake, and this whole rap stuff going on. That also feels like now you have a whole bunch of unnecessary stuff going on with other people hopping in on it, but it kind of feels like I don't know. They're going back to the old ways of rap where you got some beef and you never know if that stuff's planned out, but we'll see. The way they talking about each other, I think it's more so Kendrick than anything else. But so Amazon ends drone program in California as it eyes Arizona launch later this year. Yep, moving out of those states. It's too regulation too much in those states. What investors should know about the UAW's organization, Drive VW. Private doctor, wealthy at $40,000 a year. Delta gives another 5% raise. What? Starting wages to 19. Oh, okay, never mind. Let's see here. Biggest moves midday. Tesla, still the same things. Paramount's been kind of climbing. Tomorrow the stream, I would like. I'm gonna shoot to start the stream around like 6:45, 7 o'clock, just so anybody that here knows and would like to join us and get a game plan together in the morning. Oh shit, regional Zion Bancorp. I wanted to look at that too. I looked at it earlier, but yeah, I'm gonna start the stream early tomorrow. Again, today I just wanted to see how we did today. I'm just upset with myself that I didn't throw on Goldman Sachs, man. That would have been a big hitter today. It just sucks even more so that like nobody out in the public got it. Like that was the top watch today was Goldman Sachs. So Zion Bancorp Regional, that thing getting a nice bounce today. So those earnings were taken pretty well. I ended up putting on a pretty much like a small bet on PNC. And unfortunately, that bet lost. And then here it is rebounding right back to highs off of the earnings.
Compromised credentials to break into remote access app. That's from the Wall Street Journal. That's UNH United Health.
Huh? Let's see here. I wonder, also with TikTok, keep an eye on like Oracle outside of like Snapchat, Meta. Snapchat and them have earnings this week too. So let's go over them, see what earnings we have today. And kind of, so tonight, AGNC, Cleveland Cliff. You could probably play US Steel with that. Globe Life, Cadence, Nucor, SAP. Got that SAP RIA. AMP. Let's see here. So not really much today. MedPace. Crane. Okay, cool. So tomorrow we have Invesco, GE, Halliburton, Nextera, Spotify. Spotify is a fun one. We're gonna get a good look into the shipping, not necessarily the shipping industry, but you have UPS, big earnings, big earnings. That's what she said. GM, Lockheed Martin, Freeport McMoran, Raytheon, JetBlue, UPS, PepsiCo. I don't know what PM is. What is this? Philip Morris. That's right. Spotify, Nextera Energy. I already said Halliburton, GE, Invesco. Whatever that is. Poultry Group. Berkeley, Kimberly Clark, and Quest Dynamics, MSCI. Man, we got a lot. So I am still waiting. We never got Visa, did we? When does Visa come out? I'm really wanting to hear from Visa. Let's see. Let's go over this. And again, if anybody has questions or something they want to look at or chart, talk about anything, please, don't be scared. 423. So, wait, tomorrow? Why is it... Bro, Wall Street Bets sucks with their earnings. Okay, never mind. They do have it here. Okay, I just didn't get there. Okay, cool. So, really, it's looking like it's coming down to Wednesday, Thursday, and Friday as usual. Right? On when the real move's going to be in. We still have GDP, durable goods, initial jobless claims, PCE on Friday. You're going to get a look into how consumers are doing with Visa. I'm really excited about Visa. Also, Enphase. And I don't think we have any before this, but the solar names. There's a big thing going on with China and their manufacturing of solar, between batteries, solar panels, and stuff like that. Which has been an issue for names like FSLR for solar. FSLR. I've been wanting to watch Datadog too. There's like a lot. So I'm going to go over tonight. I'm going to do a huge watch list, and this watch list is going to cover a lot between solar names, cybersecurity, tech, like mid-cap tech, large-cap tech, mega-cap tech, and kind of just like find the best setups, because I feel like this week is still a big week, and we're going to have some volatility, and I want to be prepared. So I as far as good afternoon, how you doing? As far as and also being prepared for earnings. So I'm excited for this week. I really am. So come prepared. What is this? FSLR. Looks like you have a nice little rejection here. If you can't get above that. These actually look like they've been performing better than the market. I will say that. Look at that. Look how you can see last week you had a few days to the downside, but oh shit, look at that bear flag. That's a really nasty bear flag there. Let me see. See, like CNBC saying right now, with the wreckage in tech, and bro, have you seen the market there? It's rebounded. Okay, there they go. Now he's saying it. All right.
A Politico reporter says Biden administration is preparing a larger than normal package of military aid for Ukraine that will include Bradley fighting vehicles in addition to urgently needed.
The Bradleys. It's not a tank. For anybody that knows anything about that, is the Bradley a tank or is it not a tank? That's funny. I wasn't in the service. I did try. I had open heart surgery, so it's kind of like taken from me, but it's all good. 180. Dude. 430. So you have earnings also? Like everybody and their mother has earnings this week. What the heck? 5-1. 22. 3. Does anybody here know if we have a 30 or a 31? Do we have 31 days this month? I mean, I could always go look at... Here, let me look at my calendar. Let's see. Let me do this. We'll go through some charts.
Steady, and that's really of late. You take a look at the 10-year, 462.
The all-important PCE report coming out on Friday, and that's looming especially large given the backup in interest rates. It does take us to our talk of the tape. Where is the next move for stocks likely to be after that tumultuous end to the week?
I'm thinking
Let's
about
ask
getting
Gabriela
short
Santos,
FSLR,
Chief
guys.
Market strategist for JP Morgan
I really
Asset
am.
Management, with me here at Post 9. Welcome back.
Thank you.
All right. What do you
really
think about
think I
this
wanna get
market?
short
Because last
this
week
meme.
was kind of rough, especially the way it ended. Now we have a nice move here into the last hour. You think the worst is behind us?
I think there are two separate things going on. The first was the initial macro-driven kind of correction that we saw in stocks that affected a multitude of sectors related to interest rate volatility, related to inflation expectations overshooting, related to the move higher in oil and the dollar. I think early signs that that one's run its course. If you just look at Fed rate expectations for this year, quite hawkish at this point. And if you look at the performance of the equal weight on Friday, doing a lot better. So that we have more comfort has run quite a long way. But I think this week it's game time for the second bit of the story, which is much more around mega cap technology related to earnings and initial signs that, you know what, great's just not good enough given valuations, positioning, and sentiment. And this week will be a key week for that.
You think this was a comeuppance of sorts for the higher for longer idea? Because the market kind of brushed that off for a while. The bond market kind of got there, and stocks have taken a little bit. Is that in part what this is?
I think it's all about the interest rate volatility, because what was interesting is the first quarter yields moved higher, but interest rate volatility actually fell to the lowest since before the Fed started raising rates. And then it just became a positive growth story and perhaps a high for longer, which is okay, can be absorbed by stocks. What changed in April was all of a sudden you had a shoot
just
up
looking
in
at
interest
this
rate
real quick,
volatility,
'cause I'm really
and you actually
curious.
brought back the higher for longer discussion because it became much more about inflation and, oh my goodness, do we need to price in a chance that we go back to actually speaking about rate hikes? And that last bit we
might
think
have
is
a little bit
overdone.
more room to the
The
upside
bar
for
is
these
quite
institutions.
high here to actually
Okay.
reintroduce hikes, and we heard
Thank
that from
you.
Chair Powell, and we expect interest rate vol to calm down from here.
What do you think about valuation overall, the market? If valuation was justified before, an elevated valuation like 20 times, right? If not a little bit higher than that, justified on the idea
How
of good earnings
is
growth,
Yode
good economy,
going?
and rates are going to be coming down. So can we have our cake and eat it too? If now we've pushed out rate cuts, if rates are going to remain higher for longer, can we justify the multiple of the market relative to even earnings growth expectations now coming down? How do we square all that?
Yeah, and I think in the short term, you're really seeing multiple contraction. That's really but what's happening here in April. You've had a decline of 6% in the multiple at the same time that earnings have hung in there. And that's just to account for some of these more uncertainties we talked about. But I think if we zoom out, once we have a recovery after what we think is a temporary correction, then yes, I do think valuations can stay elevated as long as it's still a story about a soft landing and high for longer, but not rate hikes coming back and then hard landing fears. But that's where, Scott, really it's beneath the surface in the market. And to us, the major story is the eventual decrease as the year goes on of the earnings growth alpha of Mag 7 versus the rest of the market. And then it becomes not just about a hope of broadening out, but a reality which meets earnings recovery plus more discounted valuation.
Is that
Yeah,
kind
that
of
is
what's going
cool.
on now in some
Pretty
sense
nice.
too? A rotation really away from mega cap tech and away from tech in general to some of these other areas. I mentioned financials at one point today were outperforming by a lot. Now the rest of the market's caught up because every sector in the S&P is now green, and it is no longer the financials the best sector on this day. It turns out that it's technology, so you have those dip buyers coming in.
Absolutely. I think for those that had missed out on the rally last year for the Mag 7 or for the S&P 500 overall and were bemoaning that we were back at all-time highs, this is another bite of the apple here to buy into some of these themes. But I think what's more long-lasting here is the dispersion within a group like the Magnificent Seven. Very clearly, you have a lot more dispersion. Not every group is up double digits. You have some down double digits. And we can't forget the importance of thinking through these as very specific individual companies, and what weight should they have? And we're not really bought into this idea that it just goes up and to the right and that it's the new defensive. I think if you're looking for defense, it's in your traditional defensive sectors like utilities, which really did quite well last week.
It's funny you say that because, you know, sort of the proof is in the pudding in that those stocks have been used as a defensive play. They've been used as offense, too. Are you suggesting that it's just no longer going to be the case that you're going to play defense in the largest tech stocks in the market? Because people have been doing that for a while now, actually.
So I think if you just look at the quality of these mega cap tech companies, they've got a lot of cash. Certainly, they have very high quality earnings. That all suggests, of course, a continuation of elevated multiples in these companies and that they serve a certain role of defense in the portfolio. I just think you can't look to them to be a hedge for risk aversion driven by geopolitics, by a spike in oil, a price in the dollar. For that, you really need to rely on traditional defensives. And that really proved its mettle last week, especially when you have some questions around earnings for this big block, which is the case this week again.
As long as as long as interest rates remain elevated, you mentioned utilities. Now, rates have pretty much remained stable for the last couple of weeks. It's not like there's been a lot of volatility in the bond market. Can utilities work in a higher for longer world? Can staples for...
Like, I don't know if there's anybody here or not, but I will say this. Just so you all know, I did not hit y'all with ads or anything. That's funny. That's real funny. I'm not saying that, you know, you guys got one, but just saying, that's all. Just saying. Okay, let's see here. Let me turn this on. Sorry, guys. I know I was stuck on that.
Clients,
but I am thinking about if we do get weakness.
One or two sectors or companies.
Look
as
for a
your
pullback right back to VWAP
really
at
need to broaden that out.
At 175 here on FSLR. All right, it's not really moving, but I feel like this is a lower high. Look for the bounce back there. Maybe get a little extension. Look, let me show you guys. I'll show you guys what I mean. Get a little extension. You know, it would go up above the 90 MA there, but yeah, I want to look for more downside here. I do. Let's see if the market tries to pull it back a little bit. And I want to see if we can get a little pullback.
Have yet another.
I don't think this is a trade right now because it just doesn't have
those
volume.
Stocks went
There's
too
no
far,
news.
too fast. The
But
multiples
I'm gonna keep
expanded
it on
by
watch.
too much, and now we're going to have even more of a give back than we thought.
So I think Microsoft may be in that camp, but I think Alphabet is in a different camp. Alphabet sold off over 10%, I think, the last time they reported, and even the time before that. So they've had 2 quarters in a row where the stock sold off on earnings.
AMC is
but
still just
afterwards,
hanging
there were
out.
people who came back and purchased the stock, and the
Not
stock
moving.
has actually reached new highs
a good
after
sign.
that. So it really depends on...
You want these things to consolidate up here and hang out, and then you just get blast off. You get a big gap up, get some people to take profit, or you know, on their shorts, and then it just becomes a you know, it just becomes a you know, a nightmare for market makers. But I mentioned this morning. People have to understand that, you know, if you don't buy out like decently out of the money calls, you're only going to get so much, you know, as far as a gamma squeeze, referring to market makers, and what ultimately would be a short squeeze. And I don't know how many shares are shorted. I don't know what the float is. I think it's pretty big. That's what she said. But let's go see what Cameron's up to here.
The weakness in tech actually signal a trend change for that sector. Yes, other sectors might do better, but for the cap-weighted S&P 500, it is all important.
We need rate cuts Gabriella, this year? What happens, like, let's just say we don't get any. Are we okay with that?
That's so
I think
weird.
it would be
okay,
nice
I was
to
going
get
to
one
say, or
in the
not.
sense of actually starting a
I was gonna say,
normalization
why
of
aren't they at
interest
the
rate cycle.
NYSE?
I think we're okay if it's not June or July, maybe it's September, December, but I think if you don't want to see financial conditions really tighten and get the conversation about a
they're
hard
going
landing
to.
to really come back to
Or-
the forefront, it would be quite
They
important
should,
to
they're
get
at
one in
lows.
this year, and then of course continue next year and the year after to normalize those interest rates.
we go.
Otherwise, also real rates
That's the
just
chart
start
right
expanding
there
and start
that she's talking
restricting
about,
the
right there.
economy too much as inflation comes down.
Which is why
This
the
is your
biggest
guiding
event
light,
of the
at
week
least my guiding
might
light.
not be until Friday
This
when
and-
PCE comes out. And I know the mega cap earnings reports are
Fed's balance
important,
sheet.
but given where the rate conversation and the inflation conversation and the most
liquidity and
recent
money for
reads on
markets.
CPI have been, this looms large.
Absolutely.
This
The
looms
PCE
large.
is the
That's what
Fed's
she
preferred
said.
measure of inflation, and so
Okay,
what
Turkey,
that
come
comes
on.
out to be will
I'll be
definitely
right back,
impact
guys. Let me go
markets.
feed
But
my
we
cat.
also get GDP reports on Thursday, and we get the University of Michigan numbers on Friday as well. And so when we see inflation expectations continuing to rise, I think that could be a bigger problem for the Fed.
Cameron, how do you see this PCE report on Friday? And I'll ask you the same question because it ties together. The idea of whether this market, quote unquote, needs rate cuts.
The market doesn't need rate cuts if growth remains strong, meaning that we think the thing that has underpinned this rally has been the fact that GDP estimates keep going up. If the Fed is cutting for the wrong reasons because we're starting to cut GDP estimates, then rate cuts might not actually be a good thing for this market. Now, when it comes to the PCE, of course, hot data would likely push yields higher, and it would likely cement the Fed talking rather hawkish next week at the meeting. So the PCE remains incredibly important. We're watching the 2-year Treasury very closely as it keeps bumping up against that 5%. Hot PCE, maybe we do break above it.
So Cameron says, Gabrielle, you know, GDP estimates keep going up. The problem is that earnings growth estimates for this current quarter keep coming down. Is that an issue?
It's totally normal as we start the year to see, especially the first few quarters get revised down.
I know, but from like 10% down to 2, maybe 3 if we're lucky.
And what's interesting to see is actually that the very specific issues with 2 healthcare companies brought down the first quarter estimate from what was 5% to basically flat. So I think we can look through some of this in the first quarter. What I really hope we get this week is really a kind of a reorientation of this narrative ping pong that we're in here between hard landing, Goldilocks, no landing. Look, hold on, it's neither of the 3.
Good luck with that.
It's a downshift in GDP
What else are we going to talk about?
It's a downshift of GDP to 2. It's the PCE comfortably below 3, which is a perfectly good environment. It's neither too cold nor too hot, and it can leave room for the Fed to start normalizing slowly.
We started also, to get into this poor trend, I would think, of pretty decent earnings and pretty bad stock reaction. We can't afford that anymore.
Absolutely. You know, we don't want the Googles to be down, 10% plus on their earnings, but expectations have gotten high. And so having this pullback in the market ahead of these tech earnings is actually a good thing. You flush out some of that bad sentiment, and hopefully you get a little bit short-term recovery when they do report better than expected earnings.
Yeah, how would you address that same issue, Cameron, about the price action after decent earnings report was sort of an ominous sign that something bad was about to happen?
That's exactly right. When stocks don't go up on good news, it usually is a sign that there is a sea change in risk appetite. But of course, having a little bit of a lower bar, being oversold into this earnings season does help. But we do think that there is this big pain trade happening within sector positioning, meaning that the sectors that are doing better after the last couple of weeks are the places where you've seen a lot of outflows, financials, industrials, materials, whereas tech has been very crowded, which even though there is a slight lower bar, we'd say, with high valuations and crowded positioning, that's why we likely are seeing these negative reactions, meaning good is just not good enough.
Maybe, Cameron, it's good too that NVIDIA is going through what it's going through. Now, it's had a nice 5% bounce back today, but as I said, it was like 13.5% last week that stock bled off. Now, we're going to have to wait a month for the earnings report, right? It's May 22nd, literally a month. That's a long period of time. Maybe a good thing, though, that this stock is having a little bit of a pullback, or in fact a major one, now rather than just continuing to amp up into a number?
Yeah, I think that's exactly right. Trees don't grow to the sky, and neither do semiconductors, which just means that we move very, very far, very fast, got extended above trend for NVIDIA and the rest of the semiconductor space. We don't think that the upcycle in semis is over. We still have overall sales being below the prior peak in 21, but it's likely that we are pulling back in an uptrend, which just means as you start to test support, whether it's your 100-day or 200-day moving average, that likely could be an opportunity to add to this space where you're still in a cyclical upswing. So digestion is good and healthy even for the hottest parts of the market.
The other thing, Gabrielle, is, you know, for the first time in a while, we've reintroduced the alternative to stocks idea. Cash and things like that. If you're going to be getting 5%, here we go again on, you know, reasons to not take so much risk into equities when you can just stay safe in cash or, you know, bonds of some kind.
Exactly. And I think for 10, 15 years there, we got used to this knee jerk of overweighting stocks, whether it was individual investors or pension funds, endowments. They had to take on so much more risk because you had such low interest rates. And now that's
guys, watch how we close today. If we get a decent sell-off, it looks like the SPY is sitting here at this 50-day. Take notice to how we close. I think it's going to be a little bit of insight into tomorrow.
more of a small overweight to equities and where it's worth it, right? So it brings back kind of investing basics that we forgot, like valuations and quality and position sizing.
What about that, Cameron? Outside of equities, plays that make sense right now through whatever credit you think is best right now?
Yeah, we do still think that we have to be very, very selective within credit, meaning that you saw credit spreads tighten so much year to date, mostly in the high yield space, not necessarily pricing in the potential risk for either weaker economic growth or a lot of increased supply of credit as companies have to refinance, mostly going into 2025. So we are finding opportunities as yields have moved back higher to be able to lock in higher yields. But again, we have to be very, very selective within high yield credit simply because you have had those spreads come in so very much.
We will leave it there. That was fun. I appreciate it. Cameron, thank you. Aya, thanks to you as well for being here. Gary, we'll see you soon. All right, let's send it to Christina Partsinevelos now for a look at the biggest names moving into the close. Christina.
Thank you, Scott. Tesla trimming prices by up to $2,000 on the Model 3, the Model Y in markets like US, China, Germany. All of this just this past weekend. And this comes amid competition in China and as a way to drive demand slowed by higher interest rates. The cuts, though, come ahead of earnings out tomorrow. The street is expecting a revenue drop and a big fall in gross margins, shares down 3%. Bitcoin, surprisingly up despite its fourth halving supply cut, which really maintained scarcity. Many expected a fire sale of Bitcoin, but the price jumped almost 3%, just well above $60,000. Bitcoin miners and traders, though, are dealing with this chaos, which has pushed up the price of transaction fees. So crypto platforms like Coinbase and Robinhood are benefiting today. You can see Coinbase up over 6%.
All right, Christina, we'll see you in a little bit. Thank you. Do have a news alert now on United Health. Our Bertha Coombs joining us now with new details on the hack reported earlier this year. Bertha, what do we know?
That's right, Scott. The Wall Street Journal is reporting, citing sources familiar with the investigation, that the hackers who got into the Change Healthcare systems actually got in earlier than the company reported, starting on February 12th. According to the Journal, they got into there through a remote access system that did not have multi-factor authentication. It was not enabled in this particular application, which allowed them to get in. Now, just last week, we did hear United Health say that they are making progress getting the systems all back together. So far, that hack, that cyber attack has cost some $870 million. It could cost up to $1.6 billion, they estimate, this year because of all of the disruption that has resulted. Next week, we will see CEO Andrew Witte up on Capitol Hill testifying before Congress on this cyber attack. But again, the Wall Street Journal reporting that it started earlier than the company said. On February 12th, the company first revealed that it had begun on February 21st. Back over to you.
I appreciate that, Bertha. Thank you, Bertha Coombs. We are just getting started here on Closing Bell. Up next, what's at stake for big tech? Investors awaiting results from Meta and Amazon, Microsoft and Apple. Now, top strategist King Lip breaks out his playbook for what to expect from those names. Got some big ones reporting this week. Also has one big red flag he is seeing in that space. He'll tell us where after the break. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
All right, guys, sorry about that. Let's see what we get towards the end of the day. See if you get a quick pop off this 50-day. You get some triggers to hop in there on the SPY. Sorry about that. Let's see here. See if we can't try to pull something off. I'm not going to go shooting from the hip either, guys. Again, I was being patient today. Winning trades called out so far for the most part all day. Maybe other than Meta. 485. We were looking for 480 on Meta. Let's go look through. So we called out Goldman Sachs. We called out AMD, that range there. Right? We said, hey, look for the pullback in a 147. Long up into the high of day. 150. Play the range. All right, so you're getting a pullback down to 148. I would expect a nice little test of, even though you have tested this area, of 148. See if you get another test of 148. It's just pretty weak. That's a sign of weakness there. Yeah, it is green on the day, but, you know, it is green, but,
All right,
it
stocks
didn't
are
put
ripping
in a
the
new
final
high.
stretch today, rebounding from last week.
We'll put it to you like that. Goldman Sachs, killer trade for anybody that took that. That was our trade of the day, guys. All right, pullbacks right into, gave you guys a stop loss and everything. Stop loss was underneath of, right underneath like Friday's low. I'm pretty sure that's the low of Friday. Kinda. So, you know, the risk to reward was worth it. We said, you know, that 507, 506, 505, wait for that pullback. I was going over stuff pretty quick, not quick, but I was, you know, this whole area is what we were looking at from 506 to 504, right? Stop losses below Friday's low. Even if you got in at 506, that's $2 to make, not $6, $8 to 414 was the target, guys. And you're up at you got 515, 415, 416. Huge trade on Goldman. All right, that was the main watch today. Was Goldman Sachs going up into that area We probably would have played the 410s. Let's go look at those 410 calls, see what they did, just to see how they paid, if they hardly paid. But I can tell you right now, you're $4 or $5 in the money on a Monday. So I'm sure they paid very nicely. Look at that. What a chart. So even if you got in at highs up at $4, you still got 100%. But, you know, that pullback into that area, you were getting them at $2. It went to 8. 4, 6, 8. That's freaking 300% on that trade, guys. Ladies and gents. 300% for anybody that was able to take that. I don't think anybody did. We don't really get many people here. Once again, another day of the analysis just being called out to a T, man. I was watching because of the chat. I had turned over to AMC and was watching that, but no big deal. Man, I'm kicking myself in the ass, man. I'm kicking myself in the butt for win, but I'm not worried about it. I'm not worried about it. I would like someone else to be successful, and be able to, you know, see the analysis and even if you have questions, taking it. I mean, I laid this out and gave you a box for your stop loss. Your stop loss was down at that like 402 area. You wanted to give it a little bit of room. So I think you would have known if you started to close candles down here that you were going to go fill the gap, which was down here at the 50-day moving average and 399.45. Beautiful trade. Beautiful trade. So, and you had a nice pennant here. Look at the pennant that you had here. I don't know why that line's different from the other ones that I had, because there's not pre-market hours on this one that I'm showing you. But if you look at the pre-market hours, you had a beautiful bear flag or bull flag, whatever you want to call it. It was still a pennant. So yeah, you know, I don't know. That was one. You had AMD. I already talked about that. The range. Let's go look at Meta, see what Meta did today, just to see our analysis. So it went down to 474, clear weakness. That was not sure what was going on with that one. So that one, you would have got stopped out. No big deal. 480 was what we were looking for. 485. Watch 485. So you can see here. See how my lines, like, see how 485 is really skinny compared to the thicker line. Like, that's the major, that's the more so major level that I was watching was 480. 480.50. No big deal. I figured you would have gotten like 480 to hold and try to do something with it, but obviously there's some clear weakness there with Meta, so pay attention to that. It's performed really well the past 2 years, so it's not surprising that, you know, you could see people taking profits in front of the earnings. I'm not sure if there's specific news with it. We also mentioned Bitcoin and your miners. That Friday they were performing pretty well on the day. They were some of the reason why, along with regional banks, and that's why I brought up Goldman Sachs and the banks. We called out JP Morgan. JP Morgan was another one. All right, look at that, bang. So, you know, KRE, IWM, and I specifically said this. I said if you're going to play regionals, you could play KRE, but if you play the regionals, watch IWM in accordance to those names, because they had a really good day Friday. They closed, you know, they had a green day Friday because of banks. So we were looking for, you know, I didn't say this, but that would have been a day 2 continuation on regionals, right? And even just banks in general, right? Look at Friday. Look at JP Morgan on Friday. See that? So that's what led me to Goldman Sachs and the Dow. And then looking at JP Morgan for a day 2 continuation. Understanding that I did not forget where the strength was on Friday. And how we ended the week. So this really actually started to turn around Wednesday into Thursday. You know, that's when your bottom was put in. Thursday or Friday. Nice day Friday. And then again today. So, look, maybe we get our little pullback tomorrow. I think you have you don't have much stopping you other than this resistance level up there at 190 on JP Morgan. So if you break above 190, you have a very minor level up here at like 190, 150. And the 20-day is actually going to meet you there as well. So maybe we'll look for a pullback on JP Morgan, a small little like call it a scalp 2-3 hour trade just to make a little bit of cash flow. Once you do get up to this level right here, minor level there, 190, 150, along with the 20-day moving average. It's not there now because as we go up, it should pull it down into it. They should meet right in this area. All right. It may just flatten out too, though. That's the other part to this. It may just flatten out. So, maybe tomorrow. There's a couple different ways you could play this. There still could be a lot of meat on the bone on this. Look for like a small flat day pullback tomorrow and see if you get some more strength with this. Then you would look for the markets to try to climb higher, especially if we could get energy to pull back a little bit, which I doubt. Let's go look at natural gas. Look at Exxon. Just a crazy day today because everything was green, man. Everything. Energy. Look, I was green today. I'm just kidding. I wasn't green today. Gold pulled back. Let's go look at gasoline futures real quick. Gasoline futures are pulling back off of that level. Guys, I called this out a while ago. I usually don't get too crazy with charts like this, but there you go. Back here in February, I said, guys, watch out for a rally in natural gas up to $3. $2.80. I drew the box. Gap fill incoming. Gap fill came. All right. We didn't just do this today. This is something that beginning of the year I said, hey, let's look to see if we can start. Just because you're getting a floor put in there. Like, for anybody that's new, you may not be able to see it, but this, everything that you had forming there, that ascending wedge or descending wedge with relative strength, you had a ton of relative strength here that was telling you upside was coming. All right, it's technical analysis. It's going to be in the book. You'll be able to do this stuff. I'm not one that gets crazy with shit like this, stuff like that, but I mean, you just can't ignore some of the things that were going on here, and it gave it to you. All right, it gave it to you. You still, I don't think you will, but I think I would be surprised. I mean, it wouldn't surprise me, but I'd have to be done that trade. That is a trade that was set up, put it on, and then give it time. You got to the gap fill. I don't know how much more proof that people need that, you know, it's not hard to, it's not that it's not hard because it's difficult, you know, it's just when you make it harder on yourself. I do it. That, you know, it's about probabilities. And, you know, understanding how to read a chart to be able to say, hey, it looks like we got a gap fill incoming here. And this started way back here, guys, when we were watching this. So it took a few months to play out, but it happened. So we'll see what this means for inflation data, PCE and stuff. But the one thing the Fed knows that they can't control is energy and food for the most part. So they look at like outside of food and energy. All right. I want to appreciate you guys. I just want to say thank you guys. Thank you guys for joining. If you guys have any questions, please feel free to ask. Even just a hey, what's up? If you're new here, I want to welcome you. And to just know that, you know, don't be shy, because if you have a question, someone else may have the same question. There are no stupid questions. All right. But again, thank you guys for joining us today. I really appreciated having you all. Hopefully you guys see, you know, day after day. And look, the one thing that I will say about myself is I'm always, for whatever reason, I'm just able to put myself, for the most part, not all the time, but 80% of the time, I'm going to be in the right part of the market. I'm really good at putting myself in the right part of the market for opportunity. And I don't know what it is, but again, Friday, I was short NVIDIA Friday morning. I called it out. It's all live. I even said we could buy both sides of this trade. I almost put out a short showing you guys here at 11 o'clock that NVIDIA still had more room to the downside, and that it wasn't too late with that 15-minute setup. So I hope you guys have a wonderful night. I'm going to turn CNBC back on. I'll be here. I've already missed my reversal because I've been talking. I was looking for a bounce back to try to get short on the SPY or the Qs at least. Yeah, that's over with. So, but yeah, thank you guys. Hit the like button for me. Subscribe if you haven't done so already. 1,000 subscribers. I'm doing a big giveaway, probably bigger than I should do, and I'm thinking about splitting it up between a few people. So, with that said, hope you guys have a great rest of your afternoon. I'm not really going anywhere. I'm going to be here. Maybe we'll see if we can get some more downside or a quick pop, something. I'll let you guys know before I do it, if I do anything. We will have a watch list tonight. I don't know what time. I'm sorry. I can't give you a time just yet because I have some appliances I may be picking up. But other than that, have a great rest of your afternoon. I'll be here. I'm not, like I said, I'm not going nowhere. I just wanted to say thank you. That's all.
Around 5.5% cash yields versus, an earnings yield that's not looking too attractive, and versus corporate bond yields that don't look too attractive. Absolutely, at the face of it, it looks very unattractive. But let's face it, when we look, for example, at things like sentiment and positioning, we just had 3 weeks ago at least a mild sell signal on our shorter term signals. That has all but evaporated. That's all but gone now. So from a sort of technical perspective, at least we can see a bit of a short-term bounce. When we look at the earnings picture, it's the same thing. Look at, for example, S&P 500 earnings expectations. It's expected to drop almost $3 on an index level now in Q1, particularly driven by the cyclical sectors, by things like consumer discretionary, industrials, by things like energy. So it's really also that cyclical pessimism that is still, I think, in those expectations. And all of that, really, that kind of pessimism that is still in the near-term expectations. I think once we see those earnings beats, perhaps already starting this week on the tech side, that really can spur the next leg higher, despite, at the face of it, still these attractive cash yields on the sidelines. So
you think earnings are going to be good enough to justify current market multiples?
Yes, I do think so. It would be different, and I think it is going to be different from Q3 onwards when expectations are much, much higher. Remember, what we're faced with right now is around $53 on S&P earnings in terms of the index levels. That is expected to increase to $63 and $65 in Q3 and Q4, so just in 6-9 months' time. I think that kind of optimism is a little bit too much. That's something that we don't have to deal with now. I think, as long as earnings will be beating that very low bar, as long as guidance does come in a little bit better than expected, or at least in line, that's going to be good. That will be showing, hey, you know what? The growth side, the nominal growth side of things is still fine, and that's ultimately what matters. But in Q3 and Q4, when the bar to beat is going to be much higher, I think that's where then risk assets, and particularly US equities, will start to struggle. But we'll deal with that when we get there. That's not before September, October.
Breadth is pretty good today. Every sector within the S&P is in the green. Now, some are not up quite as much as they were as we entered this final stretch. Are you a believer in the rotation away from tech, or is that still going to be the dominant play? And are we going to be reminded of why starting this week when we get 3 of the biggest names in the market reporting?
So I would
looks like a magnitude 6.1 again with these earthquakes. I'm telling you guys, a couple nights ago, I was laying in bed and we had another one here in the Northeast. It was like a nice tremor. I was literally like, wait, this is not me. And it happened. We were on streaming when that earthquake hit, and I'm like, wait, hold up, guys, I'm moving and I'm like, is it just me? I thought I was going crazy, and I said, no, look at your monitor, it's moving. So that's a decent size earthquake. So wish them well. Prayers out to I guess the Philippines, Taiwan. So that's see if that doesn't edge on a tsunami.
Because what happened in March was,
Hopefully
yes, we had a
hopefully there's no
broadening.
fatalities.
We could use the
Hope
word
everybody
and,
will be okay.
as you did. It was tech and all of these
Play
other
the range.
sectors that did well.
Remember,
it just tech dropped
AMD
back
play
to
the
6th
range.
or
We said look
7th
for
in
that
the
pullback,
pack,
148.
and that was fine. Right now, we
DJ
may be
Khaled,
going through
another
an
one.
where you have had tech upset last week, and there are some who are saying, okay, maybe that trade got way ahead of itself, and then now we're in the midst of what is a rotation to all of these other places, and it's not necessarily going to be an everything rally.
Yeah, I would take the other side of that trade, because let's remember, it comes back to the very first question that we talked about around inflation and about rates, that now, when you look at things like inflation expectations, longer term nominal forwards, even interest rate volatility, all of those things have been picking up, and all of those things have been already weighing on mega cap and on tech stocks. That's already happened. So part of that is at least in the price. Right? Part of that is really at least partially now priced in. So I would say that all we need is really 1 or 2 data points on the inflation or on the wage side that is at least in line, if not a couple of basis points below expectations. And then with lower yields, what we could be seeing again is tech taking the lead again, but actually dragging the rest of the market with it. It won't be, I think in that environment, it won't just be mega cap and tech and the rest will be lagging. I think it will be tech regaining the leadership, but actually dragging the rest of the market upwards with it.
Get a good test this week with those mega cap earnings and, of course, the PCE on Friday. Max, I appreciate your time. Thanks so much. We'll see you soon.
Thank you.
All right, that's Max Kettner. Up next, tracking the biggest movers into the close. Christina Partsinevelos is standing by with that. Christina?
We have an activist investor urging a chip maker to put itself up for sale, and a massive software acquisition falls flat. Those market movers are next.
All right, guys, I'm going to call it a day here. We'll see how we close. I'm going to go kind of get ready again. Just happy that I was able to call out the analysis. You know, spot on analysis. Great job for anybody that took Goldman Sachs long. 414 was the target. You got it. AMD, what do we say? One more time. Play the range. Play the range. All right. JP Morgan. There was a couple more. We never quite got that pullback that we were looking for on Baidu, but 96, it held. That was your break and retest on 96, and it's still grinding higher. But I think outside of that, pretty good day. Let's look at CRM real quick. Not sure what she did. Pulled back. So that actually got taken back. That news on that. All right, I'll see you guys on the watch list later tonight. It's time. We got our we kind of got, you know, a bit of, it's always, I will say this, it's always really good to start off the week with the rally. Monday rallies might end badly, actually. I don't know. I can't remember. I have to go back and look in my binder. But listen, I love all of y'all. Please hit that like button, subscribe,
Let's get back to
and I will see
Partsinevelos
y'all
now
later
for what
tonight.
stock she is watching.
Peace
Christine.
out.
Let's look at silicon carbide producer Wolfspeed jumping after